The mic is muted. So I got to go from the top. Good morning. My name is Sandra, and welcome to my channel From Lack to Legacy. On this channel, we're all things money, investing, mindset, community, cooperative economics, sunshine, rainbows, tea, yoga, woosah, being happy, living a life of ease, all of those things, how to make money on the internet, trading options. So we're a community of beginning traders. So welcome. If this is your first time, come on in. Don't forget, it looks like we got 3 viewers. Don't forget, y'all know the drill. Smash the button. Cost you nothing. Smash the like button. Subscribe, share, all that other good stuff. And let's get ready for a good day. I'm just watching. I don't know what the market holds. Anybody watch the futures market this morning? I didn't. I've been sleepy. Morning, Frank. Morning, Elle. I'm gonna turn the news up just a little.
They beat them all during the course of this year. Yeah, 155 for Verizon, 130 for T, but 170, 80 for T-Mobile. Now, David, T-Mobile is also thinking a lot more about the challenge.
I'm watching on
these guys are all worried about their
Robinhood.
And they have
the price of QQQ.
You're right. All right. We're going to keep an eye on all those shares. Of course, got an opening bell only a few minutes away for you. And that will be followed by an exclusive with Costco CEO Craig Jelinek.
Opening bell about 4 minutes away. How was everybody's weekend? Anybody do anything exciting? I didn't. I didn't do anything. After that Zoom call, I thought I was going to go out. I did nothing. I ordered some Rappi. Ate and went to sleep. Oh, I looked at some stuff, of course. Looked at some option stuff. Okay, QQQ is dipping down. Down low, down low. I think they say the market's going to open low. So let me check this market watch. Let's see. I don't know. Let me share this screen with you guys. So this is what I'm looking at this morning. So does everybody have a stock that they want to trade? Anybody have something in mind today? I think I'm going to trade a little Ford in paper trading, and I should go set those up. I may even back test in Ford, and then, of course, I'll be watching QQQ. Frank, you looking at anything today in particular? QQQ trying to creep up. Anybody trading right at the open? Y'all know I don't like to trade right at the open, but I will watch. I'm waiting today. I'm going to work my strategy, which is I'm going to wait till things settle down and see if QQQ picks a direction today. And I'm paper trading. Welcome, welcome, welcome. Hello, everybody. My name is Sandra, and welcome to my channel From Lack to Legacy. On this channel, we're all things money, investing, mindset, cooperative economics, sharing, community. We're a community of beginning traders, some of us, and some of us are veteran traders. So if you find yourself somewhere on the spectrum, make yourself at home, feel, come on in. Stay with us for a bit. If you have something to contribute to the conversation, please. When I tell you I've been doing this for less than 4 months, But in that 4 months time, I saw the potential, and I wanted to share that with my friends. And so that's what we're doing here. So welcome, 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 everybody. Come on in. We're waiting for the opening bell, which is about a minute away. I'm going to turn the news up and I'm going to get quiet. Hey, Tara, let's see what happens. Okay, y'all, hold tight because there we go.
I think the Fed should play for time because if you're a CEO, you're really hesitant to fire people this week or next week, the holiday week. You do it in January. So I think that these negative pieces are not taking into account that there could be a colon. The weaker go, the stronger gets stronger. Hence Costco today. Strong.
Who is here? Hey, Tara. Hey, everybody. How was your weekend? Hopefully everybody had a great weekend. And I think we're all paper trading today. Lord knows I am. I'm back to paper trading. Oh, yes. I don't know what the week is going to hold. It just looks, pretty tumultuous. So I'm watching for the first, I would imagine the first 30 minutes to an hour. And then I'm going to switch over to paper trading. So is anybody paper trading right out the gate? Me either. I'm just watching. Just trying to see which direction QQQ is going to go today. So I know I'm going to paper trade that, and I'll probably paper trade some Ford because I like that. Did anybody get a chance to practice the placing the order with the stops and the limits? I need to do that. I'm watching QQQ. Y'all know what I'm doing.
One of the things I think it's happened is that I don't know if you know Hester Pierce. She was one of my I do.
And I'm glad my internet connection is straight for today. Because it rained, and you all know whenever it rains, if it rains heavily here, it affects my internet. It's Mexico.
There's any clarity around who, if anyone, should be regulating crypto exchanges. There's nothing in the rulemaking agenda that says we're going to create a registration regime. And then she also says it'd be difficult to regulate. Well, that's all over. Yeah. It's all over. Well, Sherrod Brown, the senator from Ohio, was a guest yesterday with Chuck Todd.
I'm watching QQQ. Okay. Look like it might be a little sell-off here. Or something, I don't know. I'm watching. What are you guys watching today? Or what do you guys want to practice today? I need some practice with that analyze button. For sure.
To get all the different agencies. The agencies so far that have stepped up the most are Gensler at SEC and Russ Bannman at the Commodities Future Trading Commission. That's a more narrow jurisdiction he has, but we want them to do what they need to do at the same time.
Good morning, Ms. Vice. Hey, Tara.
Who knows how that will work? So this is a complicated, unregulated.
Oh, yeah. I know. A lot of us are. Good morning, Marilyn. Marilyn, I owe you the biggest apology. I couldn't get you back into the Zoom quickly enough, but I have the recording. But it's such a big recording, you guys. I got to figure out a way to share that stuff. And I think I may have to put it in a Google Drive or something. But I'll let you guys know how I'm going to share it. So anybody who missed the Zoom, you didn't miss it because we recorded it. So as soon as I figure out a way to share it with everybody, an easy way. I tried to email it yesterday, but it said the file was too big to email. So, I will figure it out. I think again I may have to do like a Google Drive and give everybody access to it or something. I'll figure it out. But we got some questions answered. We got some practice in yesterday on placing orders with stops. So it was pretty good. And we were true to just about an hour, which was good. We were trying to be respectful of everybody's time. So if you missed it, don't worry. We have another one coming up Wednesday. C-Bar has agreed to show us how to do call verticals and put verticals. I think that's what she said. Yes. So that's what we'll be doing Wednesday. I believe it's 6 p.m. Eastern Standard Time. But I'll send the Zoom link out to everyone for that. So if you want the Zoom link for Wednesday, you know, if I don't already have your email, if I already have your email address, you'll automatically get it. If I don't have your email address, please email me at fromlactolegacy@gmail.com. I have to think about it. All of it's from Lack to Legacy. So if I don't already have your email, just email me and I will email you the Zoom link. And you can learn with us and teach with us and, struggle with us and practice with us and get better with us Wednesday night. Tara, hopefully you can make it Wednesday. I'm watching QQQ, y'all. You know what I'm doing. Watching my boo. And she is shimmy. Well, she was shimmying down to the bottom. She got down as low as 272.17.
They have investment committee meetings. I mean, what were they doing? I am coming up with any reason I can.
Anybody found a good journal? Because I can't, certain things we can get here in Mexico, so I can't have everything shipped. Like I can't get Sonia's journals shipped. They don't ship to Mexico. So I need somebody to bring me a journal. Or whoever's coming next. Oh, well, we'll talk. Because I know somebody is coming to Mexico soon. So I need to find out who that is. Because we need things. We need stuff.
If you thought this company was once going to be acquired, you're right. Remember, Lockheed Martin had a deal to acquire until it was.
I'll be right back. I need a pen. I can't believe I sat down here without a pen.
When in fact they terminated that deal, that is Lockheed. There was all sorts of tumult on Ericsson Rocketdyne's board, on Liechtenstein. I mean, it was some real drama. But at the end of the day, they come back with another deal here. It's $58 a share in cash. And they expect to close it in 2023. I would note in the press release itself, to those who might worry, even though the concerns here on regulatory are not high, they say, Jim, we've heard the DoD leadership.
Good morning, Shauna. Look at QQQ. This is why Sandra doesn't just jump in. Nope, because it's too volatile in the morning. I like to watch. Good morning, everybody. Good morning. Hey, Shauna. Welcome. Yep. QQQ is just way too volatile in the morning. So, yep. I like to let her settle down, pick a direction, because you'll be crazy trying to follow. But I still like to watch how those candlesticks come in. Look at that, 6 minutes. Nope. You definitely always need a confirmation candle. I don't have a clue. I'm going to look at Market Watch again. Yeah, I don't know. It's a mixed bag of nuts this morning. Tesla's up, but not by that much. Pepsi is up, not by that much. And it looks like everything else pretty much in QQQ, the top holdings are, red by, not by a lot. Meta's down about 2%, but other than that, yeah, that's why I don't mess around in the morning. Look at that. Oh, Jesus. Mm-mm. Nope, I don't have any clue.
Things that are hot is PlayStation, things like that. Gaming is still relatively strong out there. Apple is still strong, although there can be some issues.
But that time or sales thing is starting to make more sense to me. I keep it up.
Overall, it's
It's a
probably not the
lot of
most
selling
stable
coming.
business I've ever dealt with. And I think that has a lot to do with the consumer being a little bit careful going into next year.
Um, mm.
Let's talk about the oddity of
Oh
Costco.
wow, it's a lot of volume. Yep.
Uh,
QQQ could be so volatile in the
let's talk
morning.
about one pair, the trade down with Kirkland. And I was quickly
I
upgraded to
cannot
talk about it's
tell.
the trade up, but which something I always agreed. I don't know why, but anything that is the name of a company, and Kirkland's your
Nope,
name.
I can't
Makes
tell
me
at
feel
all.
like we'll have Rich Clancy was right too. He would say bad things about my new CFO. How's Kirkland brand doing versus
It
the
got
name
down as
brands?
low as 272.17.
Share on everything that we sell. You know, it's our brand. It's one name, one brand. We put it on everything from alcohol to luggage, and it continues to take market
Hold
share
on, you guys.
as
I'm
we
gonna pull it
continue
up
to figure out how we continue to lower
so we
prices
can
of that
watch this
brand. So
nonsense
our
together.
Kirkland signature is, one of our real strengths in our company and for the consumer. I want to go back to something you said about Apple and inability to get product. You've got some fantastic operations in China. You also have been, I think, the number one retailer when it comes to safety for the people who work at Costco. So, how are you rationalizing what's going on in China with your commitment to the safety of people who work at Costco? One thing about China right now is
Okay, so let me see.
lax some of the restrictions over there. But right now, COVID is on a real rise in China, and it's affecting our business.
Hi, Global Sister Connection. Happy Money Making Monday. We're here watching QQQ. Really, I'm just letting the market clear out. So, welcome everyone. If it's your first time, welcome. My name is Sandra, and welcome to my channel From Lack to Legacy. On this channel, we're all things money, investing, and mindset, and community, and sharing, and cooperative economics. So, if this is your first time, feel free, make yourself at home. We are a community of traders. Some of us just started, like myself, about 4 months ago. And we have some very experienced traders that join us too. And they offer us tips and advice. And we just try to make each other better. So if you're interested in learning to trade options, or if you're interested in investing, or just improving your mindset around money, you have stumbled into the right place. Yes, you have. And since you're here, hit the like button, hit the subscribe button. It costs you nothing, but it means so much to me, you guys. This is a relatively new channel. You guys know I started trading 4 months ago, and so I wanted to really just catalog or just document my journey. And once I realized the potential for making money, then I really started just screaming like to everybody I know, please come see this, come see this. You could actually be making money and, helping yourself and your family by learning the skill and passing it on. So, welcome everybody. I'm so glad y'all here. And QQQ is being QQQ this morning. Up and down, up and down, up and down. Um, I think around once it decides which way, somewhere before 10 o'clock, between 10 and 11 o'clock, I will kind of peek around, do the things I do to decide for myself, like which way I think this, you know, ETF is going to go for the day. And then I'm going to start paper trading it for the day. I have said I'm not going to trade as much. I'm going to pick a good trade. I'm going to wait. I'm going to be patient and find a good setup. And I'm going to trade that setup. And that's my plan for today. It's paper trading. I think we're all going back to, we're all starting with paper trading. Is everybody set up for paper trading today? Anybody else paper trading, or is it just me? But I'm paper trading today. I understand. I need to get back in the lab. I need to perfect some things. I keep learning so much. I don't know who Hermano is, but Hermano was dropping gems on Friday. And I don't know who it is, so I can't say. But Hermano mentioned that I should keep an eye out for volume. You all, that was, just one of those things that I should know that. Or it's something to work into my process, is to be mindful of volume, especially when it's approaching like a strong support. See, I'm learning every day. And thank you all for taking this journey with me. So thank you all for joining me and learning along with me. You all see, even learning YouTube, all of this is new. How to move this stuff, how to incorporate all this stuff. It's all new. Yep. Frank, you paper trading. What time you thinking about jumping in? I'm definitely gonna wait till things settle down. It's Monday. That's why I agreed to paper trade on Monday. Because Mondays, are Mondays. Life be life, and things are up, things are down. I don't know. QQQ is at what, 272.54. Who knows? Maybe she could be getting ready to just think, go down. I'm gonna look at it. Oh, well, she's really coming down. 272.29. So here's Market Watch. So you're going to see eggs increasing over a period of time. That has nothing to do with COVID or anything else. Bacon will start to come down. The price of pork bellies is coming down. It's things that may continue to go up a little bit. Pork bellies? Every time I hear that, it reminds me of that movie, Trading Places. And also some of the paper goods are starting to go up because of the cost of paper. So I think you'll balance it out. But I see, in my opinion, particularly of just supply and demand, you're going to start to see prices start to slowly come down after the first of the year. Again, that's an opinion. I'm not an economist.
No, that would be terrific.
An issue will be labor.
Yeah. Now, let's go in there.
Labor, yeah.
You historically have spent a lot of time.
Yeah, I'm going to get ready
telling people, and I think this is correct, that it's just dead weight.
Waiting for QQQ to get together. Me too, Frank. Once QQQ gets herself together, then I'm going to start looking for an entry for something today. But this morning, I kind of like for it to get settled in. So that's what I'll be doing.
And you bring someone new, they're hard to find.
That is becoming a problem, as I say. It's still very popular. Not so much a problem for us in the retail industry, but you need people that want to work in the retail industry. And one thing about the retail industry, it's not a
you all
job
see
that you
that?
work from home.
271.
It just doesn't work that way if you're in the brick and mortar business.
Ooh,
So
we're
we have to continue
272.89.
to look at our wages, look at our benefits, and continue to make sure people want to come here and have careers in the retail industry.
Wow. Okay, well, mixed picture inflation, always great picture, Costco, and fantastic to have you, Craig
See if she'll stay under 271. 271.
You
That
guys
was
have
a
a
nice
great
little
holiday.
dip.
Thank you.
You too.
85.
Great to have him.
Camus once.
I didn't see that coming
I
this
was-
morning.
When I was last
Yes,
with
the
Mr.
wine
Dillon.
brand. Yes.
Right. And they had a bottle
it's
for
gonna be-
$78 that I had just paid $100
What kind of
for.
day?
And I said to Rich Clancy, CFO, I mean, you must lose a fortune on that. He goes, do you not understand? We're about volume, not about price. And I loved it because it shows you why Costco's the bargain. It's a membership club. I did not bother to ask whether they're going to raise membership fees because they
Does
never
Kramer
say
bother
that.
anybody
I didn't bother
else?
to ask
I
about
just
whether they
don't
do a
care
special
for
dividend because they
his
said
voice.
if not when. So make
I
those
think he
points.
tries to
These
sway
are wasted
people.
questions, but but the inflation questions were troubling for me because I wanted to hear
Yeah,
that
he went
paper
through a lot
wasn't
of
come back.
went through a lot of different products, both good and bad, and obviously their view of the consumer. And a lot of interesting stuff in there.
Totally.
As a reminder, you can get in on the CNBC Investing Club with Jim. Sign up, find out more. CNBC.com/join the club, or just point your phone at the QR code on the screen. Before we head to break, let's give you a quick look at the bond market. Take a look at how treasuries are faring this morning in our bond report. You can see yields up 2 years at 4.228. Well ahead, though, still of that 10-year. Of course, we talk about that inversion a lot, what it means.
Again,
We'll be right back.
look at QQQ right around this 272 mark, trying to stay below 272. We talked about, I think it was someone who said something about 273 was a stronghold, but she gave 273 up. It says 272. Can she stay under there? And look at the RSI. Let me pull you guys back up so you guys can see what I see. Is anybody following along like on their own computer? Because I would think that would be, that would be easy for you guys to follow along, like on your own computer. Let me see. So it's a 271.76. I don't know, Frank. Maybe she's picking a direction already. I don't know. Who knows? Because that's a pretty steep drop pretty quickly. 271. That's looking like a pretty strong trend to me. 56. Let's see if she can stay and get under 50. So let's see who's up. Pepsi is still positive. Tesla is still positive, but everybody else is in the red. So let's look at Market Watch. These are the indices. Yeah, the NASDAQ is pretty red today so far, but that thing can turn around. So I usually look over here at this Market Watch thing. It's under this tab, this Market Watch tab up here. And if you hit visualize, then you can get that heat map. And it just kind of, I like to see it. Another piece of info. There's so many little features on Thinkorswim that can help you. Let's see. Hit the like button. Yeah, y'all. It's 16 people in here. Hit the like button. And for sure, if you're new and you're watching, subscribe. Help a sister out. It's a community that we've created. We just came together. It's new traders, experienced traders, and everything in between. And we welcome everybody. So if you see something, say something. I'm trading paper trading today. We're waiting to see, at least I am, because I usually trade QQQ. So I'm just watching to see like what the direction is going to be for the day. I don't like to jump in first thing in the morning. So probably not the best scalper. I kind of like to let it settle down and see. And I watch, all my indicators and stuff and try to get a sense of which way it's going to be, which way it's going to go. And then I'm just going to try to be disciplined and only trade 1 or 2 trades in a day. I found in my new trading life that I overtraded. I overtraded like crazy. And so that's no good. So I think it's waiting for the best setup. And so that's what I'm doing. So that's why I'm studying QQQ so hard. When you all see me like this, I'll bent over the computer. I'm just watching, I'm watching to see how these candlesticks come in, what the indicators are saying. So I guess you're actually watching me study and we're studying together. So I don't know. Drop in the chat what you guys are watching. Or is somebody? I know Tara follows Ford. I'll pull Ford up too. Let's see. Where's QQQ now? 271.77. Looks like she's giving some back. She got down as low as 271.49. So who knows what's happening there. So let's take a peek at Ford just to see. Oh my gosh, you all, Ford went from 1392 to 1176. Wow, 5, 10, 50, 20. Did anybody trade Ford this morning? Whoa. Oh, wow. Okay, Ford's down already like 28 cents, 27 cents. That's a big move. And QQQ is down almost 1%. So, anybody else want me to pull up and look at on the chart? Anybody? That's something you want me to pull up so we can look at it together? Tara, yeah, I know Tara loves to watch Ford. Did you see that though this morning? That would have been a nice little scalp. I don't know. See, I don't know. I don't like how quickly. Let me see it on the 3-minute. No, I'm telling you, I like having a little more time because sure enough, there's a pattern to this. Yes, there we go. QQQ. Drop it like it's hot. Drop it like it's hot. 271.56. She's down to 49. I hope she can get down lower than that. That would be great. Okay, so maybe, what time is it? It's almost 10 o'clock. It's almost 10. And Market Watch is looking for the NASDAQ. It's looking pretty red.
David, I read a piece of research.
Let's look at, I don't know. Costco just got green.
Free cash flow growth remains negative.
Let's look at Tesla. What is Tesla doing this morning?
I did a conference call last week about 5 mistakes and 5 good things I did for my child trust. Yep, as part of the investing club. And one of the things I left out was that I sold the stock based on the same kind of story, and I sold it 35 points ago. So all I'm saying is, Waste Management is a darn good company. I was worried about free cash flow, so I dumped it. And that,
that's what I'm talking about. Okay, so maybe QQQ has made up. I don't know. Maybe she's made up her mind. Let's see what's over here in the hopper.
Okay, I think that Waste Management is the class of the field. I think the industry is doing quite well. And I think that you're getting a very rare chance to buy quality stock down a great deal.
All right. What have got on Matt tonight?
I don't know. I do like looking over at time and sales. I always had time and sales, this running price and time and the number of contracts that are being sold. I always had it over there, but I never really paid attention to it. But I like seeing it because it gives me an idea of the range of price. I don't know what you're really supposed to use it for. So if anybody knows what time and sales, But for me, I do like being able to see the range in price because 276 and I saw all the way down to 250s. So, that's about right. I heard someone say that this over here, by the time you see it, it's already factored into those candles. I don't know if that's true, but hey, I don't know. Something you could Google if you're interested. Hi, Francis. Welcome, sister. How are you? I'm glad you joined us. I'm so glad you're here. And wait a minute. My state side tax. Oh, Shauna. Well, it's time for us to celebrate. Now I need to go to Mexico and finalize. Yay! Shauna, when are you coming to Mexico? Oh my gosh, we need to talk. We need to chat. Congratulations. Look at us accomplishing things. It's not even 10 o'clock in the morning, and things are getting done and accomplished and checked off of our lists. Well, first of all, welcome everybody. If you're new, my name is Sandra, and welcome to my channel From Lack to Legacy. On this channel, we're all things money, investing, mindset, sharing, community, and that's what we are. We're a community of beginning traders, and we have some really experienced traders that come and share with us. So C-Bar, I don't know if she's here this morning. C-Bar's probably making money first thing this morning, but she'll join us, I'm sure, sometime today. And that's what we do. We pop in, we pop out, stay for as long as you like. Everybody knows I'm watching QQQ. I can't be chatting it up with you all. QQQ is on the roll, on a roll. So let me peek over here. I know everybody is getting set up to paper trade. So that's what I'm going to do, guys. I'm going to pull this down, come out of this account, go into my paper trading account, and I'm going to get ready to paper trade. Y'all talk amongst yourselves. And let me get set up for paper trading. See, 271.55. I'm watching QQQ. I'm trying to decide. So you guys know what I'm doing. I don't know. It still feels kind of early I don't know. It doesn't look like consolidating to me yet because those SMAs are so far spread apart. But I would love to see. I think she may need to come up, get a little relief, and go back down. So that's what I'm watching to see which way QQQ is going to turn.
Breaking news from the National Association of Home Builders. Builders sentiment dropped 2 points to 31 in December. That's a miss. The street was looking for a 1-point gain. It was 84 last December when mortgage rates were less than half what they are now. Anything below 50 is considered negative. Now is the 12th straight month of declines in this builder sentiment survey, the lowest reading since mid-2012. It is, however, the smallest monthly drop in 6 months, and the builders did note that given the recent drop in mortgage rates, the index may.
Francis, are you already set up with your Thinkorswim?
To 36, buyer traffic unchanged at 20. But
if you're set up with your Thinkorswim, Francis, we could probably talk you through how to paper trade with us this morning. I don't know. I'm just waiting to see. I'll wait somewhere between 10 and 11 o'clock and kind of see what the tone of the day is going to be for QQQ. So let me show you guys what I'm looking at. Of course, that's what I'm looking at. I'm looking at the market watch and all those other things too. So
that's down from 36%.
Let me show you guys. I'm looking at my time and sales. I'm just looking at everything.
And good Monday morning to
I got my eyes wide open
trying
to see.
I'm David Faber with Morgan Brennan. We're live from Post 9 at the New York Stock Exchange. Carl has the morning off. Let's give you a quick look at markets. As you can see, we are negative across the board. Did appear coming in that we would actually start off with a bit of a rally. Perhaps some of that changed with some negative commentary from widely followed strategist Mike Wilson.
That's right. Well, we're 30 minutes into the trading session.
So what we're looking at, or what I have on my display, everybody might be looking at something different, but what I have on my display, let me move this over a little bit.
Saying it's time to sell the stock ahead of 2023 after its outperformance this year.
What I'm watching is
on the other side,
the ETF QQQ. And I want to move that over a little. And so this is her performance thus far today, which, that's looking pretty definitive. She is really trying to shimmy right down to the ground, 271.22. So if she keeps going down, that would have been a nice little place for real for somebody this morning.
basic.
anybody,
Just a little
you
bit
know,
later on in this
probably
hour
would have thought to
discuss
get in
this
here because all
exclusively.
the
So I have a few
indicators.
questions for you.
The only
Okay.
thing that has me, you know, is just being oversold the way it is, but QQQ can run and be oversold. They can all be oversold. So, and they can stay there for a while. But these new lows, 271, 17. She broke that 273 for real. Hermano was saying
Well, is anybody
273
getting
was
an easy
a
pass for the
strong
regulators right now, which is, I think,
support.
kind
It
of the
sure
key
was, but she
question.
came through it.
That
So we're
being
gonna see if she
said,
can stay down
Lockheed
and keep
Martin,
going
that was going to
down.
be a vertical integration.
So
Lockheed
let's
Martin
look
was
at
the
Market
largest,
Watch.
I think,
This is where I go. I
buyer
peek over
of
here.
Aerojet Rocketdyne
It's located under this
items,
tab,
so
Market
rocket
Watch,
motors
then
and the like,
visualize.
which is
And
why
since I trade
Raytheon
QQQ,
and
if I was the
Greg Hayes, the
NASDAQ,
CEO over
I
there,
always look
very
over there.
vocal,
And then I
about that
keep
deal
my
going
watch
through.
list
Not the
loaded
only
up
one, but
with the
very
top
publicly vocal.
9 or
And
10
it
holdings
the
in
last. Aerojet
QQQ. And
Rocketdyne
since
is the
everything over
last
here is looking pretty
standalone
red,
rocket engine
and
maker
QQQ is
of
now
help
down
test
more
bed
than
supply
1%.
into
It wasn't
DoD
quite
and
1%.
NASA.
Hey,
As it stands right now, because Orbital ATK
those
is
are
the
all
main
good signs
competitor,
that
was taken
maybe
over by
that's
Northrop
her
Grumman a
direction for
number of years
today.
ago. So it is
Let's
seen
see.
as a key strategic
271,
national security
31.
asset.
So I don't know.
That
What do
being
you
said,
think?
it has had such a tumultuous year.
Anybody
because it had
else?
This deal with Lockheed
I
unravel
put
to start the
in
year.
a
Then there was
put
this big,
with a 20%
dare I
stop
say,
loss.
kind of
Good for you,
salacious, almost
Frank.
a very dramatic, very
Yes.
public
Okay.
board fight, proxy
All
fight
right.
that happened through the middle of the year with
Okay.
the CEO, Eileen
So
Drake, basically emerging the winner
I'm gonna
from
make
that.
me
And then a
some
ton of supply
tea.
chains, which again, Raytheon's Greg Hayes has been very vocal about, given the fact that
I really
those
wish I
rocket
had some
motors
coffee,
that
y'all.
go into
I
things
stopped
like
drinking coffee,
missiles
but sometimes you
have been
just want a
held
good
up
cup
in
of
the midst of
coffee.
all of this tumult.
Go ahead, some
Aerojet
peppermint tea as usual.
Rocketdyne largely has
Man,
been
cute.
seen
She
by Wall
cutting
Street
up.
as
She's
an
shimmying
entity
down
that
to the
was going
ground.
to need to be absorbed to be able to maybe run more efficiently,
Good
have
for
more
you, Frank.
scale,
Good call.
deliver. But again, it is this key strategic national security
Wow.
asset, and it speaks to this need for a robust
271.06.
defense industrial base. So it remains to be seen whether the FTC will
271.03.
actually move forward with this.
Yeah.
Analysts on
Maybe
Wall
she'll
Street
get
right now
under
largely think
271,
it
Frank.
will. L3 Harris, it's
Look
not a
at
vertical
that.
integration. L3 Harris
It's
doesn't
not.
have a lot of overlap with it.
And there are
Let's
those who are
see.
taking comfort from the second paragraph in the release where they talk about hearing from the DoD leadership loud and clear that they want high quality, innovative, and cost effective solutions.
L3 Harris is looking to become the sixth prime. Chris Kubasik has been very vocal about this, including on our show in past interviews. So the argument that that company, and I would expect him today to likely make, is that this is another acquisition. This is their second in just
wow.
this quarter
She's
that
under
they've announced after the
270.
Viasat segment, a
270.9.
military communications segment
Oh.
announcement, that this is going
So
to make them more
yeah,
competitive
I'm looking
and
at my
create,
time and
again, a
sales,
more robust defense
271.
industrial
I
base.
saw 271.45.
Okay, we're going to get into more of that a little bit later. Stocks trying for their first gains in 4 days after 2 straight weeks of losses. So far, not prevailing, not successful. Joining us now, Morgan Stanley Wealth Management CIO Lisa Shallett and Investo Global Market Strategist Brian Levitt. Good morning to you both. Lisa, I will start with you. As David mentioned earlier, perhaps this note from your colleague, Mike Wilson, adding to negative sentiment for the market today. Expectations around earnings recession, how deep that could go next year, what that means for how deep, I guess, further selling could go for equities as well.
Yeah, look, I think we've been, blowing this clarion horn for a while, talking about the reality of moving from which is where top line inflation has been. As we move into 2023, we see that Fed policy probably is working. All of the indicators are suggesting that we are getting slowing, particularly on the manufactured goods side of our economy. So you're going to lose volumes at the same time you're losing pricing power, and it's going to be really, really hard to hold margins and to make some of these profit forecasts that are out there.
I want to get into that more, but first, Brian, do you see it the same way as we head towards
got to a
2023?
low of 270.
I think we have some near-term challenges, but
86.
not really. The market tends to bottom well ahead of the economy, and so this market
Frank, did you
was already
come
down
out of your put?
over 25% peak to trough. Now, in the near term, do we have to retrace a bit of that?
Banking on market going
Sure,
down.
but
Yeah, I think
ultimately
so
what the
too.
market is going to be looking to is a
I
more
think it's-
normalized growth and inflation environment in the
Yeah.
Fed that backs off the tightening stance. That typically sets the stage for the next recovery. Investors that wait for things to look good tend to miss that. It's all about whether conditions are going to get better or worse relative to expectation. The market's already priced in a decent amount of pain. Now, on the point about earnings, yes,
that's bloody.
earnings do go down in a recessionary environment, call it 15% or so, but multiples also tend to expand. And as interest rates melt amid lower nominal growth expectations, you could see multiples on stocks come back up. So, yeah, could you see a move down back to around the 3,600? Yes, because that would be an earnings recession.
Heck, I don't know whether to
Multiples
get
creeping
in or
up
sit on
some,
the
but from
sidelines.
there, we believe that the recovery commences as the Fed shifts to a more a pause or at some point a more accommodative policy.
Right. Lisa, kind of refreshing to hear a bit of a bull thesis out there. I'm just curious to your thoughts as to what you just heard.
I guess we just couldn't disagree more. And it really comes down to valuations, right? This market is either pricing,
can you all see the
1, 2,
values
or a third
in the
scenario. Either
time and
we're
sales
pricing this
and
idea that we get
we're
this
at
soft landing,
271.32,
and
when I
the
scroll
Fed
through them, the prices look like they're
immediately
getting
cuts,
higher.
which we just don't think is particularly plausible.
And
And we're suddenly off to the races. Or more realistically, we get earnings misses. That means that your actual, earnings, your denominator goes down. And while your price earnings multiple could go up, the reality is you're in the middle of a recession. And during a recession, consumption goes down, and forecasting the future is really, really hard. So I don't think, and I don't think history would suggest that markets start a new bull market really on the first uptick in unemployment, because once unemployment starts getting going, it tends to be serially correlated, and that means consumption goes down in those out years. So I don't think that this is a market that's going to rally if we get that type of uncertainty.
Brian, given your thesis, what would you be buying right now?
Well, I want to just make a point on that. If you look at 4 of the last 9 recessions, equities were actually positive. If you go back and look at any time
if
in US
you
history,
are
with the exception of 08,
new,
when inflation
peaked, I mean like you don't understand what candlesticks are, I need to know, because I'm not sure how much. I know Francis was here. Most of us, I know, kind of know all of this stuff. You know what a candlestick is, you know what the moving averages are, you know what the indicators are. But if there's somebody who's new, if you don't mind letting me or letting us, somebody in the chat know, and then maybe like in between we can talk to you about what you're seeing, like what the candlestick patterns are revealing. This is amazing though. I mean, seriously, if this thing turns red and it keeps going down, the lowest I saw, was 270.86.
And you want to start to leg into more cyclical, value-oriented assets as well as non-dollar emerging market assets.
Okay.
I don't know.
Good bull-bear debate. A little asterisk given the near-term
It's so
concerns.
oversold, and by oversold, I'm talking about this. The RSI indicator is way down under 30, and so generally it looks like it's kind of turned up a little. This looks like it's cooling off a little. These look like they're turning up a little, and I can't tell what's happening with my TTM squeeze. I can't tell if it's diminishing. It doesn't look like it, but this looks like it might be turning and turning, and we're gonna see. So I'm just watching. So the price is creeping up a little, 271.50.
It is a very quick pivot in his legal strategy just last week. His lawyers had said that they plan to fight extradition to the States. He's been in the Fox Hill Correctional Facility in Nassau since his first court appearance last Tuesday. He was denied bail and was supposed to be held there until February 8th. I'm told this change of strategy could be a result of some of the conditions there at Fox Hill. In that jail, a human rights report from last year details a lack of
go ahead and be smart, y'all, and log out. Because, you know, I was looking to see if maybe I could get in this morning, but I'm going to be smart and be disciplined. And I'm going over, I'm going to log out of this, and I'm going to log into my paper trading account so I can get set up to paper trade. It's a smart thing to do. So give me a minute. I'm going to log out of Think or Swim because I have to log out to get there. So give me a second. I'm going to log back in under paper trading. Okay, paper trading. Okay. All right, folks, I'm in paper trading, so I can relax because I'm not looking for any play with, you know, to make money today. So I can relax, and I'm just going to look and see what QQQ does. And if anybody has any, you know, suggestions, I don't know what you guys are doing, just, you know, let me know. I'm just going to be watching and playing around with QQQ and paper trading. I'm gonna peek at Ford. I'm just gonna look around and see who's doing what. Anybody got a play or something they want us, a stock or something they want us to look at? Yeah. Wow. Google. Who's down the most? Let's see. I'm just trying to see who's last. I don't like having the bid and ask on mine, so I'm taking it out. I don't like the bid, don't like the ask. It's too crowded. This is all I need to see. NVIDIA is down quite a bit. Let's see what NVIDIA is doing. Ooh. Wow. Look at NVIDIA. Oh my gosh. I don't trade NVIDIA. Does anybody trade NVIDIA? 16206. Shakes. I'm just looking to see. Okay. Whoa. Yeah, I don't like the way NVIDIA price jumps. Y'all look at that. That's one thing I don't. I understand how QQQ's price moves. I think that's why I stick with what I know. When I see a stock move and jump and jerky price, I like to get back to what I know. Let's see what Ford is doing. Okay, well, I guess I'll take my little stuff back over here to QQQ and see if I'm going to do anything with it today. I may just plot. Just depends. I'll be curious to see what happens in this next. I'll be curious to see what happens with QQQ in the next 30 minutes or so. I don't know. I do not know. I know we need some news. Because it's quiet.
At Tesla, better or worse, it's become a proxy for the Twitter headlines.
Yeah, since he made the offer, they're down 55%, and since they closed the deal, down 31+%. And that's only a couple of months ago. That's it. That's all he's been CEO for. It seems like a lifetime at this point. Let's stay with Elon Musk, though. We had Tesla investor Gary Black on last Thursday, and he said he would like to see Mr. Musk refocus on Tesla, adding pressure from the board.
Thank you guys for hitting the like
mounting.
button.
Take a listen.
Please don't forget, subscribe, share the channel. Thank you all. Thank y'all for joining. Thank y'all. I don't understand. I think we're all just here because we want to learn this thing. I'm telling you all, this is a viable way to make money. Because that was a move this morning. This right here, somebody made big money.
Pressuring him to do that.
Let's see,
I can't imagine the board letting him
it
spend so much time, rebuilding company from the ground up.
Let's bring in Colin Rush from Oppenheimer. He downgraded Tesla on Twitter-related risks
about 274,
after naming it a top pick
all the
for
way down to
2023 just
270.
last week. So what's going on here, Colin? I would assume that if in fact he
That
does
was a
step
money
aside as
move
CEO,
right there.
you would be
And this
encouraged
could
by
be
that as
too.
well.
Shoot.
Yeah,
10,
and it's about
15
rebuilding
minutes
trust. I mean,
up.
for us, what happened last week is that the share sale was one element, and I don't think we were surprised to see him sell a few more shares to fund this endeavor. But really,
I might do this one, you all,
with journalists and banning folks without a consistent methodology around who was getting banned and why.
I'm looking at
QQQ.
Oh, this is my paper trading. It doesn't have my TTM squeeze on it, but I'm going to add my TTM squeeze to this. So I'm going to go here.
Inextricably linked to him.
I like it.
And so for
now
us,
that I have it,
that was a bridge too far. And as we go forward, obviously he has some work to do to
I like
rebuild
having
that
it.
trust for us, rebuild the trust in the brand and the mission that
so
Tesla's
just
been on in terms of
because
climate
5, 10,
mitigation
15,
and evolving
let me look on the
better solutions for people through technology. And we just we need to see a lot more work from him and that company to get back on board here.
Right, but I want to be clear. You're still positive on the fundamentals of Tesla. So I guess if he were to actually abide by this poll and say, all right, I'm done as CEO of Twitter, would you change your rating, or is it going to take a while for you to get that so-called trust back?
It's going to take a little bit of time. I mean, we continue to see Tesla as well out in front of peers. We've talked about 2 to 3 years of technology advantage. We think it's actually a little bit longer than that. It may be as long as 4 to 5 years. And the challenges around EV are really around material science. And those are long, hard problems to solve. And
I'm going to do something I don't normally do, which is buy down here. I don't usually buy down there. I usually buy somewhere around here.
And we think they're continuing to extend that lead. But
I'm going to try to do it.
Oh, shucks. Consumers is substantial at this point.
point. And
I should try to do it the way the guys
into
taught
Twitter is
me,
not helping that
with the
brand. And as we
limit
go
and
into
the
a period of
whatever,
time where
whatever.
we
I
see more
need help, but I'm
competition,
gonna try.
and folks have more
So
choices
no,
because we've been
that's
supply
not
constrained
it.
for so long on the EV side.
It's
We think there's some real risk
the
around
double
what that means for
click.
Tesla. We continue to be a little bit
So
conservative
let's
versus
see.
our peers on
This is
on
why
units
you
for
need to
2023.
practice. Oh,
But we'll
fudge.
see how this plays out. And we think that a lot of the
But I
competition
know
is
what
going
I
to
could
struggle
do.
here. We're seeing
I could create
pricing
a
increases from a variety
opposite
of folks, including
order.
Ford, just in the last week. And we think Tesla has
No.
a tremendous technology
Nope.
position, but really
This is
rebuilding
why
that
you
brand,
practice.
the trust and the premium that they've gotten from that brand is going to take some time.
So when you do talk about
Okay,
brand
by
damage,
custom,
have you
by OCC bracket.
calculated it?
Okay.
Quantitatively speaking,
So
how does that bake
what's
into
happening?
your
It's at
downgrade today and your estimate for the stock, at least in the near term?
60, and I know that it.
It's still very fluid in terms of what that
273
looks
is a
at, what that looks
stronghold.
like.
Maybe it'll
What
get
we're
50
looking at is
cents.
sell-through
So the
on the
stock,
vehicles, and we're seeing
I want
shortening
this
lead
on
times on
percentage.
specific vehicles. We've gone from having a 6-month lead time to,
I
in some
don't know.
cases, a couple of weeks in certain geographies.
I don't know
And
what
that's
to
where you
do,
start to
you
see the
guys.
potential impact
Okay,
on
the
earnings is
limit
really about that pricing and their ability to lever,
is, how do I
availability of
get it on
supply into higher
percent?
prices. And as they see some of that availability change, the price leverage becomes diminished. And so I think we're going to see it here more likely in the first half. And we expected some of that. You take a pretty conservative view on pricing, a solid 8 to 10% below what's being advertised on their websites.
2%.
But as we
I don't
go
know.
forward, we
Let's
can
say
see some of that
10%.
eroding. And certainly one of the things that we're watching for is incremental marketing spend. The company's really been
10.
pretty impressive in terms of their
And
ability
let's
to sell
say
a
a
lot of vehicles
stop
without spending a
of
lot
I
on
only
marketing,
want
and
to
really
lose
next to nothing.
5%.
As we see them, if
I
we
don't
see
have a
them
clue,
start to spend
but
on marketing,
that's
we'll
what
know
I'm
that they have a
doing.
demand issue,
Okay, and
and
we
that's going to
said
be
make
a
these
real
good
problem
to
for the stock.
close.
All right, so
Good to
again, to be
close.
clear, you're citing
And
those
I'm
reduced
going
lead times
to
and other things you just
limit
cited
in.
as supportive of your backlash from
I
consumer
wanna,
contention.
I'm gonna
Right?
mark
I mean,
it in.
you
We can
don't have
discuss
specific
it.
data
We can
beyond
discuss
that.
it in the comments. I'm gonna mark
It's
it
really hard to
in.
collect the brand data and what that is.
And
There's
because
also
I think the
anecdotal
spread, I
evidence that
think
we're
because
hearing
this is
from
only a
talking to
few
folks,
pennies,
but
it should be
really
okay.
the actual data
Okay,
takes a
and I'm
while
setting
to
this
emerge
up.
in
Y'all
terms of
get to
what
see
the real
this.
brand
I don't know
value
what I'm
is.
doing, but I'm trying.
Okay. Colin, thank you.
I think that's,
Appreciate it.
is
Thank you.
everything the
Glad
way
day
it
where
should
you
be
obviously
before I
downgraded the
send it?
stock
I guess I
online.
should just
Could
ask you
potentially
all.
argue that
Is
buying
everything the
Twitter
way
is
it
the
should
ultimate
be?
marketing spend.
How about
We'll
Netflix?
see.
Okay, and
After the break,
Microsoft.
we'll talk
I'll do
Meta
that.
under pressure.
With the
Stock's down
stop
about
loss
2.5%
in,
right now
I
as the
feel
EU accuses
better.
the company of violating
I'm
antitrust
doing this
laws.
paper trade with the stop loss and stuff. I'm going to go for it because the trade is moving along without me. So send. Okay. We'll see what happens. Okay, so it got filled. Let me get over here to, oh Lord, this is not what I want to see. That's all of our stuff. But right now, I want to just see what I just purchased. This QQQ thing. Okay. Quantity, did I buy 10? Stink. Did I just? Whatever. Okay, let me get back over here to the trade tab. This is what I just purchased. 4 days. Okay, anyway, let's see what happens with those contracts that I just purchased. I would never buy 10 contracts, so I wasn't paying attention. But anyway, I think I got the clothes and stuff in, view order. So I do. I have this, I have a 5% stop, and it looks like a 10% limit. That's what I said, so we'll see. It'll stop me out if I lose 5%. I think that's right. Did I do it right? I know, Frank, I never do 10. I need to just go in and do it again because I was in a, I was anxious. So, yeah, I would never buy 10 contracts. You already know that. I would buy 3. So, but I did at least did I get the order right? That's what I was trying to see, you guys. Did I get the order correct? And I think I did. So I still am not sure exactly, what 5% is. 5% of what? That's what I need help with figuring out. Because C-Bar, you were asking me that yesterday, like how much do these contracts cost? I'm ashamed to say it depends. I don't know, because it depends if I buy a contract that's very much like close to in the money or way up in the money. And this is so new to me, you guys. The 5%, what am I saying? 5% of what? I don't know. I need help with that. I got this part, I think, because at least, let's see, I bought calls. So let's look at the chart.
Again, as you see right there, the EU is accusing the company of violating antitrust rules. Mike Santoli joins us now. He's here at Post 9. He's going to take a closer look at the stock's performance overall, which, as we know, has not been particularly good.
Very rough. That was a 2-year chart, which shows
that
you
makes perfect
just
sense,
barely up off
y'all.
the lows.
Oh man, I'm better at this stop thing than I thought. That's a good deal. Yeah, if I come down, if this thing comes down to, wait a minute. So what I'm saying is if it comes down to 272.04, but that's I don't want that. I think that's a little sensitive. I would say maybe if it came down a little underneath these, I would be worried. So can't I move this? I heard you can move these.
It has really compressed the valuation, though. Take a look
that you can adjust
over the
this
last decade of Meta relative to Alphabet, as well as.
Can I adjust my? I think you can. So I'm going to try to adjust my stop. Let me go back over here to trade. Let me look at this.
Investors, I think there's
I wonder if I can.
Whether it could be a value trap, simply because earnings, by the way, are only supposed to spring back in 2024.
Replace, cancel, replace.
Got to in 2021. So it's a long period of earnings.
I want my stop a little lower.
And then, we just don't know
5%, maybe 10%.
Cycle for them.
I want to
kind of know the issues, and it creates this idea that there's no hurry. Perhaps to buy, whether that's right or wrong. I think that's where we are.
Right, sort of the long period of kind of investment, as you speak, with a potentially low multiple, but justified because of lower earnings. Right. I mean, they're not talking about, he's not talking about the metaverse actually becoming a true commercial enterprise until towards the end of the decade. Right?
I'm in here now. I don't know what I'm doing.
That, kind of willing to stand behind that multi-billion-dollar effort with an uncertain payoff. Which I
didn't know what to do there, y'all. I'm trying to move my stop loss down. I think you can adjust the percentage in the order.
And of course, an inability to buy anything.
And that's what I'm trying to do, Frank. I'm trying to adjust the percentage because this is the stop card.
And make shareholder-friendly noises and do what a lot of the people on the street are saying, and maybe it would be that bad for the stock.
I just don't know how to.
Thank you. It's time now for news update. Contessa Brewer has that for us. Hi, Contessa.
Hi there, Morgan. Thai Navy ships and helicopters are searching for more than 30 missing sailors. Their warship sank in the Gulf of Thailand 17 hours ago in high waves. So far, 75 sailors have been rescued, according to officials. And the high water has subsided somewhat, but apparently still it's a danger to the smaller vessels out
I think it's going to stop me out sooner than I want to get stopped out.
Members are expected to vote to urge the
I would be
Justice
okay
Department
going down
to
to
at least 3 criminal
we'll see what
charges
happens.
against former President Donald Trump
getting close
related
to
to
my
the Capitol
stop.
riot. The committee also plans to refer
let's see if I
several
made any
Republican
money.
lawmakers to the House Ethics Committee for their defiance
See, it's
of
going to stop me
congressional
out.
subpoenas. In Argentina, fans are hitting the streets of Buenos Aires to celebrate their team's historic win in the World Cup. Those celebrations erupted after the Argentina men's national team secured the win over France in a penalty kick shootout. Star player Lionel Messi scored twice in a match.
Then I can stay. I can read. I can put it back on.
World Cup appearance. Heading into it, he said, "Yeah, this is probably my last World Cup." Now that he's won, Morgan,
because if it goes underneath these, then that's when I would be concerned. If it goes down
a world champion, and who would? I mean, look at the other greats.
Michael Jordan,
have I lost, Brett Favre. People who are champions don't really want to retire, do they? I don't think so.
Yeah, he's riding the wave of winning. My God, was that?
Oh well,
a game
this is good practice. I tell you that. This is great practice. Is anybody else practicing? Because Lord knows I am. Can you adjust up or down in active trader? Okay, let me try that. Because I want to Let me see. Let me go back to chart. And you said go to active trader. Okay, I'm in active trader. And how do is this it? Template? I don't know. Okay. I don't know how to add it from here. You can adjust up or down in active trader. I'm trying. I just don't know where to go in active trader. So I don't know how to, let me see what makes sense. Template, auto send, trigger with bracket. I do not know what that means or where it is. Okay. Trigger with stop, buy, sell. Something I'm missing. Okay. Trigger with bracket. I don't know what I should be looking at. Dashboard, buttons. Oh, wait a minute, buttons. Okay, that might help. Let's see. I don't know. I don't know what to do. Okay, let me go back over here and look and see. This is our community portfolio. We're up $1,400. But let me see what these calls are doing. They're down 200. These are calls. Let me look at this chart.
Five.
Welcome back to Squawk on the Street. Defense contractor L3 Harris agreeing to buy rocket engine maker Aerojet Rocketdyne in an all-cash deal valued at $4.7 billion. After Lockheed Martin's attempt to buy Aerojet was abandoned after regulators sued to block that deal earlier this year. Today, shares of L3 Harris and Aerojet, they're moving in opposite directions. L3 is down about 3.5% right now. Aerojet Rocketdyne's up about 1.5%. But joining us here on set is L3 Harris Technologies Chair and CEO Chris Kubasik.
I want to see if this is going to bounce off of these.
All right, so
the 9
Rocketdyne
and the
has been in play
13.
for a while, as
That's
we
what
know,
I want to see. That's
especially given what happened with the Scuttle deal with Lockheed Martin. Tell me how your deal to acquire Aerojet came together.
I think you can adjust. Can you adjust up or down? You can also adjust in the chart. Click on the bracket icon. Okay.
Starting with the
Let me
merger
click
of
on the
L3 and Harris, we
bracket
wanted to build a company
icon.
to provide more competition for the Department of Defense.
Bracket icon.
So the fact that we're growing organically and inorganically is not a big surprise.
But
You know,
I
this
don't
is
know
going to
what to
benefit the
do.
customers. It's going to
Once I
benefit the
click on
shareholders,
it.
and it's going to benefit the employees.
Is
The
it over
customers
here
want
somewhere
to strengthen
too?
competition,
The
and they
bracket
want to bolster the
icon.
defense
That's the only
industrial
bracket that
base,
I
and this
see.
acquisition does it. Aerojet Rocketdyne being part of
No.
L3 Harris, we have the scale and the strength to invest in people,
So,
processes, R&D.
well,
And we
let
all
me
know
get over here and
competition
see.
spurs innovation.
Check out my
Customer
theory.
loves
Would it
innovation.
bounce
I
off
love
or go
innovation.
through
Employees love innovation.
these
From a shareholder perspective,
SMAs?
this fills in a gap in our
272.
portfolio, which are the weapon systems.
271. Looks
when you
like it
look at
might
the
just
budget,
try to
you
go
look at the
right
national
through.
defense strategy, this is an absolute growth market. We're going to add $7 billion of backlog, 3x their annual revenue. It's accretive on EPS, accretive on cash, and makes a lot of sense financially. And then the employees, can't wait to welcome the 5,000 employees to L3 Harris. We're a technology company. They're a technology company. We're focused on national security for the U.S. and our allies. And
You can
50,000 strong
also
after the merger
adjust
closes.
in
It's gonna be
chart.
exciting.
I want to get more into
Click
what this
on
means in
bracket
terms
icon.
of
Okay.
a future
It's in the
L3 Harris
chart.
portfolio and what
Click on
Aerojet brings to the table,
bracket
especially because space has
icon.
been such a big
Where is the
outsized growth
bracket
area,
icon?
including when it comes to defense spending. But first, what makes you feel confident that you can get this deal done in front of the FTC when Lockheed couldn't?
Yeah, well, that was 2 years
Well, I'm
ago.
gonna get
Different
rid of
time,
y'all,
different company.
since I don't know what to do
I
with
think the
y'all.
government is going to look at four things. Number one, they're going to look at, does this strengthen
And I
competition?
don't know where the
And it
bracket
absolutely
button
does.
is.
Secondly, they're going to say, does this bolster
Thank
the
goodness this
defense
is paper
industrial base?
trading.
This company will have the strength and the power of L3 Harris behind it. It does.
Okay, so now what
They're
would
gonna
I
look at
do
us
in this
and see
case?
that these are two new
What
markets
would
we're
I
getting
do?
into.
I would go and do
Weapon
what I know to
systems,
do,
space propulsion,
which is
no
go
overlap, no
to
vertical integration. And then they're going to look at the
trade.
concept of
I
merchant
will
supplier.
go here.
You know, L3
and then
was formed 25 years ago as a merchant supplier.
I'm going to
It's an interesting
create
term. It basically means, will you sell your products to
a
whoever you need to?
duplicate
Aerojet has that business model. We're going to maintain it. We absolutely want to sell these
order.
to the primes, to the OEMs, to the end user.
But I'm going to,
So when you
instead of
look
a
at those
limit,
four
I'm going to
criteria,
make this a
I think it
stop.
makes sense.
I
There'll be
can
a thorough
figure this
review.
out.
We'll respond. They'll respond.
I think.
I respect the process, and we'll see how it plays out in 23.
The merchant supplier piece of this is certainly key.
I just don't know
And I
how
think
to
about,
turn this
CEOs
to
at
a
other defense primes who are very vocal
percentage.
about the
Can I
last
do
potential
that?
tie-up with Aerojet.
Can I
Greg
turn
Hayes
this
at
into a
Raytheon comes
percentage,
to mind,
y'all?
who had said that Aerojet needs, quote, adult supervision. Just recently, given the fact that the company is going through a lot, has come through a lot, how do you apply adult supervision to that supply chain, which has been an issue for Raytheon and many others?
Yeah, and as you can imagine, I reached out to
I don't know what you're
Raytheon,
doing.
ULA, Lockheed, and all of our customers last
You can
night. So we've
just
already been in
also
contact,
adjust in the
and they
chart
understand
on
our
the
strategy
bracket.
and what we want to do. I think the entire industrial base is struggling with supply chain challenges. That's pretty well documented. And I think we have the processes and the controls and the people that are going to be able to help improve the performance of this company. I go back to the L3 and the Harris merger. You know, we took out over $600 million of cost. We have common systems, we have common processes. We understand the industry, we understand operations, we understand program management, and I'm excited to get this deal behind us.
So talk to me a little bit more about portfolio mix and what that's going to mean in terms of future earnings. I asked that because a big portion of the L3 Harris portfolio is quote unquote short cycle business. According to Jefferies, it's about 40%. Aerojet, Rocketdyne, 100% long cycle business, which means that some of those big revenue opportunities on the horizon for Aerojet are going to be
I want to see the
coming down
difference
the pipe
between if you market out what you get and what you get if you
ULA, which you mentioned,
do
the new Vulcan
5
rocket, which has
and
a
mark
huge
it out.
launch
I want
deal
to see
with Amazon's Project Kuiper satellite constellation, NASA's Artemis, hypersonics, which eventually will become more meaningful within the defense budget. I guess I sort of just laid it out, but how do you balance that portfolio versus the amount of debt you're taking on, both between this and the Viasat acquisition?
Yeah, no, great question. So when I look at our portfolio, L3 Harris historically is known for situational awareness from space and airplanes, our resilient comms with our radios and our networks, and then the sensors. We have sensors in space, air, maritime, and ground. So the missing piece, you know, was the weapons. And then a couple months ago, we announced Viasat, which I know how we feel about acronyms, JADC2, connecting all that. So I feel real comfortable that when these two deals are behind us, we have the portfolio in all the right domains, all the right areas. I wouldn't anticipate doing anything for several years. And in fact, we have some non-core assets that I'll probably sell in 23 when the financing market turns around, pay down the debt. So that's how I kind of see the next couple of years playing out.
Chris, if I could come back to the antitrust question, you mentioned that you spoke with Raytheon. I don't know if it was Greg Hayes.
Okay, my first shot at trying to,
you know, they were one of the key opponents of the last
catch
deal.
something, catch a move with that. It
Did they
didn't
give
go
you any
well.
assurances that they won't give you any trouble here?
I need to
we
practice.
exchanged emails, gave him a heads up. He congratulated
It's
me.
on single
we said we'd
order.
get together and talk about the future together. But you know, they understand the importance of these systems, getting to them so they can meet their ultimate commitment.
It should be on. It shouldn't be on single order. It should be on multiple orders. Well, let me not do this. That's not what I would do.
Sorry, go ahead. A quick follow on the financials
and what
as
I
well.
would do
just, looking
for
here.
today
Their
is get a
margins
put.
are well below yours.
This is what I would really do.
Is that an opportunity for you, or is that more a function of their business in terms of where their adjusted EBITDA margins stand right now?
Something like
I think it's an opportunity. Absolutely. I think we have a good track record of being able to improve margins through our continuous improvement program.
By
the leverage
custom
of being
OCO bracket. Is that right there? C-Bar, did I get it started right?
We're all struggling with the inflationary headwinds.
Okay.
These contracts tend to turn over every year or two, so we'll be able to reprice them based on correct cost and pricing data.
Ms. Vice, you jumped in live trading shares. Are you paper trading or are you real trading with real money, Ms. Vice?
Authorizes an 8% top line increase.
Hoping for 1% gain, then getting out. Ms. Vice, are you in the market with real money? Y'all get that money.
Increased demand,
Okay. So I'm gonna try. Okay, so C-bar. Did I get this the beginning of it right?
Industry has been dealing with those issues.
Oh, girl, the real deal. Go for it. SQQQ. Keep us posted. Please keep me posted.
I'm hearing that could happen this week. So once we get the appropriations,
hey, money making traders,
75, 80 days.
Okay, I'm back at this order. Let me figure out how to place this thing because I'm just gonna ride it out for the day. And I would not buy 10. I would buy 3.
We have to have a budget. When that happens, I think awards are going to start flowing. We have the short cycle business, so we can see some things in 23, the longer cycle business thereafter. So 8% is great. You and I were out at the Reagan National Defense Forum, as you recall. I think the administration's done a great job laying out the national defense strategy, aligning a budget to that strategy. We need to get it approved, and then the money can flow to the industry and down to the suppliers.
All right, my final question for you. You pointed this out to me. And I'm going to bring it up now on TV, but you took over at L3 in 2018 as CEO. That was almost 5 years to the day. You actually joined me here on set at the New York Stock Exchange when that happened. Since then, you've merged with Harris. You bought Viasat earlier this quarter, now Aerojet. Somewhere in the middle of that, or I should say earlier this year, you struck that deal with Shield Capital to develop future technologies as well. What does the future look like for L3 Harris? What are you working towards? And are there more acquisitions?
Okay. C-bar, can somebody look this order over and tell me if I did it right?
I reflect upon it. But 23 is going to be very straightforward.
I got my stop limit on it.
Execute on the programs that we have.
Needed to go to 51.51.
Those leaders are going to focus on.
Go, Miss Vice. We're pulling for you. We need some money in the bank today. Let's make some money today. Hoping for a 1% gain, then getting out. Okay, the real deal. C-bar, can you look over my order and tell me, or anybody out there, Frank, anybody, and tell me if I did this correctly?
So I think 23, 24, 25. It's going to be focused on execution, grow organically, delever a little bit, keep our investment grade rating. And then see where we go.
I hope it's right. This is a limit. This is a stop.
And, it's just great to be on stage with you and David again.
Chris Kubasik, CEO.
Your order looks good. Yes,
right,
yes.
You too.
Okay, I'm going in.
Well, still to come right here. We'll give you the results from CNBC's Millionaire Survey. Wealthy investors feeling bearish for the new year ahead.
Okay.
First, though, let's check out the biggest laggards on the S&P as we head to break. Of course,
and we got
Wynn Resorts
filled.
leading that group.
So let's go to the home screen.
We're back in 3.
And see these 3. Okay. And I bought 3 puts. Let's see, chart. Oh, shucks. Why does that look the stop? So, okay, yeah. Okay. And my limit is what? Okay. Well, I don't know, but that looks pretty good. We're gonna leave it the way it is. Okay. So let me go over here and watch. Okay. So it's cooking. Finally. This is what I'm watching today, the puts that I bought for today. Let me see. It's almost 11 o'clock. Market watch. Indices. I don't know. Look at the watch list. What is QQQ down 1 full percent? We're gonna see. 271.47. Y'all, I might just swing them. Who knows? I like paper trading. Paper trading, you can try things. Okay, I'm okay with this paper trading. Thanks, C-bar. I'm okay with this order too. I still wish I could tell. Let's see. at 870 triggered 20%. I don't know what the 20% is. I wish somebody could explain to me, like, what is it? 20% of what number and 10% of what number are we talking about? I can see where this is extended. It's like it would stop me out at 270, 250. And I'm okay with that. Yeah, that's good. But my limit, I'm not sure what the figure is, but it looks like it's down pretty low. Okay. 13. All right, folks, hold tight. Let me get myself together.
Last Kramer Guide.
I think we're being very careful in terms of what we buy in jewelry, televisions, and probably furniture, and maybe relatively careful next year of what's going to happen in apparel. I think right now, unemployment is still in a relatively good place, but every time you turn around, particularly in some of the technology jobs, people seem to be getting laid off. And I think people are saying, wait and see, and let's see what happens going into next year.
That was Costco's CEO, Craig Jelinek. He joined us, of course, last hour. Morgan, I had asked him, he had said the consumer's being a little bit careful going into next year, and I sort of asked him to give us a little bit more, and so that was part of that answer. It wasn't negative, but it certainly wasn't positive either in terms of what he was talking about. Some things being disinflationary he saw, but definitely a little concerned about sort of what they were seeing in terms of consumer behavior right now.
It also speaks to what we've seen in consumer confidence readings, right? And this idea that the consumer is getting more cautious, but also we're lapping all of those stimulus payments and everything else that the consumer has, and sitting on all of that spending power that we've talked about for the last couple of years with the consumer too. And the consumer is doing more things like travel, which I know he mentioned there's still strength there as well, versus staying at home buying more TVs. Although in my house we're buying more TVs because my toddler likes to break TVs.
Yeah, he's got a record there going, I think, right? It's already
I don't even want to say it out loud. It's
I've
4
told
televisions.
Yeah, that's pretty impressive. Yeah. He doesesn't like TV for some reason, does he?
He just loves to wing the remote control of the TV. I also thought it was interesting what he had to say about container costs coming down.
Yes,
right?
starting to come out of Asia, going down in price because container costs starting to drop significantly from where they were 6 months ago and even a year ago. He said that will help us. Did Mr.
Disinflation, what we've been talking about.
Exactly.
All right. As we head to break, let's get a check on the markets right now. It's a mixed picture. The Dow is up ever so slightly, 26 points. The S&P is down about 0.25%. 38.41 is the level there. And the NASDAQ is down 0.8% to start off this holiday week.
Okay. What's the dollar amount next to limit order? What's the dollar amount next to the limit order? Okay, let's see. I don't know. What is the dollar amount? How do I check it? Okay, let me go back over here to the trade and see. What's the dollar amount next to the limit order? It says 8. This is what it says. I don't know. Let me see. Do we need more space to see the order? See, I don't know what these dollar amounts mean. I'm not sure how they get it. Is it the premium minus Is it one of these minus what you paid or something? How do I know? I'm assuming it's got to have something to do with that. Yeah, these are the things you should know once you know. What's the dollar amount next to the limit order? Okay, let me look at my limit order. Here's the limit order. What is the dollar amount? $870? I'm not sure what that means. So, I'm happy to get that doggone order in. How about that? And the fact that it's profitable. Lord help us all. Those 3 contracts have made $27. I'm happy. I could live $271.34. Okay, so the 3 contracts that I purchased, at least they are profitable. They're at $39. I'm just gonna watch. So you guys are watching with me. And just like that, I made my 1%. Congratulations, Ms. Vice. Congratulations.
Welcome back to Squawk on the Street. I'm Dominic Chu. Stocks are mostly mixed this morning to start out the trading week, though some of the tech-focused areas of the market are weighing on things right now. For example, within that communication services sector, we are seeing some notable declines.
Congratulations. Congratulations. How much did you pay for each contract? I'm not sure if you're talking to me.
Just about a week as investors really try to digest its ongoing cost-cutting efforts.
Other names, congratulations, Ms. Vice.
Paramount,
Yay.
also among the laggers this morning.
Congratulations.
Those media stocks in the trade today. There's more Squawk on the Street coming up. Stay with us right here. We'll be back after this commercial.
You have to dissect the trade for us so we know what to do. Because see, when you all say 1%, 2%, I don't know what that means. I don't understand any of the percentage stuff, you guys. I need this. Congratulations, Ms. Vice. I'm getting ready to look over here at this chart. Okay, let me get me a snack. Ms. Vice, that's the way you do it. Make money first thing in the morning and get it out the way. $271.23. Oh, shucks. I don't know why the news is so quiet. Let me see. Mm. 271.17.
NYSE.
Welcome back. CNBC out with its new millionaire survey. Participants feeling bearish for
got me some
2023. Robert Frank joins us now with the results. Hi, Robert.
Morgan, millionaires now own 89% of all individually held stocks in the U.S. That's why we poll them, and they move markets. Right now, they are bearish. A majority of millionaire investors say stocks will be down double digits next year. That's according to the CNBC Millionaire Survey.
Yeah, we better hurry up and learn how to get
expect
these
the S&P
puts.
to drop 10% or more next year.
What?
The third expecting declines of 15% or more. Last time wealthy investors were this bearish was early 2008 during the financial crisis. Now, when asked about the biggest threat to their wealth, stocks ranked at the top for the first time in over a decade. Few plan to buy stocks next year, and they're holding a lot more cash. About half have more cash in their portfolio than they did last year. There's also an interesting optimism gap between younger and older millionaires. 81% of millennial millionaires expect their assets to be higher at the end of next year, while a majority of baby boomers say their assets will be lower or much lower.
Maybe I do need to buy me some puts for today.
Guys?
How does that compare? You know,
those three puts made
$106,
$140 already.
Yeah, so we've been doing this for 8 years, David, and again, this is by far the most bearish we've seen them. And you go back to similar questions and similar surveys all the way back to 2008. They're generally much more optimistic than retail investors and even institutional investors. So
my goodness.
Bearishness, given that they own 89% of individually held stocks, is worth noting.
Okay, yeah, I think I'm about to go buy me for real 2 or 3 puts for real for today.
As you can see, the market's
just hit a low.
deteriorated a bit. We came in this morning with the expectation perhaps that we would actually be higher. Mike Wilson, the well-known strategist at Morgan Stanley, had a thing or two to say about that, including talking about earnings being weak next year. That's taken us down. That's going to do it for us on Squawk on the Street. Tech Check starts now.
Happy Monday.
I'm sorry y'all to be eating on screen, but I'm hungry. I promise. Miss Vice and Seabar, y'all killing the game. We want to be down with you guys. We want to be making money in the morning and chilling in the afternoon. You guys watch your emails today for the Zoom link for Wednesday night study session. Seabar is going to show us a play, a higher probability play. So be on the lookout. I'll get that out today. I need to see what QQQ is doing. I'm coming out of paper trade, so that's why I took it off, you guys, because I got to log into my real account. I just purchased puts for the day. So I got them in paper money and real money. Okay, I purchased 3 puts, virtually the same trade, kind of, in paper money, and I purchased 3 puts in real money to let them ride for the day, or maybe for a minute. We'll see. So I purchased some time. Double digit down a lot, I know. Girl, I want in too. Me and you both. I want in too. Let's see what QQQ is doing. 270.58. 60, 270, 59, 270, 55. Let's see if she continues to sink for the rest of the day. We'll just see. We'll just wait and see. Frank, what you doing? You in a real trade or paper trade? Anybody in a trade or everybody done for the day? I'm the only one in. I don't know where the news went to. It's just us here.
It's good news. Going into next year, I think we see more of that.
So, Zach, I want to look at some good news that was just flat out good news. Last week, Oracle and Adobe reported earnings. You're pretty bullish on those stocks. What did you see in those reports that makes you bullish for them going forward? Was it the AAR? Was it some other demand number? Or was it the commentary on the calls?
Commentary incrementally getting better. ARR numbers have been improving. Taking a look at, other names, within our complex that we cover within big tech, Microsoft comes to the forefront. Being able to buy a big tech company like Microsoft, price earnings relative to growth, we think makes a lot of sense here. The Azure guide did disappoint investors most recently. This has been taken down. We think the cloud and underlying PC market have been so weak coming out of the pandemic. A lot of this is priced. We think the cloud and underlying Office 365 and Windows ecosystem will comprise a bigger price of the company going forward. And this should, spur growth and margins.
One contract
and we like it into
put up to 60
the next
bucks.
calendar
That's
year.
Good.
And we think that a lot of the valuations have come in such that
maybe everybody can leave out a winner today.
And risk reward starts to look much more compelling. And
I like those kind of days where everybody wins.
Beginning of this year, we just don't want to stay too negative in the tech complex at this point.
Zach Moellina, Wedbush, we really appreciate it. Thank you.
Thank you.
Meanwhile, Tesla shares opened higher this morning before selling off. That was on hopes CEO Elon Musk is going to step down as head of Twitter following a weekend policy snafu and a CEO recall poll that he called on himself with more than 17 million of the platform's users. He lost that poll. Steve Kovac joins us with the latest. Steve, this is weird.
This is incredibly weird. And no word yet, John, if Musk is going to make good on his word and step down as CEO of Twitter. But the results of his poll were clear. 17.5 million votes with more than 57% saying, yes, Musk should step down as CEO of Twitter. So why is he doing this? Well, he's already said he doesn't plan to run Twitter forever. Just last month, Musk testified in a hearing in a shareholders lawsuit challenging his compensation at Tesla and said he plans to find someone else to run the company in the longer term. Now, much of the questioning in that case focused on Musk's time spent at Twitter instead of Tesla. Meanwhile, Tesla shares are down about 30% since Musk took control of Twitter and over 50% since making his offer to buy the company in the spring. And just last week, he sold another $3.5 billion worth of shares that was presumably to fund Twitter operations as advertisers reportedly reduced or pull spending. And it comes after saying he wouldn't sell any more shares of Tesla. He's been saying that since April. The poll also capped a bunch of drama over the last few days, with Musk arbitrarily changing Twitter's rules to suspend some journalist accounts, only to reinstate them again. Over the weekend, he also changed the policy to suspend users who share links to rival social media platforms, only to cancel the rules several hours later after a bunch of blowback. Now, as far as who would run Twitter if Musk steps down, he said this weekend, no successor as of yet. But former T-Mobile CEO John Legere last month did offer to take the job. Musk shut him down, though, on Twitter, of course. Tesla shares are down a bit now, but they were up over 4% pre-market this morning when Musk's Twitter poll closed, guys.
Now, Snoop Dogg has also offered to take over. I don't believe Musk has said no to Snoop.
Yeah, I think Ledger has a better track record as a CEO than
But does he?
Snoop. Yes. Oh yeah, he got the Sprint deal done.
Snoop's got like an alcohol brand. I'm sure he has some type of
He can
cannabis brand.
multitask.
Yeah.
I mean, he can ride down the street smoking endo and sipping on
There
beer.
we go.
And Elon also multitasking, CEO of multiple companies. But I guess part of what this questions, though, Tesla hit a new 52-week low.
Just today, yeah.
Right? This morning. The more that goes down, the more pressure there is arguably on him to get Twitter right.
Right.
Because that's his source of funds to fix that. And if he's got to sell more Tesla to fix Twitter, it's still his responsibility, even if he's not CEO. Can he really step away?
Yeah, and also keep in mind, like this is so much of his wealth is tied up in Tesla, right? So that becomes his piggy bank as he makes all these weird actions, arbitrarily changing the rules, scaring off advertisers so they pause or just leave the platform completely. He has to keep going back to that piggy bank and selling. Or as we heard last week, reportedly, he's trying to find more investors to invest in the company at the same share price he bought it for, which we all know is overly inflated anyway.
Yeah, a lot of hand-wringing about what this means for Tesla. I think two things we're not thinking about. Number one, Tesla stock's also been impacted. A lot more competition in the EV space. A lot of different players coming in. And then also starting the new year, the Model Y and the Model 3, they're going to both be eligible for that tax credit in the Inflation Reduction Act. Certainly a tailwind for the stock. So a lot of this might be much ado about nothing if those Tesla sales and deliveries spike back up again.
I'll borrow an idea from our Phil LeBeau, though. He says that, not necessarily that these other EV challengers are a huge threat to Tesla just yet. Tesla has the manufacturing capacity that these guys just don't have yet. So Tesla does have an advantage there, at least according to our friend Phil. So,
well, the hits just keep coming.
Yes,
He's keeping it interesting.
And who knows what's going to happen? He could just change his mind, right now. So yeah, but as of right now, if he holds by his word, he will not be CEO much longer.
Well, it's the end of the year. We'll see. Go back. Thank you. And forget Twitter and bet on Meta, according to our next guest. We'll have more on the other social media names you should be watching here. Tech Check is just getting started. Don't go away.
Morning, Bumpy. Folks out here winning this morning. So we just waiting to see what everybody's doing. Bumpy, you paper trading today? Bumpy, don't forget to hit the like button on your way in or on your way out. Hit the button. Hola. Bumpy, you trading today? I got some QQQ something over here. We gonna see. We gonna see. We gonna see.
Five. We're going to spend a little more time on the drama in the social media world and the stock implications. Our next guest sees the turmoil at Twitter as, quote, a golden opportunity for Mark Zuckerberg to deprioritize his metaverse dreams and become investors' social media darling once again. That said, Meta itself might have other ideas, with the company's chief technology officer announcing this morning plans to continue devoting about 20% of overall costs and expenses to the Reality Labs division in 2023. Joining us now, Margins editor Ranjan Roy. Ranjan, for the past few trading days, people have been hoping,
we're paper trading too, so I need to click over and look at my paper trades. I bought 3 puts.
Why do you think he's
so
going to do that?
I'm gonna log out of my thing through Slim. I'm gonna have to start using the desktop version so I can toggle back and forth, because it's having to log out to go into another one. It's a nuisance. So I'm gonna log out and go over to my paper trade account. Let's see, what is this thing doing?
Today, Andrew Bosworth, their CTO, posted how it will still have spending around 18 to 20%. But I think this is a huge tell, because up until this point, there's never been a cap placed on the percentage of spending. It was still basically a blank check. This is the first time you are seeing some kind of admission that there is a limit to how much they will spend. Another thing.
But didn't they say we're going to spend before? They said we're going to spend about the same amount in 23 as we spent before. And here they are just reiterating that again. Now, I know Facebook has this history of sandbagging and then being able to pull back on expenses when they really have to. But isn't there the chance that the only thing that really gets them to do that is a huge economic deterioration, which ends up taking the stock price down further anyway?
No, I think you need to read into what Boz said when he said futuristic technology, because another big part of that is actually.
I'm going over to Thinkorswim Paper Money to check on the paper money trades. I brought 3 puts this morning. And so I'm going to go check them out and see how they are doing. Paper money. I think everybody, at least this morning, we did a hybrid. I started out, my first trades were paper money trades. And then, shoot, they look so good. I went and bought me 3 puts. So we'll see what happens. I'm checking on the paper money now to see what we're doing. Home screen. Ooh, some didn't go right. Some. Okay, let's see. QQQ. 3 puts. Okay, well, they're up $105. Are these the ones? Yeah, they're up 108. Let me see. Oh, yeah, that's all accounts. Okay. So the QQQ puts, I'll pull it up so you guys can see. The puts that I purchased are up $100. Let's see. Not bad. That's my paper money. My paper money puts. So let me pull it up. Share screen. So I purchased these 3 at 1046. So at 1046. And so less than an hour. Okay. So I don't know. I don't know how to figure out like percentage or any of that stuff. But let's look at the chart. As long as it continues to go down, we are in good shape. Okay. As long as this thing don't go. So QQQ is down. Keep going down. Bumpy says, you know, I'm going to trade today. I was listening to NPR, and the way they described it, everything is going to be somewhat bearish. Yeah, it's looking like it. QQQ has gone down. It's trading underneath. At least it's underneath the 50, the 200, and now it looks like it might be trying to get tangled up. But we're gonna see. Hopefully, it should just stay down low. 270. Maybe she'll get down to 269. That'd be nice. Get down under 270. That'd be nice to see. So let's see. I'll look at so far had I purchased those puts, the 3, I could be up like $135. 100. Yep. So we'll see. We'll see what they do. Hey, L, glad you made it back. Okay, so L, I don't know what everybody else is doing. Miss Vice made money this morning. I'm pretty sure C-Bar was profitable this morning. I am paper trading today as well as trading. And I purchased these 3 puts, and they're up $150, up to $160. I purchased them at 1046. And so you see what they're doing. Let me just look at this chart. Yeah, so it's down to 270.69. Okay. And I actually purchased 3 puts for myself, and I'm just going to let them cook for today and see what happens. See how low can we go today. But it looks like we're just going to go dink, dink, dink along that thing, I should not be saying along the thing. I think we're just going to trail along maybe the 9 and the 13. That's wishful. Well, we want everybody to get paid. I think everybody got puts that's trading over here. I think Frank had a put too on QQQ. So maybe we'll hear from Frank what's happening. Because he was profitable already. So he should definitely be profitable. You didn't miss anything. Miss Vice made big bucks this morning. C-Bar, I think she's in and out. And me and Frank are still holding on to puts for QQQ for today. We're just looking to see. I think Frank had one. I don't know. And then some of us are paper trading at the same time too. So this is what you're looking at, my paper trading account. And let's see, what did they do so far? So far in paper trading, I made $126. We'll see. And then I got to go over, I have to log out of paper trading to log in to see, what mine are actually doing. Because that's how you do it. At least I think I have to start doing this on the desktop version, because somebody said you can toggle between the desktop version. You can toggle between paper trading and your live account. So I'm going to need to do that, because this is for the birds. Okay, what happened to our news? So 271.
In our view, AWS definitely takes advantage of their, it used to be and call it still is 7-5-7 year head start of the space. So
yeah,
I do
multi-cloud. Multi-cloud also often means around 80% AWS and 20% something else. But at the same time,
270.
from the likes of MongoDB this earnings season, we've seen this strength in best of breed. We've even seen strength in Oracle when it comes to follow-on effects from public cloud, which you might not expect, because when we talk about hyperscalers, megascale, we're usually talking about three other names that aren't Oracle. So is there another side to this where perhaps the likes of Amazon, Microsoft, Google, Alphabet don't benefit disproportionately in this environment compared to some of the application powers?
So you didn't miss
your,
anything today. You didn't miss
Adobe's,
much. Okay.
Oracle's, even smaller names like MongoDB.
As 8.7, 20% profit on your order.
With the Pentagon
Yes.
awarding the JWCC, which is the incarnation of Jedi. And so when
Yes, I think so. Let me pull it up.
The most products available across the broader spectrum of industries that they support. And that 5 to 7 year head start, John, I can't underscore
Can you see
enough
that?
how important
C-bar?
that is in our view. In terms
So
of
I've got it set at
AWS solidifying their
20%,
share.
and that's
That doesn't mean it's not competitive. That doesn't mean that
8.7 on the
experimental
limit.
budgets within
Yeah.
technology might be pulled back a little bit. But what
Is
it
that
does
what you
in our view
mean?
is that,
I don't know if you can
AWS
see
has
it,
many
but wait a
more
minute.
different
Let me
products
see
to
if I
offer
can pull it up.
while we're
Because
in a
that box
multi-cloud
probably
era,
doesn't
of course,
pop up
that
for you to
80%
see.
stayed
No.
around 80%
Oh, that's
grows,
what it is.
over time with budgets.
You
And so
can't
this is a
see
time
this
really,
box.
I mean, it's sort of fascinating.
So
We saw what
yes,
happened
where
with
it
the
says
pandemic,
trigger
essentially V
plus
shaped
20%,
format, in terms of demand
it
decline.
says
Maybe we don't see a V this time
8.70
around, but I
limit.
do think you see some sort of continue on the trend of just newer technologies and adoption over time.
So,
Right now, people are hoping for a W, something like that. Ron Josie, thank you.
Yeah, John.
Thank you, guys.
One other thing I watched, talking about Oracle really quick. Their on-premise
C-bar,
revenue beat estimates
yes.
very strongly by about 200 million. So that cloud transition story, as we see an IT spending slowdown, may not be that direct line that people thought it was.
But they've gotten the benefit from their integrated strategy, right? Being able to work on the hardware that runs Oracle better.
Right.
That's helped them with the margins as well. And that's part of their cloud play, which is interesting. We talk about AWS and their custom chip play. Oracle's got something similar.
Yeah, very similar, very similar. But when we're talking about that cloud transition, IT spending slowdown.
So I don't know what those
values
values mean. That's where I'm tripped up.
Forward, I'll look at spending on money into that cloud transition.
Is 8.
All right, Salesforce CEO Mark Benioff sounding the alarm when it comes
Profit
to productivity
on your order, yes.
CNBC.
I just don't know. So what does that mean in terms of what does the stock price have to be? I don't understand any of that math. I need somebody to help me demystify that math because I don't know that. And let me look at QQ. Yep, that's where I'm stuck. And I wish I could show you that box. Let me see. I think I can, C-bar. Hold tight. Let me go back to it. I think I know how to display that box. Let's see. Oh, it closes if I do that. Okay. But yeah, that's what it says. think it's time for some. We've been not starting no consolidating, no sideways shenanigans. Okay, so let's see, what have we made? Okay, so 159, 160 on those 3 puts that I purchased. And so I don't know, can you see it here? Oh, you can see what the order is, the average price. Let's see. I think I'm starting to see what some of these numbers mean, C-Bar, but I really don't know.
I'm Contessa Brewer with your CNBC News update. Now, home builder sentiment is down for the 12th straight month as higher mortgage rates and a weaker economy hit the housing market. The monthly index from the National Association of Home Builders is now at 31. That's the lowest reading in more than 10 years. The U.S. government has made a roughly $4 billion windfall on sales of crude oil from the Strategic Petroleum Reserve since March. The government sold 180 million barrels at an average of $96.25 per barrel, compared to the current price in the $75 range. Shares of Mesa Air Group were up more than 10% today. Mesa's ending its contract with American Airlines, where it had been operating the carrier's American Eagle regional service, and now it's moving its jets to United Airlines, where they'll fly under United's.
I'm going to check out my real account. This talking back and forth is no fun. No fun, no fun, no fun. Just waiting for, okay. So let's go get over here and look at some real money. All right, good for us. Okay, QQQ. Ooh. Okay. All right, QQQ going down. If we go under 270, y'all, this is a good day. I had the 3 puts. So everybody making money today. Hallelujah. I didn't see that coming today. I was going to lay low, take it easy. $20. I'm just looking, y'all. QQQ is steady dropping, and I'm loving it. I'm loving every moment of it. I love it if she could get under 270. That would be so beautiful. Somewhere down in the 269 range. That would be beautiful. Frank, I hope you're having a good morning with your puts. Hey, y'all. You got out with $90 profit paper in the second half of the day. Hey, Diane. Hi, sweetie. Hey, KB. That's my kindergarten bestie, y'all. Y'all don't know kindergarten besties like I know kindergarten besties. Hey, sweetie. So we're trading. That's what we're doing, live trading. Let me pull this stuff up so y'all can see. QQQ keeps going down. And so let me check on this money one more time. Frank got out. He took his profits. I think I might do the same. I don't know. I think it's going to go down. I think if it could go under 270, if it goes down to 269, if it takes 269, yeah, I think we might be in for it for today because it's just hitting the streets. So let me show y'all what I'm looking at, just so y'all can see what I see. Let me see if I can pull this screen up. Okay, so this is what I'm looking at. So QQQ is, doing her whole little shimmy down the street thing, and I'm loving it. Let me see. I'm gonna look on the 5-minute. I just want to see. Yeah, I'm gonna let it cook for a bit, y'all. I don't want to be greedy, but anyway. So Frank, did you cash out your? I'm trying to fix my sound. Hopefully you can hear me. Everybody else, let me know if you can hear or not. You are welcome, Diane. Diane has been my friend since kindergarten. Seriously, since we were 5 years old. We used to share candy, our penny candy. That was my buddy and still is. Oh my gosh. Are you swinging today? What strike did you buy? Let me just show you. You talking about my paper trade, C-Bar, or my real life trade? Hold tight. Let me disconnect you and I'll tell you what my real life trade is. My paper trade is making more money. My paper trade is making more money than my whatchamajiggy. So hold on. Let me disconnect this because I got to go look and see. And I'll tell you where I am with mine. Okay, I'm up about $85, $87 with my 93 is doing this thing. Hold tight, y'all. Shoot. As long as she keeps dropping 270. I'm telling you, if QQQ goes under 270, y'all, we off to the races. It's 270.09. She'd like to take her time shimmying down, but she's going to shimmy. So the other puts that I had, I think they might be closer to $200, the paper ones, because I got in earlier. So they might be closer to 200. I have to go look and see. But, I got to toggle back and forth. So once I'm out of paper trading, I need to watch this real money because I do want to get out with a decent profit. And so it's over $100 now. So yeah, I think it's definitely doable to make $100 a day for at least the way I'm trading. This my little trend trade thing. I know how to find a trend and ride it. So that I think that's so doable for anybody who's joining. You could, Now, C-Bar, you were asking me some other questions. I'm watching this. So I'm watching so closely because it's right at 2. I needed to just go into 269. And I'm telling you, it's toying right around there. There it is. It popped 269. If we could stay under 269, y'all, we off to the races. Ooh, that looks good. It's 269.91. Okay. So yeah, that's a good day, y'all. This is a very good day. It's a good day for me. She's down to 269.81, 76. Hey, it's about time, y'all, because I was starting to doubt my own gangster. I was really having, getting great trades. And I told y'all what happened. My confidence, I think I shook. And you know what happens after that, you second guess everything. It just threw me off. So, you know, and I'm not saying one good trading day, but it sure is nice to have a good trading day. So yes, I need this good trading day too. So we're still hitting new lows, 269.66. Okay, let me get over here and see what y'all talking about. So I'm just watching. I'm not going to swing today. I think I'm going to take it. I'm going to take the profits and get out of here. C-Bar, you're up to 92. That's what I'm talking about. So C-Bar was profitable. Frank was profitable. Miss Vice do big bucks. You know, I do living expenses. I do. We just want to go to the beach and have ice cream and want to get massages and not worry. That's the kind of trading I'm doing. But QQQ is still doing her thing. She is still shimmying down to the ground. So I'm just going to keep watching because it's back up over to, it's right around the 269. She was down to 269.66. So I just want to watch over here. I want to look at my time and sales because I don't see any more of those 269s on this time and sales. I may need to come out of here and don't be greedy like everybody says. Okay, I see some 269 still in the, wait a minute. I saw some 269s. Okay, so when it get back down under 269, I think I may come. Yes, 269.92. I may come out of here. 269. Oh, wait a minute. Well, I see 269.70s. Oh, we might chill for a bit. Okay. 269. It's still going down. Okay. So you all know what I'm doing. I'm just waiting to take some of the profits. Excellent. Congratulations to everyone. Yeah. Today, I'm better than doubt. I know. But I lost some money. That'll mess you up. I wasn't paying attention. It was totally on me. It had nothing to do with the trade and the process. It was me. And I saw it. I knew when I did it, it was wrong, but I did it anyway. And so now I'm just going to slowly build back, you know, and be responsible, be respectful of the game, and just see. So let me see where I am. I'm gonna let this thing. I think it's going to continue down for the day. I don't see it turning around. QQQ is now down 1.5%. And let me look at this market watch. Everybody is red. It's red. So I think I can hang here at 270 as long as it doesn't go too far above 270. And it doesn't look like it. 270.15, 270.17. I don't like any of that though. But we got a bunch of 269s in here too. So we'll see. As long as it stays underneath these SMAs. Let me look down on the 3. I notice when I pull out, you all, I don't look down. I like looking on the larger time frame. So I don't, oh shoot, that's like a double bottom. Hey. If I did not know these, if I didn't see these values coming up, I would be like, it's time to go. 270. Is there some 269s coming? 269. 269.94. I'm just trying to see what's happening. 269. 73. Okay. It gets back down there. I saw even some 68s. Okay. I think once it gets, if it hits 269, anything, 60, anything, y'all, I'm gonna cash out. I'm good. I'm pleased. I'm pleased with the profits. I'm pleased. and I will leave one runner. That's what I'll do. I'll cash out 2 and leave a runner. I'm going to wait till it gets down back under 269. And once it gets back down under 269, then I will prep to sell 2. I will sell 2 contracts. 269. 77. 269. 75. We'll see. 269. I'm trying to see the lowest I saw for 269. We'll see. We will see, peeps. We will see. We will see. So that's what we're doing. We sitting here mining for money, girl. We just looking and picking up the pennies. That's it. That's all. And so it's a viable way, sis. Diane, anybody can learn this. Y'all, I've only been doing it 4 months. And so if I can do it, anybody can do it. Anybody can learn this, how to do this. How in the heck? 270, 46. You better get back down there. $269.70. Okay. Anyway, so yeah, everybody made money today. Everybody got profitable. We were at 260, at 270.69. Where are we now? 270.44. 269 and some change. Okay, so yeah, if it as soon as it gets back down to 269, whatever, I'm gonna bail. I learned my lesson. I think I'm gonna try to take this party outside, y'all. We're gonna see, because I've been cooped up in the house. Y'all know before I was going live, I would be everywhere. So let's see if I can go outside, if my internet will hold up. If it's not too loud, because it's loud in Mexico. Let's see. It's so nice. Oh, it feels so nice. Yeah, I could do this a little longer if I could sit outside. Lord, yes. Okay, this helps. Being outside helps. Being outside helps me do this a little longer. Okay, so let me turn on the news so y'all can hear what's happening. And I'm checking on money. Chart 270.45. We need to get down to about $1, and we're good to go. I should be down there with my neighbors. But I know for sure my internet ain't that good. That I know for a fact. Okay, so I'm watching, y'all. I'm watching. I'm waiting for it to get under 269. We are 270.53. I think I see some 269s over here in my time and sales. 270. Ooh, shucks. All I see are 270s. Oh, Lord. 270. 47. 269. Let's go. 46. 37. 36, 31. Okay. 27.
Stopping another top pick this
Okay.
hour. Cowen calling Take-Two their best idea in gaming for 2023 as they look for more details
going down.
on the release, a highly anticipated release of Grand Theft Auto 6, and forecast better growth across mobile gaming in the next year. With us now, Cowen Managing Director Doug Kreutz. He joins
I'm
us
gonna be
with
watching to see
because
because it might not get to 269, but it will
Doug,
get down
great
to
have you.
270.
So how
And
much of the
that's
Take-Two
still
story is
good.
really levered to Grand Theft Auto, whether it be 6 or they're bringing back the original trilogy
That's good.
or any other iterations?
Well, GTA 6 is going to be very important for them. We expect it to launch in calendar 2024. Obviously, the game has always sold millions of units. The GTA 5 has sold certainly over 150 million to date. It might even be more than that. But as importantly, GTA Online has been a big money earner for them since GTA 5 came out 9 years ago. Does about $500 million a year in revenue. We think that the GTA 6 launch could take that up to a new level. Certainly, there's been a lot of innovation in online service gaming since GTA 5 came out. And when you look at other games like FIFA and Call of Duty, those are both north of $1 billion a year in live service revenue. We think GTA could do the same.
Yeah, you're hitting on one of my questions. FIFA, obviously, we just had the World Cup final yesterday. A lot of excitement around soccer right now. And in general, as we see big trends in sports, I would think that there's more interest in sports games. How does that impact the Take-Two story, but the broader gaming story as well?
Yeah, they have the premier NBA franchise, NBA 2K. It has done very well for a long time. We expect it to continue to do well. They also have a mobile football manager game, which is not huge for them, but it has been a nice performer, and we think that could benefit from FIFA a bit.
Doug, the digital ads market has been rough. So I wonder what that means for King and Zynga, which were acquired by Take-Two and Activision Blizzard. Like in the last quarter, it seemed like one did better than the other. Are they both headed for tougher times in 23, or does that mobile gaming business, casual gaming business stabilize?
Yeah, I think
everybody's down.
If you're talking about the advertising side, there's sort of two prongs to what's going on. One is that there's just been a general ad slowdown.
If you wanted to get a call, that's where you get a call
everybody.
on Pepsi.
Secondly, I think on digital specifically, you've seen social networks lose a lot of share because of Apple's IDFA changes. That probably on net has been good for the mobile gaming ad networks. Because people have gone away from Facebook and they've had to look for other ways to advertise, and I think the mobile games have benefited from that.
But is that better for the gaming companies, or is it better for, say, the AppLovins and the Unities of the world?
Well, it's complicated, right? Because on the one hand, I think it's good for their advertising business, just full stop. But they also use Facebook to advertise, to attract new users to their games, to generate revenue through in-app purchases. And that part of the business has been sort of undergoing a realignment over the last 12, 15, 18 months. I think we're out the back end of it now, but it has contributed to some of the sluggishness in the sector that we think will revert and go back to growth in 2023.
So, Doug, one last question. I mean, I'm sure a lot of people ask you about this when it comes to the long-term view on these video game stocks. The metaverse, is that a threat to a Take-Two? Is that a threat to some of these other names? And the fact that we see a company like Facebook spending 20%, to try to build into the metaverse, how big of a long-term risk is that to a Take-Two and some of these other video game makers?
Yeah, so I would actually say if there's any platform out there that's closest in sort of philosophy and experience to what the metaverse, if we talk about Ready Player One, it's actually Grand Theft Auto Online. You can go in there and you can be anyone and you can do anything, and there isn't somebody moderating your content for the most part. It's a very rich experience, which is why it's so popular. And I think, anybody who wants to build a metaverse, no matter how well they do on the tech side, if it isn't populated with great content, no one's going to want to show up. And so from that perspective, even if somebody else does come along with a technology for the metaverse that's really great, I believe that Take-Two's content is going to be in demand there. The gaming companies have always been somewhat platform agnostic because their content is valuable wherever you send it.
Yeah, good point there. Doug, thank you very much. We appreciate the insight.
Thank you.
You want more tech check this holiday season? Of course, it's like a cowbell. You always want more. You can follow and subscribe to our podcast.
I'm just looking for QQQ to get under 269. Anywhere under 269, I think I'm on bail.
We're back.
It's coming down. 24. Get under there. 29.
It's rated PG.
Back. Let's get a check on the markets. The major indices
I guess
all
so.
lower. The Dow just by 0.25%. The S&P down a little bit more than 0.5%. The Nasdaq faring worst of all, 1.25%.
See, Barcy, I don't know that. I need to know that too.
Robinhood, Coinbase, Affirm, all those consumer-leaning, retail investor-leading names, those are all down.
Okay. I'm going to go over here and check because I may be getting out of this trade.
Yeah, a lot of pressure on the market today. All right, one more thing before we go. Uber drivers
I'm
are
waiting
striking
for it to drop
24
below
hours in New York City
270
today and calling
again.
on all passengers to boycott the ride service as well. The protest is coming on the heels of a judge blocking wage increases for drivers after the New York Taxi Workers Alliance voted earlier this year to increase both fares and wages for drivers in the city. And Uber took legal action to block the scheduled 11% pay raise, saying, quote, drivers do critical work and deserve to be paid fairly, but rates should be calculated in a way that is transparent, consistent, and predictable.
Does this just mean everybody's going to use Lyft?
Still here.
I think there's a good chance.
I mean, it's the same drivers too, right? So
for the most, you know, if you get in most of them, they have both stickers in there.
Right.
A lot of times they're switching back and forth through apps. I think the real question is, where is the limit on paying for an Uber? Uber prices have jumped dramatically. Their reliability, I have to say, has declined at about the same level. So where's the point where we all just say, hey, maybe I jump back into that cab or I just drive myself?
You and I don't just jump into cabs, Frank. You know, hailing a cab is not, that was part of the whole, right?
I mean, hypothetically, yes.
No, I'm not talking hypothetical. Well, let's go back to a check on the market, since people might not understand that one. It's easier to hail it on the app sometimes. But maybe the cab drivers are feeling better now with the threat of Uber and Lyft. Lower as we head to the half, and the half starts now. Thanks for being with me, Frank.
Thank you, John.
With Brian Sullivan.
Oh, left me hanging.
And welcome to the halftime report, everybody. We're never going to leave you hanging. I'm Brian Sullivan, in for Scott Wapner, and tech getting hung out to dry, getting wrecked again, building on last week's big losses. Technology, if you're not paying attention, is on pace for its worst year since 2008. Nearly 90% of technology stocks, they're down on the year. Question is, how much more downside or maybe upside is there left?
Yeah, I guess that is my profit target. I don't know, Steve Barr.
Surat Sethi, Joe Terranova, and Jim Leventhal. Before we get to our outstanding group of traders today,
I'm gonna take a picture of it and post it, and then we can look at it. Maybe we can look at it together.
Last week's big losses. The NASDAQ continues to be the big drag. The NASDAQ's down 1.3%. The Dow is down 80, but holding up relatively much better than technology. Just down 1/4%. The 10-year yield.
Yeah, tech is taking a beating, but I need them to really get beat up.
NASDAQ down, small caps down exactly 1%. Everybody, hope to see you on set here in just a couple of days. You could probably figure out what's going on there. But Jim, let's start off with you and these macro markets. Technology, I mean, just can't get out of its own way. How much of this is fundamental fear about next year versus maybe, hey, let's do a little tax loss selling ahead of the new year and cut down on that giant check many of our viewers write to Uncle Sam every 12 months?
Well, it could be a little bit of all of the above. First off, I'm not going to try to give you a fist bump. I'm not going to try to give technology stocks a fist bump either. I've been underweight tech for most of the year. I think there's something to be said looking at the Dow versus, say, the NASDAQ, that this is a market where leadership is transitioning and has been all year from growth to value. I think that's likely to continue. Now, this does not mean that you should not own any tech whatsoever. It does mean, however, that you should be selective. I tend to hew more towards the value-oriented side of technology. So things like the semis, things like Cisco Systems, and where I get into a higher multiple, it's really only the FANG names, Apple, Microsoft, Google, those sorts of things. Because here's the two things you got to realize. One, there's still a valuation difference, technology versus other value stocks. And look, at the end of the day, they're all stocks. You should pay a certain amount for growth. It doesn't matter whether it's coming from Apple or whether it's coming from Caterpillar. The other thing is when you look forward over the next couple of years, there's going to be decent returns from technology. Again, don't sell it all, but you're likely to get better returns from the cyclical sectors because that's where the earnings growth is going to be on the back of supply chain onshoring and infrastructure spending.
We're just
So
market
this is
watching
just all
here.
about
Just market
leadership
watching.
transition. It's been going on all year.
Sharing tips.
Yeah, it has been
Helping
going
each
on,
other through the
Shannon.
trading day. That's all.
And who can blame
Everybody
our
trying to
viewers
go
and
home
listeners for kind of
profitable.
waiting for
Lord
the tech
knows I
turnaround?
am.
Well, technology always
I've got
wins, so eventually
three.
it's
I'm
going to
paper
turn around.
trading and
You've been
regular
saying
trading.
that now,
I
not
got
you,
three.
but the viewers have been saying that with
Three
their
puts in
investment, Shannon,
paper
for about
trading.
11
Three
months
puts
now. Do you see
for
any fundamental
real
shift
money.
coming?
Real money trading.
Not right away. It's really hard to think about it in terms of, are we looking out a year, 2 years, 3 years? Are we looking over the course of the next couple of quarters? Because I don't think that we're going to see, particularly in sentiment, a shift towards technology over the next couple of quarters. We are going to be in an environment where, we're going to have some continued concerns about the Fed. In terms of how many additional rate hikes that they're going to put into place in the first quarter. These stocks, despite the significant declines that they've experienced this year, and we've all seen it, particularly the super high valuation, low profitability or no profitability ones, they have experienced significant declines, but the valuations are still relative to the S&P 500 expensive, high. The multiples are going to continue to come down. They're going to be pressured. I think the thing to think about is that anchoring yourself to 2018 or 2019 in terms of, the overall landscape is going to be incredibly challenging. Now, there could be some catalysts for technology in the second half of next year, namely this recession that obviously we're all concerned about. That's what the markets are trading on right now. And if you start to see significant economic contraction and the Fed has to adjust their rate hike policy and perhaps even become more accommodative, that could give a bit of a boost to technology stocks. The other thing to think about, Brian, and it's really important, is the dollar. if we do see a weaker dollar next year, that certainly is going to help tack on the bottom line. But I think we're several quarters out from that. And I think for the time being, we're going to continue to struggle with, again, the fact that these stocks are just more expensive.
Joe, it seems like it's always darkest just before the dawn, does it not? Right. And maybe that applies to markets. Dan Ives of Wedbush, he's out with a macro call saying he thinks we're going to see a 20% jump for technology next year. Quote, we believe the overall tech sector will be up roughly 20% from current levels. Part of that is because it has just been so beaten up and so under-owned. Everybody also seems very bearish. Are you buying the 20%, Joe?
Well, I think what has to happen in that case is that the Federal Reserve has to come forth with, 25 basis points in early February, maybe 25 after that, and then pause. That's the way that you get long duration assets to begin to rally towards 20%. But I think, Brian, before we could think about, well, are we going to get 20% in 2023? Let's kind of explain to the viewers the dynamic of the moment. What's going on right now? Why are stocks under pressure, and what does it mean when the calendar flips into January of 2023? You asked, what brings a potential fundamental shift? I'm not sure you get a fundamental shift, but when you walk into the new year, the tax loss selling that you referenced, that abates, and the possibility exists that you will have a lift in equities markets as cash returns into that equity market going into earnings. In the moment of what's occurring right now, you had a significant technical reversal last week. It's called an outside down week. Adding upon that, you've got Apple, which has broken below its October and November lows, and it's right now threatening its June lows at 129.04. It's taking all of mega cap equities down with it. And then the last piece of this selling pressure that we're seeing here in the moment is that there is a significant institutional rebalance that is unfolding right now. Let's remember, this quarter equities are higher. We haven't had a higher quarter for equities in quite some time. You're seeing a reallocation because that's what the institutional mandate dictates out of equities into bonds. So collectively, all of that's unfolding, and it's giving this appearance that the Santa Claus rally is nowhere in sight.
That's it.
No
Sarat,
Santa
normally
Claus
we'd say,
rally?
listen, who cares? December 31st, January 1st, really no difference, except there is because of what Joe referenced, which is number one, tax loss selling, which, by the way, is probably a lot bigger than we think. And you've got this rebalancing going on, the NASDAQ 100 getting rebalanced today, as a matter of fact. Do you believe there will be a change in when the years change or not?
So I would add one more thing, Brian. I'd also call window dressing. A lot of managers don't want to end the year with what they would call dogs in their portfolio, just because they don't want questions when they do their reviews in January and February. So you've got that as well, going into kind of the negative selling pressure. I don't think we're going to get this reversal in January. I think the market's really looking forward and really, I would say, foreshadowing or discounting what the market thinks is a lower earnings trajectory. And that's kind of what you're seeing in some of these high beta stocks that have, potential of earnings downdrafts.
All right,
so
John,
that's kind of
watch
what you're seeing, kind of
QQQ.
as Jim referenced,
Here I go,
money
get
going
me something
into
to drink.
cyclicals and even some of the defensives in advance of that. Now, the question will be, we haven't seen that,
Keep my
but
spot.
all the pundits are calling for, huge earnings estimates cuts. The question is where it's going to be. Tech's going to be one of the big ones, but that is all going to be demand driven. And then, the rest of the sectors, who's going to have the heaviest kind of downdraft in their earnings.
Well, Sarat, I'll come back to you. Answer your own question. I mean, are you that concerned? And I'm talking about big tech, the Apples, the Microsofts, the Amazons, the Googles, the Alphabets, whatever Salesforces of the world. Are you that concerned about their earnings and a big drop heading into next year?
I'm not that concerned about their earnings. What I am concerned about is the price you pay for them. That's the multiple contraction that you're seeing there is kind of similar to what we saw when rates go up. And it's just a natural thing. So unless their earnings, we were paying up for these companies because earnings were growing. Even if earnings stay the same or they grow up single digits, you're not going to be paying 20 plus for these earnings when you can get the same thing elsewhere, whether it's in cyclicals or some of the other sectors, or where you also have the alternative, which is you can get bonds at 4 to 6% in the short term. So I think it's the price you're going to pay for these future earnings. That's what's concerning me. And for those, who are overweight some of these stocks, that's going to be some more bleeding because people really haven't cut back some of these stocks and they've let them kind of be outsized position. I mean, Apple's 6% of the S&P, Microsoft's close to 5%. So if you've been overweight those, you're going to feel a lot more pain than you did in the past.
Although I will say, Jim, the technology is now about 30% of the S&P 1500, down about 8% in a couple of years. It makes sense. As the stock prices come down, you're going to see relative overweighting on something else. But there's really two things going on here, I think. A lot of our viewers and listeners, they might own Apple, Amazon, and all Microsoft just because they own the QQQ or some index funds, or they own them as individual equities. Do we have to think about them differently based on how we own them?
Well, look, I think so. And, the fact that when we put up the indices on this show, we put up the Dow, we put up the S&P 500, both diversified indices, and then we put up the NASDAQ, which is very far from a diversified index. And I'm going to say it's not that different than if we put up, say, the XLI, the industrial sector ETF, as a benchmark index. And the point that I'm driving at here, and I'm alluding to your question, Brian, is it's just a sector. It's just a GICS industry sector, technology. And this is a little bit what Sarat was saying as well. When you're an investor and you're picking stocks to buy, you're picking the price that you're going to pay for earnings now and in the future. That growth rate in earnings is what you should pay for, and you should be ambivalent to whether it's a technology stock or an industrial or a healthcare or whatever. When you look at the PEG ratios, price to earnings to growth ratios, they are still much higher in technology than anywhere else. So to your question, yes, we should stop looking at technology as something different as an industry, different from the rest of the industries. It isn't. It's just an industry.
Well,
you're just paying for earnings.
The sun is just a star, but it keeps us alive, Jim. I mean, technology has been where everybody's made their money in the last 10 to 20 years.
Brian, I'm so glad you said that because and you know this, if you go back to last cycle highs going back for 50 years, if you look at the stocks that were in the leaderboard, like the top 5-6 stocks at the market peak, very seldom do those stocks carry over as leadership in the next economic cycle. There are some exceptions. Microsoft appears quite often. But frankly, you go back 20 years ago, GE was in the top list. Intel was in the top list. They're not there now. Leadership transition happens in every bear market. That's what's happening.
Fair enough. But Shannon, you own a bunch of these names. You own Apple, you own Amazon, you own Microsoft, Google, / Alphabet. I would imagine, yes, it's, quote, just a sector to Jim's point. But this is where the growth, not just in the market, has come from. This is where the American economy has come from in the last 20 years. What is it? I just can't quit you, right? It's a hard sector to leave.
Yeah, and I think that's why it has traded at a premium. But I think Jim made a great point. And although we are, we have a strong allocation in technology, we look at technology across all industries and all sectors. Just because we're questioning, if you will, the price at which we're willing to pay for these future earnings now, doesn't mean that there isn't going to be innovation and disruption. And I would say, so
6-2.
All right, down day for the overall markets. NASDAQ had hit the most, down 1%. But let's move on and talk energy. Energy is the third worst sector so far this month, down 7% as a group. But come on. It's been a great year, up about 50% for energy as a whole. Many stocks have done better than that. And Wall Street is not done yet with all the stocks. Example, Piper Sandler naming ExxonMobil its top pick in the group. Jim, you own ExxonMobil. How are you positioning heading into the new year? Going to trim or just kind of ride this out or maybe add more?
Keep riding its big position. And I've got other energy exposure as well. Brian, I know you know this industry well. So when I say I own Transocean, you know I've got a big beta to energy here. But the basic gist of it is the supply-demand imbalance is going to stay. Nobody's really talking about the fact that last week there was an announcement, a tender offer for additions to the Strategic Petroleum Reserve. So forget the supply coming out of the SPR. Now they're going to be buying into it just as China ramps up. Russia and Ukraine isn't getting any better. So this is a place to be for the foreseeable future.
Yeah, I mean, and that's really, now we got to start refilling the SPR. Although the White House said they're going to be tactical about it, that it's not going to be some great thing, that maybe going to drive up prices. Might have made some money on that trade. Shannon, you got a viewpoint on energy at all, the EOGs of the world?
Yeah, we own EOG and Valero, and really we've wanted to be very selective in terms of our exposure. But I think you make a great point about the fact that this supply situation is not going to be resolved anytime soon. And so therefore, while we would anticipate with expectations of slower economic growth next year that we would see concerns about lower demand, this supply situation is going to keep a floor on prices. And apparently this divergence between energy prices and how the stocks are performing is likely to continue, just given that supply dynamic into the first half of next year.
That's it. And Joe, you look at a name like an Occidental, doubled this year. I'm not sure that anybody's calling for doubling in Oxy next year. I believe it's in the Joe T. How much more earnings growth and thus stock price appreciation do you think are left in these names, which were literally left for dead a couple of years ago?
All right, so here's how I think about it. Is 2023 going to be the year in which energy is the leading sector once again? Logically, you'd look at the 2022 and 2021 leadership from energy and say, okay, that's probably not going to be the number one sector. So let's kind of put that to the side. In the case of Oxy, by the way, remember, Oxy and Diamondback have the largest short interest of the S&P 500 energy companies. But I think when Jimmy points out that we're going to begin to refill the SPR, let's first of all put numbers on it. 3 million barrels out of the 180 million barrels that we took out is not a lot. But I think, Brian, you might agree with this. I think maybe the signal, the message is even more important. It's really to OPEC in saying you could take us at our word that we are going to support oil prices if they move lower. And therefore, you should work with us in a coordinated effort in terms of what the supply picture looks like globally. And then I think beyond there, you have to look at the executive management of energy companies right now. And there is a direct correlation between their compensation and the goals that have been introduced for ESG. The goals are no longer about production levels. The goals are about ESG themselves. So I think all these conditions are suggestive of, yes, you want to, as Jimmy said and Shannon said, you want to stay with exposure to energy. It's important to do. I'm not smart enough to tell you if it's going to be the leading sector in 2023, but I think you have to be there for the reasons I've given.
I guess the question that I would have, Sarat, and I'm going to ask you the question that I would have, which is, can oil stocks keep going up even if the price of oil stays flat?
So I think one of the things that you need to look at is the balance sheets of a lot of these companies, Brian. In the past, I'm talking more than 3-5 years ago, what they were doing was they would take the cash and keep on expanding. But you haven't seen that. And that's why you've seen
all this discussion between the administration and the oil companies, they've had real financial discipline here. So they've been increasing dividends, they've been returning cash to investors. And I think going forward, you've got this game going on, not just with the suppliers that we're talking about in public companies, but you've also got OPEC, who's basically publicly stated that we will cut when we have to. So I do think you'll see a support to the oil price. Now, all bets are off if we go into a huge recession, and that's kind of maybe what the market's kind of saying to you right now. But having said that, you've got, as Jim said, China kind of starting to ramp back up, and you've got the Russian issue. So I do think you have support level, and these companies can make real money at $50 to $60. So you will see that, and that's basically what they're going to be saying too. Is like, look, you had wanted us to go produce more oil. Look what's going to happen. So I think you'll get some support at that point. There we go. Srot, everybody, good discussion on energy. By the way, the next OPEC meeting is a couple of weeks. We will see how they react to oil prices that keep going down. All right, that's the past. Coming up, we are going to hit some of the biggest specific questions about a trade and an investment you have made. By the way, to reach us for future segments, send an email to askhalftime@cnbc.com or tweet at us as well. We'll be right back.
NBC.
Welcome back to the Halftime Report. I'm Bertha Coombs, and here's our CNBC News update at this hour. Russia reportedly unleashing another 35 kamikaze drones on Ukraine in the early hours of Monday morning. The explosions damaging critical infrastructure and in and around the Ukraine capital. The assault marks Russia's third air attack on Kyiv in the past 6 days. This comes as Russian President Vladimir Putin arrives in Belarus to meet the leaders of his ex-Soviet ally. Amber Heard settling her defamation case against ex-husband Johnny Depp. In an Instagram statement, the 36-year-old actress called the decision to settle, quote, very difficult, and added that it followed, quote, a great deal of deliberation. Terms of the settlement are not immediately clear, as this follows a weeks-long televised trial that began back in April. And hundreds of New York City Uber and Lyft drivers organizing a caravan over the Brooklyn Bridge. The demonstration comes in response to a judge halting a scheduled city-ordered pay raise. The protest was organized by the Independent Drivers Guild, which represents more than 80,000 New York City ride app drivers. Talk about gridlock alert, Brian. Back over to you.
Oh, during the holidays, it's going to be great. Bertha, I'll see you on the city bike. Thank you. By the way, fastest way to get around, let's be honest. All right. It is time now for some big calls of the
everybody.
day.
I'm not sure who's here
today.
with
Let's
me,
begin
but
in the
I'm just
skies.
watching
Delta
QQQ.
Airlines named top 2023 pick in the group at Raymond James. They reiterated the strong buy.
Everybody's trying to get paid
$52
today.
target, as you think, Jim, they would do, given it's their top pick. You own it. Your take.
Yeah, well, look, the analyst community thinks that Delta is going to earn $5 a share next year, roughly. So $52 is roughly 10 times. Okay, so that's fine. That makes sense. For you as an investor listening to me or anyone else out there, you have to answer one of two questions, and you can't say yes to both of them. Okay. Either the Fed is going to go to 5.1% on its peak Fed fund rates, or Delta is going to earn $5 a share next year. Both can't be true. I own Delta, so that tells you which I think is true.
Do we need to? Are you asking me the question, Jim? Are you gonna put me on the spot for once? We flipping the script.
I'm still here too, Ms. Rice. I'm still here. I'm just looking for a place to get out of these
There's going to
puts.
be a gut-wrenching
I
recession
want to make
where
as
Delta
much
doesn't get enough passengers and they
so
fly their planes to the
it looks like they might just be consolidating, but they're just going between 270, well, really like 269 at the low and 270. So it's been ranging for about $1.
Fair enough. What did Greenspan
So we'll
say? If
see.
you understood what I said, that I
We'll
didn't
see
speak
what
clearly,
happens.
something like
I'll
that.
let y'all
Anyway,
know when I
Shannon,
cash out of
I hate
these
this call.
puppies.
We're going to do it.
But I
Netflix,
think anything
okay?
under
They raised their price
269
target
or
to
around
275,
anything under
but that's
269,
below where the stock
I might
is
just
now.
cash out for the day.
This kind of
We'll
stuff
see.
drives
But
me
this has been
nuts.
stress free. I appreciate y'all. This has been
Netflix
stress
is,
free.
the
I didn't know
enthusiasm
you
for
traded
Netflix
big
over the course of the
bucks,
last
Miss
6 months or
Rice.
so, Brian, has been
I didn't
incredible.
know that.
And I think
You
that it
never
comes back
know
to,
who you're
a
going
view
to
that we've had for a
encounter.
long time, that there will be a
Okay,
couple
so I'm
of
about to
winners
get
in
over here
streaming.
and finish
And
watching this because
frankly,
it looks like
Netflix is the
QQQ
only
is
major
coming
streamer
down.
who's doing it profitably right now. And
It's
so I
coming
think
down
there
as
is, there's a lot of
270.66.
optimism about their ability to continue
It's
to execute,
vacillating.
particularly with the
It's
new
playing
ad
around the
tier.
50
But
mark.
frankly, I mean, these calls, it seems like we get a new one
But
every
we'll
day
see.
about how Netflix is executing,
We
but they
will
have
see.
been for
We
the
will
last couple of
see.
years, and we do think that they will
Oh, I
continue to do so
know, I
relative to the
know.
other streamers.
And I don't have a
Fair
tummy
enough.
for it.
$10 below
I
the
don't have a
current price.
tummy
All right, up
for
next,
big
the
losses. So
committee is ready to grade
Ooh.
your trades, answering specific questions
yeah,
about
I paper
investments
trade.
you have made.
That's what I did.
For
I made
future
some money
segments,
paper
remember, send us
trading.
an email.
My puts got profitable real quick, but I got in at a good time.
Grade the
So
trade
we'll
coming up
see.
next.
These will get. They're not losing much. I think they were down like $60. So it's been going back and forth. I think the most I saw was somewhere between $100 and some profit, and then the max loss I saw was like it might have got to 60, 70, $80, something like that. So it's just going back and forth in this little range. So we'll see. I guess when I get tired of looking at it, or if it breaks in the opposite direction, then I'll be turning tail and getting out of here. But it was a pretty good day for everybody. So we'll see. All in all, it's a pretty good day. Let's see. Let me peek over here and see what's happening. do, 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 do. Let's see. It looks like we got something in the hopper down to 40. I think I even saw some 39s. So we'll get down to 30 cents again. 41 cents. Well, I am finding my time in sales to be a little comforting because at least I can see a price range of like what's coming up, which, it helps me stay balanced because I see that there are 40s and 30s, bid and ask that are coming up. So that way I don't panic like it's a false breakout. So that is some more information. But Ms. Vice, yeah, I think either it's like in teaching, either you like high school or you don't like high school. Either you like the babies or you don't like the babies. And I think it's the same way as with investing. Either you have the stomach for that or you don't. And I don't. I'm not that chick. I guess maybe because I am already in retirement. And at this point, you don't want to, you just want to play it cool. You made it this far, you made it safe. You just want to play it cool. Make a little money, play it cool. Yeah, ain't trying to hit no home runs. None of that. Just play it cool.
All right, welcome back. Grade your trade in a moment. We've got a news update right now from Kate Rooney on Sam Bankman-Fried. Kate, what's going on?
Hey, Brian. So Sam Bankman-Fried is headed back to jail in the Bahamas. Court has just been adjourned for the day, and Sam Bankman-Fried has been further remanded to custody. NBC News is there. They're telling us the day has ended in confusion as both sides and the magistrate court expressed confusion and frustration as to why they were actually there. The prosecutor
Old Dave's up a little bit. How would you grade this trade?
They say old.
Yeah, I give this an A-. I think that there is a significant tailwind right now for Danaher in terms of respiratory testing. We're obviously in the midst of an incredibly challenging flu, COVID, RSV season, and that's going to benefit them. But this is a diversified life sciences and diagnostics company. They've continued to be very methodical and prescriptive about acquisitions. And I think to your point, Brian, this company flies under the radar, and yet it's in a space that we think, from a healthcare perspective, is a good name to hold into 2023.
Sarat?
I like the company too. I mean, you just have to be careful about the comps that come through. But again, because of the testing that we're having again with COVID kind of here, China, et cetera, another company in there is Thermo Fisher. So I do like these companies. I think they are defensive. Just be careful that they're not cheap companies, so that when the market comes back, these things could come back.
All right, Dave and Chris. Dave and Chris, thank you for sending in your trades. Everybody out there, keep your trade ideas coming in. We said it. Send the email to askhalftime@cbc.com or tweet at us. Coming up, Mike Santoli joins us with his midday word. Senior markets commentator Michael Santoli joining us now for the NYSE with the midday word. Mike, what is the midday word?
Well, Brian, if you look at the action today, it's in some ways a bit of a microcosm of the whole year, right? Mega cap NASDAQ stocks really leading the downside pressure. You have defensive leadership in staples and utilities, plus some industrials, which have been a standout among cyclical groups. And then, credit markets really not doing anything too panicky. So all that fits together. But I do think there's something relevant in a relatively drowsy slide in the market today, which is the level the S&P is at right now. We've now gone down essentially to just above where we closed November 9th. Why does that matter? November 10th was that CPI day, the report that really encouraged investors. It was weaker than expected or lower than expected inflation, and that kicked off that rally to the recent high. So we're kind of testing in there and to see if matters around those levels. And so I do think there's some eyes on where we are right now as we also have a bit of a hangover type trading from that expiration Friday last week.
Good stuff, Mike. Appreciate it. Thank you very much. All right, straight ahead. Casino stocks, some big time pressure over the last week, but with increased odds of a China reopening down the road, is it time for you to roll the dice on the casino names? The investment committee debates the casino trade. Contessa Brewer up with the story. We're back right after this.
One's willing to travel. COVID infections are soaring throughout mainland China, and that is where Macau's gamblers come from. Even the Macau government said this weekend it expects 2020 through 2023 gaming revenue roughly to match this year's, and boy, was this a bad year. November's gaming revenue down 99% from November 2019 before the pandemic. So right now, everyone is just waiting and watching with bated breath.
Can't predict the timeline either. Probably very little natural immunity there, very little vaccine coverage, at least their own vaccine. So it's a guess, but is anybody guessing on when this may reverse?
No, I mean, I think right now what they're thinking is, look at Singapore. All of a sudden, the highest net worth individuals who gamble are heading to Singapore, and they are spending big, and they're charging boatloads of money for Marina Bay Sands, for instance, from Las Vegas Sands. They're hoping that a Vegas-style rebound is possible in Macau, but a lot of it depends on people feeling like it is safe to go back. And right now, China's not there.
We'll see where it is. All right, Contessa, thank you very much. Jim, very quickly, you own Wynn.
Yeah, and I think Contessa may have hit it on the nail on the head when she said a lot of it's baked in. Let's bear in mind that Wynn is down 3% year to date, so it's mightily outperformed the market. Macau is baked in. A little news like today might just be profit taking on bad news that may reverse. But for Wynn, this for me is far more of a U.S. story than a Macau story.
All right, thank you very much, Jim. Contessa. All right, final trades next on Halftime. All right, welcome back. Time now already, somehow, for your final trades. Jim Lebenthal, kick it off for us.
Yeah, I'm going to go with Boeing. And look, there's been massive outperformance here the last 1 to 3 months. It's actually outperformed the S&P 500 year to date and over the last 1 year. The momentum is clearly in its side. They're getting orders and they're delivering planes. Those orders aren't going to go away if GDP temporarily goes negative next year.
Well said. Shannon?
Eaton, we talked about infrastructure spending a lot over the last couple of years, but we're entering into a super cycle for the electrical grid worldwide, but especially here in the United States, and Eaton is tied to that and should continue to grow well.
Doesn't matter how much power you build if there's no power lines. Surat?
I like Uber. I mean, it's off today, but I think the tailwinds behind this company, getting more people use it, more people are traveling. You know, they're getting a lot of operating efficiency.
And Joe?
Brian, you wanted an industrial name. I'll give you Cintas, C-T-A-S.
Love it. Guys, we'll see you tomorrow as well. Thanks for taking it easy on me. Thank you, everybody. The Exchange with Kelly begins right now.
Thank you very much, Brian. Hi, everybody. I'm Kelly Evans, and welcome to The Exchange. We kick off a fresh week with stocks again trading a little heavy. The NASDAQ down more than 1% right now. The NASDAQ 100 is down 30% this year. But we'll hear from one investor who thinks that could turn around in 2023. Speaking of tech, Apple reportedly dropping out of the bidding for the NFL Sunday package. So who will get the rights? Amazon? Disney? Maybe a dark horse contender will have that, and other media predictions for the new year. Plus, Carter Worth reveals his chart of the year for 2022. It was actually a pretty ugly one. Maybe that's no surprise. He does also have one stock he thinks is well set up from here, and we'll get to that. But first, over to Dominic Chu with today's market action.
So the hangover continues post-Fed, and we see the valuations contracting just like we had at the beginning of, well, we'll call it the middle of last week, given the Fed interest rate decision. Right now, the Dow Industrial is down about 69 points, about 0.25%. 0.5% declines for the broader S&P 500, 38.30 the last trade there. That's down roughly 21 points. Again, for the context and trading range today for the S&P 500, up 2 points. So slightly positive at the highs of the session, down 31 at the lows. You can see we're tilting towards the low end of that trading range today. The NASDAQ Composite, 10,585, off over 1%. And a lot of that tech communication services trade is behind that weakness, relatively speaking, in the NASDAQ. One specific part that's contributing probably the most to that downside underperformance has been the communication services sector. You can see here, it's down about 1.5% so far today, and it's been in a steady downtrend over the course of the last year. And today has a lot to do with Meta Platforms, the company formerly known as Facebook, parent company of Instagram. It could be facing some, or it could be possibly billions and billions of dollars worth of fines from the European Union tied to alleged antitrust violations in those markets over there with regard to online classifieds, other things like that. Because of that weakness in Meta, it's dragging the entire sector down. So communication services is still one of the big underperformers. And then if you're looking for the stocks of the day, it's M&A, Merger Monday, although it was kind of, I guess, reported over the weekend. Aerojet Rocketdyne, they make a lot of missile systems, propellants, things that move rockets, jets, that sort of thing. Well, that Aerojet Rocketdyne trade is up about 1.5%. It is agreed to be bought out by competitor L3Harris Technologies for around $4.7 billion, $58 a share in cash. Now, remember, Aerojet Rocketdyne had earlier this year been agreed to be bought up by Lockheed Martin. Regulators kind of nixed that deal. So if you're wondering why, Kelly, it's not trading right at $58 a share, there likely is still a regulatory risk with this particular deal. So traders putting some of that bet there, $55.77 the last trade there. Kel, I'll send things back over.
All right, Dom, thank you. Actually, come on over. Let's talk a little more about the tech wreck we've seen this year. The sector's down 25% year to date as we've seen the Fed massively tighten interest rates. And now widespread fears a recession is coming. But my next guest is still bullish, saying tech is not dead. Joining me now is Michael Yoshikami. He's the founder and CEO of Destination Wealth Management. All right, Michael, there's a big difference between saying it's not dead and that you'd actually buy some of the stocks. So which ones do you like here?
Well, let me kind of paint a scenario for you over the long term. Let's call it 6 or 9 months. Let's say, for example, that companies continue to spend CapEx on innovation. Let's say that the oxygen goes out of the room for companies that don't have any earnings. Where is that money going to go? I think it has to go to the big tech that has quality earnings. And I think that in discussions with my team, I was talking to Jane Kenny and my team the other day, I think that is going to be the driver, but it's not going to be this year, which is only 2 weeks. It's probably not even going to be the first or second quarter. But watch what happens when you got nothing else to invest in tech because companies are going out of business. People are going to migrate towards big tech.
What if there's not as much liquidity as we think? In other words, what if that liquidity is, gone because the Fed sucked it out, or is going elsewhere, not in the stock market, but to what Dom and I like to talk about, 4.5% on a 1-year CD, for instance? I mean, why do you think that there is going to be this mandate to look for opportunities that would wind up in tech?
Well, first of all, I think there is going to be a bleeding of liquidity. I think you're going to see, first of all, interest rates are very low, so that money is not available to borrow and invest in startups. And I absolutely think 4%, we're certainly seeing it from our clients, 4% fixed income is pretty appealing when you look at what's happening in the market. But I just think there's going to be leftover money. I'm not saying that all the money from the problematic tech or the non-earnings tech is going to go into big tech, but I think there's still plenty of money to go around. And frankly, people, we have to remember, Kelly, people's memories are very, very short. All we need is a month of a tech rally and people won't even remember what happened.
And we've already had maybe a couple months of that as well. So, Dom, Apple, Amazon, Alphabet, all of these are Michael Yoshikami's picks. Michael, you also like Costco, J&J, Airbus. So we shouldn't paint this as a tech-only trade. But what do you think, Dom?
I mean, what's interesting about this is Michael has an interesting point about this over the last 2 decades, arguably since the end of the dot-com era, right? You've had a certain subset of companies that have become the go-to place for investors, and they have for quite some time. They're the exact same ones that Michael talks about. It's the Apple, the Microsoft, although they're becoming even slightly more appealing, arguably, these days than they were back then because they are much larger companies. And you say to yourself, why would they? There's a reason why these companies can't grow as much. But they've also become the safe haven trade in many ways.
Yeah,
and we saw that before, by the way, the Fed started to raise interest rates. The interest rate trade has taken valuations down because there is, to your point, Kelly, an alternative now to risk-adjusted money. So that's the reason why. But I'm pretty sure at this point, all it takes is, Michael said, like to a point, people to see that somehow Apple or Microsoft or Alphabet or maybe even a Meta Platforms, which has been crushed,
right,
could be someplace they want to be back in.
Michael, what do you say? I mean, the biggest question maybe is if last decade, if FANG was the trade and in a way the place to hide and the safe haven sure thing, everyone was basically just ghost tracking FANG and maybe adding some style on top of it. Is that still going to work once the dust settles here or not, do you think?
Well, not FANG. I think that you're going to see big tech. I think that some of the FANGs are going to have some problems. One of the things Dominic said, or even you said, Kelly, actually about Meta, for example, is this is a company that's in tremendous transition. So one of the things that we like to avoid are companies where there's uncertainty about what their business model is going to look like. And certainly Meta is in transition at this point. So are they metaverse? Are they Facebook? Are they WhatsApp? Are they Instagram? It's hard to say. I think the messaging has really been problematic for them, which is why they're getting punished so much by the market. I'm sure you saw that the head of their VR platform actually just resigned and resigned out of frustration. So I don't like transitional names, but I think Dom is absolutely correct that you really are going to have a rotation towards these go-to names. And I think they are more appealing the more the other players get killed.
What do you think, Dom? Final word.
So the final word I would say is this. I think a lot of it will depend on what's going to happen with interest rates and what the Fed is going to do next year.
Yes.
If you have a situation where in the first, say, quarter to 6 months of next year, you have a Fed that looks like it could be starting to slow down or look like it could be getting towards that so-called terminal rate or ending of the Fed fund rate hiking cycle, then you might start to see a bit of a call to action, if you will, from investors about, hey, this is the time. And by the way, it might even be earlier than that because we know people
might be happening now.
It could
Maybe
be
not
because
today,
people
but
expect it, right? That they're so geared. They want to. It's almost like in a football game when they're trying to bait you to jump off sides as a defense. You know, everybody wants to get back in the trade. They just don't know when exactly that Fed rate cycle is going to finish itself.
All right, got to Michael sneak in one more teeny tiny humongous little question to you, which is, in making this call, do you fear the Fed could spoil these trades?
Yeah, of course. If the Fed continues to ramp up rates, I mean, my thesis is essentially, Kelly, that the Fed is going to moderate their rate increases. The steepness of the slope is going to go down. Now, if I'm wrong and they start doing 0.75% every single quarter, I think all bets are off. But I don't expect that to happen because I think you're already starting to see inflation starting to come down.
All right, we will leave it there. Michael and Dom, thanks. Michael Yoshikami and our Dom Chu. Meanwhile, another troubling data point for housing. Today's homebuilder sentiment came in at the lowest level since mid-2012. It's been a string of declines there, and markets are bracing for more bad news this week. It's got the homebuilders back in the red. Diana Olick joins us with more. Diana?
Well, Kelly, it was the 12th straight monthly drop, but the smallest drop in 6 months. And the NAHB's chief economist did say that given the recent drop in mortgage rates, the index may be near a bottom. Maybe. Still, homebuilder sentiment dropped 2 points to 31 in December. Anything below 50 is negative. It was 84 last December when mortgage rates were less than half what they are now. Of the index's three components, current sales conditions fell 3 points to 36, buyer traffic unchanged at 20, but sales expectations in the next 6 months increased 4 points to 35. So there is your green shoot. Affordability, though, continues to be the problem. And while 62% of builders surveyed said they are using incentives like buying down the mortgage rate, with construction costs still way up, only 35% of builders reduced home prices in December, and that's down from 36% in November. So tomorrow we get the monthly read on housing starts and building permits. This should also reflect the drop in mortgage rates, which are now down a full percentage point from their recent high. And then on Wednesday, we get existing home sales for November, but those could still be ugly because they're based on contracts signed in September and October when rates were still hitting those high. Kelly?
Speaking of rates, what's the latest on that front? Because we thought that they were down a little bit, but then today we're higher. So how are we shaking out here?
I mean, they were down quite a bit. Look, we're off that 7.37% that we saw at the end of October. We're down in sort of 6.3 range, but then we saw bond yields, the 10-year Treasury, which mortgage rates loosely follow, coming up again. And I've seen a couple of analysts say that rates are not going below 6%. So if we kind of are in this range between 6 and 6.5, we're up a little today, maybe down a little tomorrow, but definitely not going much lower anytime soon.
All right, Diana, thank you for now, our Diana Olek. Coming up, the year ahead in media, one of these companies will face a proxy fight. One of them will merge with another big name. These are just two predictions from CNBC's annual media list. Several of last year's actually came true, so you definitely don't want to miss it. Plus, the people have spoken and they want Elon Musk to step down as Twitter's CEO. Tesla shareholders would surely want that too. The stock initially rallying on the prospect, turning lower and now trying to cling on to a 1% gain. So will he actually go? We have the latest ahead. As we go to break, a quick check on the markets. The Dow's down 100 points right now. The 0.2% decline for the S&P and a 1.1% drop for the NASDAQ. We're back in a moment.
This is The Exchange on CNBC.
back to the exchange. 2022 has been a big year for media. From Bob Iger's return to Disney to the massive cost cutting at Warner Brothers Discovery and Netflix rolling out an ad-supported tier that may be off to a rocky start. So what can we expect in 2023? Joining me now is CNBC.com media reporter Alex Sherman. He spoke to 12 media executives for the 12 days of Christmas, Alex, on their predictions. But let's remind people, you called the Bob Iger return at Disney. So first of all, take a bow, please.
Well, I mean, to be fair, Kelly, I didn't exactly call it personally. I spoke to someone who called it, and then I chose to include that prediction in last year's 12. So I'll take partial credit for it. But these predictions are anonymous predictions from past and present media executives that hold, I would say, fairly significant to extremely significant positions in the media world.
I assume it wasn't Bob Iger himself who told you he thought he would be returning at that point.
I mean, if it was, I couldn't tell you, but that would be fantastic as a prediction.
You think the sort of, what do we call it, management turmoil at Disney is not quite over. Is that right? What do you think this year holds for this company?
So let's stay with Iger since we're talking about him. Of the 12 predictions I listed, I think they range to somewhat wild out of the box to somewhat more feasible. And
living my dream trading. Hello, welcome. I'm watching QQQ. Everybody else has made their money for the day and gone on about their business. It might be still me and Frank, maybe inputs. I'm watching QQQ. Because that's all I trade. My name is Sandra. Welcome. Are you trading today? Did you trade? How'd you make out? Most of the folks that traded with us today have made their money and gone on about their business. I'm hard-headed. I'm a new trader too, so that explains a lot. So I'm just waiting on QQQ. I'm going to see if she does any breakout moves this afternoon. If not, I don't know. I might swing these positions. So I've got some time.
He has had trouble letting go of that job in the past.
I might swing. We don't know. I don't know. So that's what's happening. But welcome to our little learning and trading community. We come together. You already probably know. We come together and just trade together.
So those two things indicate that an extension of his contract.
I'm just watching QQQ do her thing.
Let's move on to this call, which I find quite striking. Netflix will
because I know Miss Vice,
C-Bar. Any hints as to whom or why?
I want to say Frank. I think Frank might have took his profits already too.
So more out of the box. If you
y'all
go
know
at
me.
Least purely based on.
I think I might be a swing trader. Who knows?
Netflix has
because I haven't reached my price target today.
So the idea that it would
if I get close, I might get out. We'll see. I don't know. We'll see what the afternoon holds. We'll see.
What this executive told
so living my dream trading, what did you trade today? And did you come out positive?
That if global growth is stalling, that Netflix may need to do something a little bit more out of the box.
Y'all forgive me if I seem distracted. I'm just watching to see.
The requisite amount of original content it needs to succeed against the other competitors in this.
I'm playing with my new toy, time and sales.
And one way it may do that would be to merge.
I never used it before, but I like it.
Whether that's Disney, that would be the huge one here. I don't know if regulators
can you imagine? Can you actually imagine? I don't know if it'd be right. It's such a stunning idea that it's exciting to contemplate, but I don't know. Maybe these deals take so long to close. Maybe it could happen under a different administration.
Look, I think to some degree there's a little bit of wishful thinking here.
Like,
Bob Iger's going
to go in and look at these positions.
He's going to merge Disney with Netflix, and then he's going to ride off into the sunset as his, great last big move here. But again, when you look at that more closely, look, Reed Hastings is very positive about Bob Iger, certainly publicly. He had that tweet, a couple weeks ago when he came back. Sort of signaling like, oh, I wish he'd run for president instead of coming back. And he's always been a big champion of Disney. But you just saw regulators say the $69 billion acquisition for Microsoft's for Activision was not going to go through, at least without a court fight.
Peeps.
They also clamped down even on some smaller deals in the media world. The Simon & Schuster publication deal also not allowed by regulators. So the idea that they would allow two behemoth $150 billion companies together may be a bit much. So a smaller target could be Paramount. Paramount Global has Paramount Pictures, which would be a nice fit for Netflix. I don't know what they would do with the legacy cable networks. So that one is a bit messy there, and it may need another buyer to come into it. In fact, that's one of the other predictions.
Exactly.
Is that Paramount Global may end up selling itself in parts.
And a couple of others I want to mention before we go here. One is you think David Zaslav could be under some pressure at Warner Brothers Discovery, maybe a proxy fight, which would be fascinating. As much as I want to talk about that, there's also some important stuff in here about sports and where that's going. You think the cost of sports rights will peak? People have been wondering for years if we're at that point. And you think maybe YouTube ends up with NFL Sunday Ticket?
So let's start with the latter. YouTube makes a lot of sense for the league. It's probably the closest fit to DirecTV in terms of a legacy cable bundle. It's a digital cable bundle, YouTube TV, pairing up with Sunday Ticket. That way, in its marketing, it can also market all of the NFL games that are already on legacy TV for the next 5 to 7 years. Also, think about the reach of YouTube. There's more than 2 billion users of YouTube in terms of sign up, 122 million monthly active users of YouTube. That's a lot more than, let's say, we don't really know how many people sign up to Apple TV Plus, but it's probably
traded
in the 20 to 40 million
from a green
range, or
trade
even
to
almost any of
platinum
these
red.
streaming
Been there,
services.
done that. We've all
So
done
from a
that.
marketing standpoint,
That's why I think I'm gonna swing
YouTube makes a
these.
lot of sense.
I think I'm just
Google
gonna
is a
put
huge
myself
company,
out.
big
You know,
balance
not
sheet,
even worried, not even
technological
stressed.
aspirations. There's a lot of
I have the
fits there
time.
that liken
Got
it
plenty
to
of time
say
on these
Apple
contracts,
or Amazon,
and
which I think make it feasible.
you know,
To your earlier
why
point about the
sweat it?
sports rights, the
Why
NBA
sweat
renewals are
it?
coming up. I think everyone expects
I'm getting ready to
there
log
to be
out of
another
here
big jump in
and
price
go look at these
in terms
paper
of the companies that pay
trades.
for the
So
NBA.
that's
What
what I'm
this
doing,
person said
y'all.
was that will be the
Give me
last significant renewal
30
we have
seconds. I'm going to go
where
look at
we're
the
gonna
paper
see those
trades,
sort of
see how they did. They got to do. I think they were profitable. If I catch them now, I could probably cash out with a profit on my paper trade. My other ones, not so much. Not so much. I think I'm gonna wind up swinging them, which is cool. It was a good day, though. It was a good trade day. I'm not mad. You check all these paper trades. So let's see. QQQ. Oh no, heck, they're only $22. They're only up $25. Okay, well, they're going up now, but I probably should have cashed those out this morning too. Okay, they moving up, but let's see. Okay, let me show y'all what the paper trade looks like. Let's see. So I purchased 3. It ain't doing nothing. I'll swing them joints too. Present. So here are the paper traded ones. There's 3 puts. Got in them about 10:46. Probably should have cashed out earlier, but they're $34. So let's see. 29, 271, 32. Oh, 23. We might get down to something. Okay. So, and then I did this one, and I had been practicing putting on my stops, my limits, and my stops. So got those in. So we'll see. We'll see what happens. Those are our paper trades for today. Hey. Just wanted to stop in. Thank you for stopping in, living my dream trading. Thank you. And thank you for subbing. I'll be by your channel too. So, all right. We'll talk soon. Thank you. I'm checking out all the YouTubers, all the folks that are trading, live trading. I just want to see. So you guys can see what the paper trades did. Look like it's about to go negative. Let me look at it one more time. That's our paper trading accounts. Yeah, so we all up. Oh, it's $7. So probably should have cashed out of those. Okay, well, we'll see. Maybe we'll swing those paper trades too. We'll swing those too. All right, you guys. Y'all check out Living My Dream Trading. Check out her channel too. I think just check out the channel. Adios. So I'm just gonna sit here. You all know my paper trade is probably gonna be a swing. My live trade probably gonna be a swing if something doesn't turn around this afternoon. So we'll see. Probably should have bailed at this right down here. Should have bailed at 270. Yeah, about $1 ago. That would have been sweet, but you live and you learn. You live and you learn. Frank, you can exit the same as any trade. Okay. Set limit for profits, set stop, or mark it out. We need to talk about the probability of profit. Yeah, we do. Because we don't understand how that works. Okay, let me read this. Y'all know I don't. Let's see, what's price doing? 6. 270. Yeah, we need you to really go down under 270. Under 271. $270.93. Come on, go down, go down. Okay, I'm gonna keep checking on my little paper trade. QQQ in the paper trade. Where are we? Oh, wait a minute. Whoa, that's QQQ. Whoa. Oh, it's 100. It's up 100 and some dollars. The 3 puts. How did that happen so quickly? They're up $129. That's amazing. Okay. Well, okay. So those paper trade the puts are up. So I'm gonna log out of here and go look at my real account and see what those joints are doing. Because I don't know. I don't know how they got profitable so quickly. Because I thought we were down like $9 or something. So let me go check on these other 3 puts. I'm coming out of paper trading. Oh, shucks, what happened? Okay, we all still, the gang's all here. The gang's all here. Okay, and I'm getting ready to go over here. See what's going on. What's going on? What's going on? E6. I have really figured out how to move around this thing. I can always find the screen I'm looking for now. I remember when I couldn't. Okay, come on down, Q. 75. Checking on the real money.
cash assets. If you're wrong, you can re-up at a higher rate. And the yield curve is telling you, by the way, long-term, the Fed's going to get this right. So growth is going to suffer. It's going to go down. Inflation will eventually be conquered. So I like buying some very short duration things and then some yieldier things that are in that 10 to 10-year part of the curve. It doesn't mean you win right away, but if you buy it over time, if you're wrong, you'll survive. By the way, if you're wrong, I think equities have a harder time, not an easier time.
Right, exactly.
Well, so I think, Kelly, I mean, to that point, there's a sense growing right now. I mean, first of all, if you're a fixed income investor, the two biggest things that you absolutely fear, are default, first and foremost, and then inflation. Probably a distant second, or maybe a close second, if you want to look at it that way. The biggest wild card in the coming year to 2 years is whether or not central banks here in America and around the world will be able to get that inflation story in check. Because when it comes to sovereign debt, it's not really about the default aspect anymore. Certainly not for the U.S. and other double AAA rated kind of countries out there. But if inflation is going to be a persistent story in the coming years, it takes away a lot of the allure of that fixed income kind of investment. And all of a sudden you might start to see things change a little bit. Maybe not back all the way towards the TINA trade, right? All into stocks because there is no alternative. But people will maybe focus a lot more on risky assets just as a frame of thinking, because they feel as though inflation is going to be part of the story for a long time.
And I guess maybe, Brian, we'll leave it with you on that note. So if the Fed fights inflation and protects you that way, they risk a downturn that could wipe out your credit if you're exposed to default risk. If they don't fight inflation enough, your companies might pay out their obligations, but you might come out behind on inflation. So those are kind of the tug of war we're in.
No doubt. That's the risk. The risk is inflation stays high and your yields aren't high enough. By the way, you could put tips in your portfolio. We're not pricing inflation. So yeah, this isn't a call for take 100% of your money and put it into bonds. This is it. There are still risks out there, but as part of the discussion, should I own some? The answer is yes. And then we're going to figure all this out in the next couple of years. The bond market is, I think, very much at odds with a lot of other opinions out there in terms of inflation coming right back to where it's been the last decade. But we'll find out.
Yeah, you mentioned munis, Brian. You mentioned kind of short term. Any kind of last opportunities you just want to name call for people who are doing some research on their own at home?
Yeah, listen, the place where we've seen the most inflation fighting is in emerging markets, right? It's been a tough decade for emerging markets, but if you want to see yields that are really high, you can go look at emerging market debt funds and find real yields that are high. Countries that are fighting inflation, I think, very successfully. It's been a tough trade, but one worth looking at. A creative emerging markets funds. I don't think you want to buy the index and things like that, but I think a combination of emerging market local debt and emerging market dollar-denominated debt, there's just some great opportunities in there. It's been kind of forgotten about.
We went from boring, safe Treasury fixed income to emerging market debt, just like that.
Wonky, but
just
wonderful.
Like that. It's part of the conversation.
Wonky, but wonderful, Brian.
Brian,
Wonky,
thank you
but
very
wonderful.
much. Brian Weinstein with Morgan Stanley. Dom, a huge thanks as well. Dom, too. Still ahead, 57%. That's how many people voted yes in a Twitter poll posted by Elon Musk asking if he should step down as CEO. And he's promised to abide by the results. So will he make good? We'll explore after this quick break. The Exchange is back in 2.
CNBCSports.com.
Welcome back. Elon Musk had promised to make Twitter the common digital town square. Well, the common people have spoken. The CEO asking users if he should step down, and more than half of the 17 million people who voted said yes. Steve Kovac is here with the story. Steve, what's next?
It's anyone's guess, but right now we know there's no word yet from Elon Musk whether or not he'll make good on his word and step down as CEO of Twitter. But the results of his poll were clear: 17.5 million votes, with more than 57% saying yes, Musk should step down as CEO. So why is he doing this, Kelly? Well, he's already said he doesn't plan to run Twitter forever. Just last month, Musk testified in a hearing in a shareholders lawsuit challenging his compensation at Tesla and said he plans to find someone else to run the company. Now, much of that question in that case focused on Musk's time spent at Twitter instead of Tesla. Meanwhile, Tesla shares are down about 30% since Musk took control of Twitter, and over 50% since making his offer to buy the company in the spring. And just last week, he sold another $3.5 billion worth of Tesla shares that was presumably to fund Twitter operations as advertisers reportedly reduced or pulled their spending. And it comes after saying he wouldn't sell any more shares. He's been saying that since the spring. The poll also caps a lot of drama over the last few days, arbitrarily suspending some journalists off the platform and waffling on a new rule suspending users.
Yeah, because I think I'm about ready to get out too, C-Bar. I think I might be able to take home a little profit.
He said this weekend there's no successor yet. And by the way, Tesla shares are positive now.
I could get out.
Even more pre-market 4% when polls close.
I wonder what he means by that. No one.
24. I'm trying to see if it'll get under
alive.
270.
I mean, it sounds like he's pretty bearish on its prospects.
23.
And his personal value is so tied up here between the shares that he sold out of Tesla, the price that he arguably overpaid for Twitter, and then the necessity for him to make this company work, even if he's just going to sell it.
I'm looking to get out of my trade
almost
too.
setting up
Hold
this
tight.
successor for failure, right?
Yeah.
It's like the only thing he's been able to brag about, the only metric he's been able to brag about is engagement is up. More people are using it, which is great.
Let's see what happens.
But not if you can't monetize those people and make money off of it. That's why we heard those rumors last week that maybe he's trying to raise even more money from outside investors at the same price.
Okay, QQQ is coming on down, y'all. So
it's either
I may hang in here for just a few more minutes.
Subscription products, or he keeps having to go back to the piggy bank and cash out more Tesla shares. And we know Tesla investors are not happy with that.
Exactly. Tesla getting another downgrade just this morning for that very reason. And, we know that Elon Musk has said a lot of things that haven't come true, whether it's full self-driving and what year that was going to come to pass, or any of his various side projects. So it's not that anyone's too surprised by this, but I think it is remarkable how much, he's put his money where his mouth is in this case. It's not as if he
and
came
other
in
people's
on
money too, by the way.
Right, but even for himself, even selfishly, it's not as if he's coming in on someone else's dime just to kind of see what he can do here. I mean, he has to make this work.
Yeah, and I'm going to shock you, Kelly. He says a lot of things and then does the opposite or never follows through with it. So that's just kind of how he's operated forever. I mean, you came up with some examples. Robo-taxis by 2020. That didn't happen. There's solar tiles that after buying Solar City, that were, the original ones he showed were supposed to look like regular tiles, and it didn't really turn out that way. Plus, there are a lot of issues with those, with fires and so forth. So he excels at over-promising and under-delivering. And here it seems like he's really under-delivering on Twitter. And now he's at the spot where he feels like maybe I just have to quit and step down and give it to someone else and set them up to fail instead.
Yeah, nobody knows what the next chapter holds. Steve, thank you. We appreciate it, Steve Kovac.
You guys, I'm gonna hang in here because she's on the move and she's moving down. And it looks like she may try to get under 270. So I'm still profiting. I'm over $100 in the 3 puts from this morning. So, and it looks like it's still, I'm hanging in here. It's down to 270.11. So I'm just chilling. I'm just chilling in this trade. Just chilling. I'm not doing anything. Limit order for $5 just filled. I don't know what any of those numbers mean. Earned 115 today. Okay, let me tell you where I am. I'm up to 127. 127. And she's dropping. So I'm gonna wait. And let me see what it's looking like over 15 minutes. What kind of trend we're in. Looks like, I don't know. Okay. I will sell 2. And then I'm going to leave 1 runner. Just so you guys know. I'm selling 2 of my positions. And I'm going to leave 1 cooking. 270, 19, 18. I'm just watching. Let's see, 22. Confirm. Save. Chart.
Welcome back. No matter how you slice it, it's been a tough year for stocks. Each of the averages currently riding a 2-week losing streak, but looking back, where you didn't invest could be just as important as where you did this year. As we approach year end, we asked the chart master Carter Worth for his chart of the year in 2022. And for another name, he sees
I think
set
I'm
up
gonna
well
sit here
for
for a minute,
2023.
y'all.
His answers might
'Cause
surprise
I
you. They
see
surprise me. Let's welcome in the man himself, Worth Charting founder and CEO Carter Worth. Carter, good to see you again. Drum roll, please. Your chart of the year is...
Right. So when considering all of that, and we know there's been epic moves in so many things, one stock among many, because it became such a fad, but such a nothing, is Beyond Meat. For the record, look, I've never had any of it. And here's the thing. I guess there's the real thing in life, and then there's always the fake thing. And consider, I mean, think about, I'll give you something funny. Since the year 2000, butter sales are up 83%. Margarine, down 32. Sometimes just eat a little less of the real one. Company's market cap was $15 billion. It's under $1 billion now. It's 900 and sinking. It's a testament to one of the great rules in markets. Just don't buy stocks in downtrends.
Don't buy stocks in downtrends. So Beyond Meat, you say it's still, it sort of sums up 2022 almost better than anything else probably could. So what about for 2023?
Well, I mean, if one were to try to be careful, prudent, one of the things to do is to always think large cap. Another thing is to think defensive in terms of sector or theme, and then to pick a marquee name. Well, United Healthcare has to come to mind. It does, to my mind anyway. This is a stock that is clearly domestic. It doesn't care about currency. It doesn't care about oil. It doesn't care about Putin. It is just operating its business in the managed care space. And it trades at a market multiple, if anyone cares about that. Not what I do, but it's worth noting. And it is the definition of a stock in an uptrend. And so when considering all things, I think this is as good a pick as any looking forward.
Does it make you nervous that it's coming off a 14-year win streak? And that a lot of people right now, we've heard, I can't even tell you just the past week how many people are bringing big healthcare names as their best ideas for 2023. Does that crowding effect tell us either that this is just the market that we're in, or is this actually some kind of trend to fade, much like if only we knew Beyond Meat, back last January, if only we knew back then that this would have been the short of the year?
Well, remember a year ago, which is so ironic, right? The stock was down 60%. And that's the nature of value traps. Now it here is down another 78. Wow. The thing about healthcare, is that it, as a sector, has underperformed the market. Its peak performance was back in 15, 16. And so it's not that crowded a space. I know there have been a lot of sort of thinking that, I guess, when the administration changed, that there would be, drug price issues and so forth. But listen, that's outside my purview. I don't think anyone can do all of that. I think what we do is stick with some of the most tried and true things, which is relative strength. Beyond Meat, if its relative strength is poor, stay away.
Yeah.
United Healthcare, if it's good, embrace it.
And it wasn't just Beyond Meat, GoPro, Zoom, Peloton, SoFi. I mean, these are other names that kind of had similar trajectories. Is there anything, what are the lessons to be learned from that? I mean, obviously what you said about RSIs, but more broadly, it seems like we just really got perhaps retail traders piling into a consumer trading boom, and these names went way high, especially during the pandemic, and then the air just completely came out.
Right. If you think about those names, they have a common thing. They're basically consumer. GoPro, you put the thing on your head, but what is it? It's really just a camera. Zoom, it's more consumer. SoFi, remember how Lending Club became very popular?
Yes.
And that got all wiped out. SoFi, is it the same? I don't know, but they're all what? In established downtrends, and usually that's a problem.
All right, Carter, thank you. We appreciate it. Carter Worth charting. Still ahead, the S&P is down nearly 20% this year. And if the results from CNBC's latest millionaire survey are to be believed, 2023 might not be much better. Why the bears could be here to stay, that's next.
Okay, we're back down under 269. This is all good for me. This is all good. So I'm kind of glad I held on for a little bit.
One more thing before we go today, it's the results of the CNBC Millionaire Survey, and they're not particularly optimistic about next year. Robert Frank is here with the exclusive results. Robert?
Kelly, the consumer story that we've been hearing is weakness at the bottom and strength at the top, but that may be about to change. 80% of American millionaires say they plan to spend less this holiday season. That's according to our CNBC Millionaire Survey. That's where we poll investors with $1 million or more in investable assets. Younger millionaires, they're cutting the most. Virtually all the millennial millionaires that we polled said they plan to spend less due to inflation. And if you look at baby boomers, it's only 78%. More than half of them are more price conscious when they're shopping. And that we saw that, of course, with Walmart reporting more shoppers with six-figure incomes helping their grocery line. A third of millionaires are cutting back on restaurants, and 28% are cutting back or eliminating major purchases. They think inflation is going to stick around for a while. Most say it's going to last at least for a year or more. You can read full coverage of our Millionaire Survey, including their forecast for stocks, which is very bearish. In fact, the most bearish since 2008. You can read all of that on CNBC.com. Kelly?
Robert, it jives with what we've heard elsewhere, that this is a white-collar recession already, that job openings for, tech and finance and insurance, feels like that are way down. Stock market returns have hit, obviously. And that it's actually the blue collar, the lower income segment of the workforce where we're seeing the strongest wage growth and the best demand right now.
Yeah, not just the layoffs, but if you're a business owner, whether it's a small or a medium-sized business and you're wealthy, you're looking right now to cut spending, to cut capital investment, and maybe even to cut jobs. So when you're doing all of that in your business, even though you may be doing okay financially, you're not going to be in the mood to spend on a big ticket item or restaurants or a vacation right now.
Exactly.
So a lot of that is not just the money, but the mood.
Sure, and that mood can absolutely end up trickling down. As we know, certainly the market is worried about a broader recession. Robert, thank you so much. Robert Frank. For full results, you can head over to CNBC.com. That does it for the exchange today. But speaking of bearish sentiment, coming up on Power Lunch, Nike reports after the bell tomorrow, and one analyst says a swoosh through the haze of economic uncertainty here and abroad isn't likely. We will debate it coming up right now.
Good afternoon, everybody, and welcome to Power Lunch. I'm Tyler Matheson, along with Kelly Evans. It's good to be back together again. Here's what's ahead, folks. 2022 promised to be a banner year for bank investors, but the opposite happened. The sector on pace for its worst year now since the financial crisis. And there may be more pitfalls to avoid in 2023. And we've got the CEO of the year, Yale University's Jeff Sonnenfeld, has our power rankings. Find out which executives topped the list and which found themselves embroiled in controversy and getting the short end.
Oh, we got a new low, folks.
Thank you. Tyler, you're not seeing a very pretty, this is a familiar story from the past week. We're trading heavy and heavier throughout the afternoon. It started with the NASDAQ, but it's spreading. The NASDAQ is now down 1.5%. The S&P is down 1% to 38.15. Watch that 3,800 level, that band where a lot of people have been watching for downside price action. And the Dow is down 200 points now.
All right, y'all. These calls, these puts is on the run. Puts looking good. It's looking good. Yes, keep going lower, lower, lower. Mm-hmm. I don't know what got into QQQ, but whatever it did, we so happy about it. It will show us some 269.30s. She woke up, y'all, and we getting paid. It's a good day. Okay, I'm up to almost $300 on those puts. I'm at 292. So I'm about to check out of here. I'm so glad I didn't sell. 269.46. I don't know what the low is, 45. Let's go. Keep going. 45, 47, 46, 'Ooh, we hit another new low. All right. So those three puts are over $300 now. I needed all of that. 307. I'm just gonna keep watching, keep an eye out. So it keeps making new lows, y'all. Puts looking good, y'all. 28, 27. Oh, yes. Break free, shimmy to the ground, break free. QQQ did her thing today. Let's see if it'll go under 269. I'm still here, folks. I'm still here, y'all. The puts is looking good. The puts are looking good. Order. 2. Limit out. I'm selling 2. And I'm keeping 1. Hoo-hoo. All right, let's see. How did I do? Okay. Let's see. Chart. I think I'm going to sell this other one too and just get out of this position, period. I'm selling them all, folks. It was a good day. Don't be greedy. Create a closing order. Move out. Whew, holy smoly cannoli. I got out of all my positions. I made money today. Chart. Home screen. It was a good day today. I cashed out of all of my positions. It was a good day. It was good. It was good for me. I had the three, they made $218. I cashed out $218 on 3 puts. So I'm good. Yep. No, it's profitable. Yay. I can rest for the rest of the day. See, this is where I get in trouble though, because I'll look at the chart and if it looks like it's doing some more, I'll try to go get some more. But not today. Today, we're winners. We're winners by 2:00, and I'm not fooling with it. I'm just going to watch. Oh my gosh. It was a good day today. I cashed out and I was profitable. Yay. Nope. Nope. Nothing wrong with playing it safe at all, Ms. Vice. So it feels good. I made some money today. It feels good. I don't know what was going on today, but it was so calm today. I think being outside helps me too. Being outside in the fresh air and all that stuff helps. So, yep. I made money today too. Everybody made money today. I don't know. Did Frank get out with some money? He had to. I cashed out. Yes. Because normally I don't cash out, y'all. I cashed out somewhere on that second. Well, let me do it right. Let me get the 15 minutes. Yeah. 269.26. We'll see if it gets lower than 269.26. I think it's going to keep going low, though, for the last couple hours of the day. I should have left that one runner, but I didn't want to get back any pennies today. Nothing. I wanted to take home all the profit that I made today. It was great. It was great. It was great. Let's see this on the 3-minute. It was a good day, everybody. It was a good day for me. I got in somewhere. I don't know. I didn't live through that. I got in somewhere around here. I got in late. Might have even been somewhere around. No, it was somewhere around here. I have to look at it. It was a good day. Mm-hmm. Yes, thank you, Ms. Vice. I got out with profit and it wasn't even stressful today. It wasn't stressful. You saw the move. The move was an easy one. You could have got in just about anywhere and made money. I never get in like at the morning part. I got in somewhere after after this. I got in somewhere around in here. So I got that. I sat through all that consolidation and I got that little piece and I got out here. So I got in somewhere on this run. I sat through this and I got that and I got out here. So it was good. I'm pleased. I love trading with y'all. I love it because you all help me stay focused and what's reasonable. It is not reasonable to go back in there trying to squeeze some more out this machine when I've already made money and I didn't do anything but sit here. That thing is amazing. It blows my mind every day. Every time I'm able to reach in there. Ms. Weiss, I can't even imagine what it's like for you. Oh my gosh, you're talking about 5 figures. Look, I am happy to cover all of my living expenses. I know that I can't. Anything between $100 and $300 a day is good. Because I know I'm not spending $300 a day living, just chilling on my balcony. So it was a good day. It was a good day, folks. And she's shooting back up, which is good. So I got out at a good point. I was glad she got back down under the 269.26 because the low was 269.69 or something. So she beat those lows. Still under 269, which is beautiful. Yes, 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 yes. It was a great day today. So I guess we should I should dissect that trade and look at it. I'm not making 5 figures. My purchase power is that amount. I know, but still, that's a beautiful thing. That's a beautiful thing to be able to trade freely because you can have bigger wins. So I think once I master and feel confident, I know I can go in and get money if I stay out of my own way. That I do know. I've seen it and I've done it. But not knowing, I need to know. I need to know all of the stuff. So I might as well just keep on studying, keep on paper trading, keep on, doing all of the things to get better. So I can get my purchasing power up to 6 figures, 5-figure purchasing power. 5 figures. Okay, I just want to see if it goes down below 269.26, y'all. I'm sorry, but if it breaks again, I don't know, maybe I won't do anything. But we're gonna watch. So it's less than 2 hours left in the trading day. And we got that money. We got that money off the table today. Look at QQQ. Let's look at this market watch. Everybody's still red. Look like Pepsi even coming down. Pepsi got to give it up too. 169. I'm watching this. QQQ is down. Oh, yeah. Yeah, we're going to keep watching her. Because I just got a feeling she's just going to go all the way down right on out the door. And I'm going to hop on one more time. If it breaks 269.26, I'm not making 5 figures purchasing that amount. Hola, welcome everybody. Welcome, welcome, welcome. I'm not sure if somebody is new. If you're in here, please don't forget to like, subscribe, share the channel. Subscribe, y'all. Do me a favor. I'm a small YouTuber. I'm just starting. You can make my day by hitting that button. I promise you. If you hit the like button, it makes my day. It lights me up. I'm easy to please. And I'm just watching QQQ do her thing. If she breaks below 269.26, we're going to have to make some decisions around here. It depends on how she goes down there, too. Because it's been there. But she had a tough time getting under 269. So we'll see. Oh, boy. It's been a day. On the 3-minute. We are just slightly oversold. I had fun with y'all today, man. It's so much more fun when we making money, when everybody has a positive day. I'm just waiting to hear from Frank, waiting to see if Frank had a positive day today too. I'm sure he did. 52. If it gets under 269 and stays under 269, that's a good thing. Today was fun. Trading is fun when you make money. Trading is stressful when you're not making money. So she's down 1.7. If she gets up to 1.75, I know we in good shape. 48. While we doing this, let me queue up some contracts while we waiting. Okay, hold tight. Let me remove that. And get it here on this trade grid. 10. And she persists. Okay. I made money on my puts today, Bumpy. Let's see. I made money on 3 puts on QQQ. $269. Let's see. We'd see a 268 anywhere. 269. 269.25. 26. I don't see no 268s. I made money on 3 puts. And I think Frank made money today too. I don't know, but that's what I'm doing. And so now I'm watching QQQ for the rest of the day to see if it's anything else left. I got out around here somewhere. I got out around here. She ain't did much else. Bumpy, what'd you do today? It's bearish. Bearish for sure. Yeah, she continued right on down. I'm watching QQQ start a step down. 21. The only reason why I asked is because I was taking a look at my option statistics, and it seems like I got more calls moving than puts. I'm going to kick back just a little bit. Yeah, I'm all puts today. All puts. You know me though. I'm sure I have a put bias, but I try to just be reasonable, but it was looking pretty bearish to me today. Oh, look at Jesus, want to keep you out of trouble. Look at that. Thing bounced up. I don't see nothing under 26. I don't see no 268s in the house. We ain't broke 268. 20. You see, I'm just thumbing through. I'm just looking, trying to see if it's going to do anything, if it's going to dip below 269 and stay. Uh-oh, there we go.
This transaction, wave of an arm and say, well, sorry, my bad, but it's all taken care of, because you're left with an enormous amount of damage.
Yeah, you've got reputational damage, you've got debt, you've got a lot of things that are going on there. It is funny or ironic, I suppose, that Time Warner shows up in the list of worst deals multiple times. I mean, it's just well, they don't exist anymore, so whatever. What turns it around for AT&T, if anything, Craig?
It's very tough. I mean, look, here's the bottom line, Tyler. They're in an industry that really isn't growing. The growth rate for subscribers is now coming down relatively sharply back toward a more sustainable growth rate that's close to the population growth rate. I mean, the penetration of wireless is pretty well saturated now. So it's not a growth industry. And they charge high prices in an industry where T-Mobile and now increasingly the cable operators charge lower prices and have equivalent or better products. In T-Mobile's case, you can make for the first time a strong argument that T-Mobile has the best network. It's exactly the same problem that Verizon and AT&T are both struggling with, is they charge too much for a product that's not differentiated, and their marginal costs are low.
Uh-oh.
As heroic, he surely had a crashing influence on FTX, and rather than celebrate that, he's got his own problems where policymakers are very skeptical of him, a lack of transparency. He may, in fact, have suffered a comparable loss of trust there that he has yet to produce. The public has gotten weary of a lot of the ambiguities and the jargon and the crypto confidence. Mm-hmm. And I think that given his, exposure, that's all he has there. He's got big trouble. He's got a lot of accountability problems coming after him. That's an enviable task.
All right, Jeff, thank you, as always, for your insights and for this provocative list. We appreciate it. Have a great holiday season. We'll see you next year.
Thank you so much, Tyler. Thank you, Kelly.
You got it. I want to draw viewers' attention to the fact that the Dow is now down 305 points. We've got an eye on it. So should you.
Yeah, it's trading heavy again into the close. Coming up, generation change. We'll look at one company trying to fix the problems caused by diesel generators in today's Clean Start.
Okay, we see you going up. We see you. Don't want none of that jelly. It ran up just like that.
Replacing gasoline power in a car, bus, or even aspects of your home with battery power is fast becoming a common desire, but diesel generators are still the go-to for big industries that need high-capacity portable power, at least until now. Diana Olick explains in her continuing series on climate startups. Diana?
Well, Kelly, go to any construction site or movie set and you will hear the rumble and roar of diesel generators. They're high-powered, they're portable, and they're terrible for the environment, emitting dangerous levels of carbon. So as with everything else, the race to electrify portable energy is now on. While big legacy companies like Generac and Caterpillar are beginning to offer small battery-powered generators in addition to their larger diesel lines, California-based startup Moxion is focused entirely on this new power frontier. It's building high-powered, battery-powered generators that can be used in anything from construction sites to movie sets, replacing diesel.
Generators are notoriously difficult and expensive to maintain. They burn diesel fuel very inefficiently. You have this problem where generators are kind of running on idle a lot, very regularly, and so that's extremely wasteful and terrible for the environment.
Under Moxion's model, clients can either buy the generators or rent them. For rentals, Moxion uses technology that alerts them when the batteries are running out so they can replace them with no lapse.
We know exactly what the state of charge is.
Amazon is currently leasing Moxion generators for 2 productions, a movie and a streaming series, powering cameras, base camps, lighting, hair and makeup trailers, and other production equipment.
One of the beauties of Moxion's unit is it is dead quiet and zero emission.
Roughly half of the carbon emissions from the average movie set come from the fuel used to power generators and transportation. Ellis says since these generators are zero emissions, they're more versatile.
It can be moved indoors for unique shots, and they really allow our team to think about new ways of filming productions than they used to.
Moxion's backers are the Microsoft Climate Innovation Fund, the Amazon Climate Pledge Fund, Enterprise Holdings, Energy Impact Partners, Tamarack Global, and Sunbelt Rentals. Total funding so far, $110 million. Moxion's CEO says they're still looking at expanding the potential uses for the generators, but already he said they are competitive in price for companies looking to buy the generators and may in fact end up cheaper because they're less expensive to maintain than diesel models. Kelly?
But it sounds like cost is an issue right now, which is why everybody's leasing them. Is that right?
Well, also because this is very new technology, so you never know that it's going to improve more. Maybe next year they have a better model, so you don't want to invest in it now.
All right, Diana Olick, thank you very much. Still to come, we got today's 3-stock lunch. We will run through some names that are set to potentially drop in the new year. Power Lunch will be right back. right, welcome back. It's time for today's three-stock lunch. CNBC out with a screener of stocks to beware in 2023. 20 names with the most to lose based on the average analyst price target for the shares compared with where the shares are trading today. On that list, we got Clorox, Etsy, and Campbell's Soup. Don't mix these up, okay, folks at home? Let's bring in Eva Ados. She is Chief Investment Strategist at ER Shares. Eva, welcome. Good to have you with us. Let's start with Clorox. Clorox was a pandemic darling. You don't drink it to get rid of the pandemic, but certainly it was part of the cleaning frenzy that we all went through.
Yes, definitely. It's a dead COVID play. In fact, it's experiencing the worst profits margins. It has had among the worst profits and margins it has had in the last 25 years. And then among the highest SG&A costs it has had in 25 years. So that's a COVID play, and they scaled up very quickly to meet COVID demand. Now the demand is down, and so they have extremely high SG&A costs that are not able to shed quickly. And so for that reason, they're seeing their margins squeezed. That's why it's a sell.
Oh,
A full-out sell.
Yeah.
Okay.
What about Etsy?
Etsy is a hold. It's actually among the few companies in this category that are making money now. In fact, its EBIT margin is 16% compared to -9% for its peers. It's also about 7 times the margin of Amazon. So its fundamentals look strong. However, its valuation is slightly higher on a relative basis, and that's why it's not a buy, it's just a hold.
All right, let's move to the last one, which was, again, I guess, a hot shot during the pandemic because it's comfort food, the ultimate comfort food, Campbell's Soup.
No, I like this one because I like the category in general. Staples, including food, will do well in a recessionary market. They have already been performing well. And even though I think it's a short-term buy, and I wouldn't encourage investors to hold it as we exit the recession, I think it's a good play for this recessionary market. I want to note that over the long term, their margins have been eroding. And so for that reason, it's just a short-term buy.
All right, and look, there's a nice, look at the move in that stock this year. Eva, thank you very much. Eva Ados, we appreciate it. And for more stocks to beware in 2023, head to cnbc.com/pro.
More on the markets when Power Lunch returns. Like Tyler pointed out, we're at session lows. Dow's down about 300 points. We'll have more on the other side.
Oh boy.
Terms apply.
Welcome back. There we have the markets. Dow's down 314 points, and it's actually the outperformer today. So 1% drop there. S&P trying to cling on to that 3,800 level. It's down about 1.3% today, Tyler. The NASDAQ, again, the bottom of the pack, down 1.7%, and it's down 8% this month.
You're still seeing, I think, the idea that rising interest rates are anathema to high multiple growth stocks, especially tech stocks, because it means that their cash flows are going to be discounted even more.
And you're right. Look at the 10-year, 3.58
Are going to be worth
now.
what they used to be.
Yeah.
And there's the 10-year note. You can see it at 3.58. So at any rate, the market seems to be, it's thinly traded right now. This is not going to be a high volume week as opposed to last week.
It's still throwing a hissy fit about the Fed, I think. And, until any signs that they might ease off and say, you know what, we've had so many inversions and so many forward-leaning indicators, maybe we should back off and we're going to take those seriously. Until we hear that kind of talk, I think you're going to see this kind of market.
Yeah, until there's really a pivot.
Yes.
You just figure, good to be back with you.
It's great to have you
Great
back.
to have you back.
Great to be back together.
All right, thanks everybody for watching Power Lunch.
Closing bell starts right now.
All right, thanks very much, Kelly and Tyler. Stocks under pressure in Monday trading as we head into the final 2 weeks of the year, sitting right now at or near session lows. Now, this is the make or break hour for your money. Welcome to the closing bell. I am Dominic Chu in for Sarah Eisen today, and here's where things stand in the market right now. You can see the Dow Industrials down just about 1% or so, 30,618. The S&P 3804 down 1.25%. The NASDAQ Composite down 1.75%, 10,520. The Russell 2000 small caps 1.5% declines, and the 10-year benchmark Treasury note yield drifting higher to 3.58%. Here's a look at the biggest NASDAQ 100 laggards, those decliners today. Atlassian, Splunk, Vertex Pharmaceuticals, Airbnb, Meta Platforms, all down roughly 4 to 6% on the trading day so far. Coming up on today's show, we've got Rockefeller's Rashir Sharma. He's got a warning for private markets, saying they're more vulnerable in this tight money era. He'll join us to explain just why. Plus, Meta's mounting headaches. Talk about the regulatory issues surrounding the company. We're going to dive into some of those, including new objections from the European Union and mounting pressures from our own regulators in the SEC and the FTC, rather, over on our side of the markets. Let's begin with the market as well as the sell-off gains seen. Mike Santoli is joining us now with his market dashboard. Mike, what exactly are you watching right now as things start to lose momentum into this final hour of trading?
Yeah, Dom. I mean, unfortunately, some familiar levels getting retouched. We hadn't been down this low in close to 6 weeks. I mean, the keep it simple story is that a downtrend is in place until proven otherwise. And the rally off of that October low did not prove otherwise, right? It stopped right where it would have been gaining the benefit of the doubt if it had crossed above it. It didn't get that. We're also down in the S&P 300 points since the high on Tuesday after that positively received CPI report. So we sold the good news of the CPI, got through the Fed meeting, and it still became a matter of worrying about growth and also the downward pressure on some of the big tech stocks. All that stuff matters. Now, also, we're back to that level of November 9th, which was right before we got that previous good CPI report. So in other words, you've unwound the relief from the positive declining inflation news, and now it's a little bit more about growth and year-end pressures perhaps on some of those losing stocks with downside momentum, such as tech. Take a look at Apple, another name that's in an interesting spot right now. It is now declining. It's a 3-year chart of Apple. It's declining to just about where it was at the June lows, and then you go all the way across early 2021. That was kind of the speculative peak in the smaller cap, high growth NASDAQ. And this right here, too, is interesting. That's August 31st, September 1st. That was the momentum peak and relative outperformance peak of the NASDAQ. Apple 4-for-1 split. All that stuff is right in this zone. Apple, as recently as August, was outperforming the S&P year to date by more than 20 percentage points. It's basically underperforming since then. So it's clearly done its job to some degree as a source of stability, but it and Microsoft having outsized influence on the downside in the S&P today, Dom.
So, Mike, I mean, it's interesting when you point to the charts there, especially for the broader S&P 500 and Apple as well individually. You mark those levels of kind of this support that we are seeing. Is it then fair to say that some traders are looking at this in the broader S&P and in key stocks like Apple as a place where if we don't hold, things could get worse and we test the lows that we saw this fall?
It seems that way, Dom. And for example, in the S&P 500, the close the day before that November 9th, level where we got a boost on the CPI, it's around 3750. So you go down 1+% from here, you'd be testing that. And if it were to hold, it would actually look okay, right? It would look as if, okay, that's a new trading range perhaps. But, if it breaks, then you have to open up the possibility of getting back to those old lows. 3,800 interesting too, because that was a downside target from back in the early part of this year for a lot of traders. We obviously have gotten there and through it, but have only spent, 10 weeks or something all year below that level. That's a fair amount of time, but it's not as if we've mostly been below that this year.
All right, Mike Santoli, we'll see you later on. Thanks for the update there on the markets. Let's now turn to one of the key stocks driving the action, Meta, as regulators on both sides of the Atlantic ramp up pressure on that company. Today, the EU is saying that Meta has breached antitrust laws surrounding classified ads, and that comes as Meta faces the FTC here in the United States in court over its merger and acquisition strategy. Steve Kovac, our tech correspondent, has the latest developments for us here. Steve.
Hey there, Dom. Yeah, let's start with that EU antitrust complaint, which centers on Marketplace. That's the classified ads section of Facebook that everyone has. Now, look, the EU is saying it's making it hard for third-party services to compete with that Marketplace product. EU saying it gives Facebook users no choice but to use Marketplace to sell stuff. Now, Meta tells us the EU claims have no merit and they're going to work through the process with regulators. But the fine could be hefty, Dom, up to 10% of Meta's global revenue. That was $117 billion last year, just for context. Now, the EU has been far more aggressive with tech regulations, even forcing Apple to allow third-party app stores in a couple years here. Meanwhile, let's go over to the U.S. in San Jose, California, where U.S. regulators going after Meta as well. FTC is suing to block Meta's acquisition of the VR fitness app called Within Unlimited. Meta's CTO, Andrew Bosworth, you see him walking in here, was testifying in that case today. Meanwhile, Mark Zuckerberg may also make an appearance defending the deal this week as the trial winds down, Dom.
All right, Steve Kovac, stick with us here. Let's bring in for the conversation Brent Thill. Covers Meta, a lot of these other social media names. He's over at Jefferies. Brent, Steve lays out an interesting case developing right now. It has echoes. It feels like deja vu with maybe Microsoft back in the day with the European Union, some of the problems that Alphabet and its subsidiary Google has had with European regulators in the past as well. Can you put it in context for us, Brent? How significant is Meta's problem with the EU compared to, say, Microsoft's or Alphabet's back in the day?
I think right now it's really hard to handicap, Dom. It's impossible. But I think we can say this, that Meta stock is embedding a lot of these key concerns, trading at a low-teen earnings multiple. It's the cheapest name in large-cap internet. So a lot of these concerns are already embedded. The number one question we get on the internet side of Jefferies is, what about regulatory for Amazon, Facebook? You go through the list. And ultimately, no one really knows exactly what the outcome will be. I have a hard time believing that 10% of their global revenue is fair for trying to put classifieds into a social media network where if you're looking for something, you should be able to find something that you'd want to buy or sell. Seems kind of common to do that. So I think the EU has probably been a little too overreaching. Obviously, you have the U.S. issues, and I think the U.S. regulatory is not going to get any easier. It may even get more difficult here as well. So I think this is an overhang for the group, and it's something investors should consider when they're coming into the group. But again, I think it's really impossible covering tech for the last 20 years. It's impossible to handicap these situations other than to say they're already trading at discounted multiples, the fear of the recession, the fear of a reset to numbers still. We think a lot of that's in the stock today.
All right, so Brent, if that's the case, you have, in essence, in a way, handicapped it, right? You're trying to play the odds as best you can with the information that you have. So in your mind, at what point does Meta become that screaming buy if things are already built in and the stock has lost a tremendous amount of its market value over the course of the last 12 to 18 months?
I think everything starts to become more baked in early 23. And the reason why is that all these companies still have to clear the deck for the pending recession. Our house view, again, is that we're in for a hard landing, not a soft landing. As we go into next year, our economists have forecasted a bigger pullback later in the year in terms of the overall environment. So if that's the case and it's worse later in the year, this could be stretched out, and a recovery could be 2024. We hope that's not the case. But in that situation, investors will start to look at clearing the deck of numbers for the back half of 23 and early 23, and won't start looking at these names probably until 24 numbers. That would mean it would be until the fall of next year would be a bearish scenario when tech investors would start to come back in. Is it a possibility? We think it is based on the overall environment. But I think ultimately Q1 and Q2 for overall tech are going to be very difficult earnings periods. And the realization of the headwinds that are coming in at us, I think will have to be put in. Now, the multiples have been compressed. We need all the companies now to really fully cleanse the numbers, if you will. And once that happens, tech investors will jump back in the pool. Until that happens, they're not touching it. You can see it today with all of tech down again.
Yeah, I mean, so Steve, I mean, it's a fair point. If you look at all these stocks right now, they are all down and they're moving lower. They're losing momentum. For Meta Platforms in particular, though, this is about leadership. This is about the person at the helm, the guy whose grand vision has led to the 2/3 of its value being lost over the course of the past 12 months. This is about Mark Zuckerberg and what the metaverse holds for Facebook/Meta Platforms. So what's the next story? What does he have to pitch investors on? What does he have to say with the benchmark that was met in order for us to say that we're moving in the right direction?
Yeah. And I'll just point out that some of his own people don't think he's moving in the right direction. Dom, just last Friday, John Carmack, legendary technological wizard, who was the CTO of Oculus when they bought Oculus. If anyone believed in the metaverse vision, it was this guy. He quit, and on his way out the door, criticizing Mark Zuckerberg for the way he's executing the metaverse vision. So even the believers don't necessarily believe in the way he's going about it. But look, when our colleague Andrew Sorkin interviewed Mark at the DealBook conference, all Mark Zuckerberg had to say was, oh, we're focusing on the core business. We're focusing on WhatsApp. We're focusing on Instagram and Reels. Boom, people start liking it, eating it up. So as long as he can refocus the conversation, it seems, back to the core products, the actual money-making products, then it works out for him.
All right, there are some investors out there who've given a lot of companies like Amazon or Meta, in this case, some runway, I guess, to look at some of these things. All right, Steve Kovac, thank you very much for the thoughts there. Brent Thill, always great to get your thoughts. Thank you. We appreciate it, sir. Coming up next on the show, Rashir Sharma from Rockefeller International is raising a red flag about the private markets in a brand new op-ed in the Financial Times. He will join us to explain why he says there will be nowhere to hide in a tight money era. Those are his words. You're watching Closing Bell right here on CNBC. Keep it right here.
162.
Welcome back to Closing Bell. Have private markets become an escape from reality? According to a new op-ed in the Financial Times, yes. With recession risks, sticky inflation, and rising debt among private firms, a bubble may soon burst. But joining us now is the author of that op-ed, Ruchir Sharma from Rockefeller International. Ruchir, thank you as always for joining us here. I guess maybe the first question is, if these private markets are a bubble right now, what then does cause them to burst?
Well, I think if you have a protracted downturn and this era of easy money has truly come to an end, which I believe it has, which is that the biggest beneficiaries, arguably, of this easy money era have been private investing, because a lot of these funds have taken on large amounts of debt. They've juiced up their returns on the back of that debt. And also that's where I think a lot of people today are hiding. I'm just shocked to know that you have some family offices, public funds, which today have a target allocation for private markets possibly higher than those of public markets. And the reason they're doing that is because they are living in the past and thinking that that's where the excess returns are. And also, I think, to avoid volatility, which is that because in private markets you don't have the daily P&L, they want to sort of think that they are taking a much less volatile option. And once though that adjusts properly, I feel that volatility in these assets will go up dramatically. So yes, I do feel that the private markets are a bubble and are in the process of popping, triggered by the end of the easy money era and the persistence of possibly higher rates.
All right, so Ruchir, the liquidity issue, the rising rates are a big part of the story. I wonder how much of it is also investor psychology. For the longest time, folks wanted to get into private markets because there was the velvet rope mentality, right? They weren't allowed in. Everyone saw the returns from decades ago saying, I want a piece of that. Now I can get it. Do we think that there is still that appetite for that kind of private investment, especially when there is still that kind of gate up there for certain investors out there?
Oh yeah, I think that many people are still seeking private investments, but as I write in the piece, that there's no good story which too much money can't spoil. So what began as a pretty sound idea, led by legends such as David Swenson at Yale University, where he sought to invest in private markets as a way of providing people with long-term capital to try and get long-term returns. When he was doing it, he was among the very few people doing it, among the pioneers to do it. Then he got great returns out of that. The problem is in the last few years, you had a rush of capital. So you have so much money chasing the few deals out there because everyone wants to get in, that there's a massive valuation premium on private investing now. And I think that that's where things have gone wrong, that there's far too much money chasing the few deals, and they're all looking at past returns without realizing the fact that it's a different story when you have little money out there and that's selectively chasing deals. So, you know, at the top of the hour, you had a great discussion about, for example, tech companies. And I think that this is what's really going on. The big winners of the easy money era were the US market as a geography, tech funds as a sector, growth investing as a style, and private investments as the vehicle. I think all four of these are going to be upended by the change of this regime towards a more hard money era that has begun. And we've already seen the effects of that in the other markets. And a lot of people are still hiding in the private markets because they have not been forced as yet to mark to market fully. But I think the longer this downturn lasts and the more protracted this rate rise cycle is, you're going to have no choice to do that.
All right, Ruchir Sharma, we didn't even get to talk about the transparency aspect of mark to market and everything else. We'll have to save that part for another discussion. Ruchir Sharma, thank you very much. We'll see you soon. Let's now get a check on the markets right now. The Dow is right now down, floating just above the session lows, just down about 1% or so. The S&P 500, you can see they're also down roughly 1.25%. We are again near the session lows, not exactly at them, but the tech-heavier NASDAQ composite down about 1.75%. Shares of Moderna have lost some of their pandemic gains so far this year, but Michael Yee from Jefferies says COVID is an old story, and there's a new opportunity in story for shareholders. He will join us next to break down his brand new upgrade on mRNA when Closing Bell comes back after this. All right, welcome back to the show. So how's this for an outperformer? Take a look at shares right now of Madrigal Pharmaceuticals. They're surging by roughly 250% in today's session. The company is reporting positive study results for a drug used to treat a certain liver disease, sending their shares to the highest level since 2018. They are currently $223.71. To give you an idea, they closed at $63.80 just yesterday. Now, sticking with biotech, shares of Moderna in the red today and down roughly 25% on the year. But Jefferies sees an opportunity in upgrading that stock to a buy rating, saying that COVID is the old story and that their pipeline for drugs is the new story. So joining us now is the author of that report, analyst Michael Yee of Jefferies. Michael, thank you very much for being here. Let's start with a big question about Moderna. Why is it that COVID is now part of the past, and what is in their future?
Well, great to be here with you. COVID is definitely a bit of an old story. Certainly, we're now into year 3 or 4 of the outbreak. And as you look at what the stock has been doing, it's already been down 75% over the last couple of years after reaching the highs. And people are quite fatigued on Wall Street about talking with the COVID sales. So looking forward, we could tell you about the extremely positive personalized cancer vaccine data last week in partnership with Merck, which is extremely bullish, and a whole other wave of pipeline programs that are coming And so now investors are looking forward to what's around the corner, not talking about the old COVID story, which everyone's pretty tired about talking about.
Now, the big part of this story in your mind is PCV cancer. We're talking about basically a very, it's not extremely rare, but it's a type of blood disorder, right? And the possibility is that MA type.
It's a great question, and it's exactly what we're talking about, is that the cancer vaccine, the personalized cancer vaccine, which was partnered with Merck, showed stunning melanoma data last week, and Merck is quite bullish. The point is that Merck is also starting a lot of new studies, including in lung cancer, and essentially this program could work in many, many tumor types. It could be a $10 billion type of opportunity. So if you take the cancer indications, which obviously show the power of the platform, as well as imminently soon RSV vaccine data coming up imminently. And of course, I know everyone in New York and around the world have been hearing about RSV. There's certainly a lot of stuff coming over the next month and next year that are going to be important and send the stock a lot higher this year.
And before we let you go, mRNA is a big deal. We know that. We know that the technology being used has also been used by Pfizer in concert with BioNTech with regard to their COVID vaccine. What other people out there could be beneficiaries of this kind of cancer advancement?
Well, look, I would just say that the bottom line is Merck, as I'll see it say again, is keenly interested in it, paid them a bunch of money, and was quite bullish on the last earnings call. They've spoken positive about that. Certainly other big pharma companies as well, I'm sure, are taking a close look at this given the recent data. And so going forward, I think the bottom line is a story that has obviously come well off the highs. If you take a look at the stock chart, certainly poised to rebound in 2023 as people look to the new pipeline.
All right. Michael Yee on the upgrade of Jeffrey over at Jefferies. Thank you very much. We appreciate it. Now, it's been a rough year as well for the banks on the whole, with names like Citi, Bank of America falling more than 25%, and some regionals down a whole lot more than that. Up next, RBC Capital's Gerard Cassidy lays out why he's optimistic about the banks in 2023, even in the face of a potential recession.
I'm back. Oh, yeah. Not much going on here.
Welcome back to Closing Bell. The KBW is in the red today, and it's been a rough year for the sector for banks overall, with that ETF having underperformed the broader market. But our next guest says he is cautiously optimistic with the outlook. Joining us now is RBC's Gerard Cassidy. He covers the banks for a living. Gerard, I got to say, the financials have been a call for a lot of folks for a long time, and they just haven't really worked out for a long time. So why are you optimistic about the banks? What's changed in your mind?
Dom, I think what you're going to see is that the bank stocks should do pretty well once the Fed reaches its terminal rate for the Fed funds rate. If you go back to the last 4 tightening cycles, including the 1994-95 cycle, and you'll notice that the banks do quite well once the Fed reaches its terminal rate for Fed funds. And if the markets are accurate, they're calling for a terminal rate sometime in the spring of 2023 between 5 and 5.5%. I'd also point out that the banks were doing really well from June or July 1st through about 3 or 4 weeks ago, and they outperformed the market. But since, to your point, the last 3 or 4 weeks have been really rough for the banks.
So, Gerard, there was a point in time when people used to look at the steepness of the yield curve as a way to kind of gauge whether or not the banks would be, generally speaking, healthy. Meaning if higher rates were higher and low end, shorter duration rates were lower, that meant that the spread that they could make was bigger, and that was a good thing. It's been inverted deeply so for a while now. So what has to happen? Does the yield curve need to uninvert basically before we can get the banks a tailwind?
No, that's a good point, Dom. I would suggest that the banks, when you look at the sensitivity to interest rates, they're far more sensitive to the front end of the curve than the long end of the curve. Now, granted, of course, when they make commercial real estate mortgages, it's off of the 5 or the 10-year, of course.
Gerard, in your mind, right now, despite the underperformance, JP Morgan still trades at a hefty premium on a price to book value basis versus, say, Bank of America or Citi, other of those money center type banks. Are you playing for better times ahead for BAC or Citigroup or regional banks versus JP Morgan?
Yeah, I would say the regional banks may be the better place to be initially, because everything is going to really be focused on what I call the right side of the balance sheet. It's been 15 years, Dom, that anyone's really had to focus on the
Well, it looks like QQQ is just going to, I don't know, hang right around 269. Let me bring my pad. Right around 269. Get something to write in. Where's our news? That's amazing.
Today's stealth mover, it's Waste Management. Investors are trashing the stock after Stifel downgraded the disposal and recycling company to a hold from a prior buy and cut its target price to $171 a share, citing a revised free cash flow outlook. But the stock has been anything but a dumpster fire this year. This year, it's really handily outperforming the major averages, just slipping around 6% or so. And so far in 2022, the S&P is down 20% at that same time. So you can see pretty decent move, relatively speaking. Now, after the break, Dan Suzuki from Richard Bernstein Advisors says the Fed will not be the main driver of markets next year. He tells us what the key catalyst will be and what he's watching instead. That story plus the latest on Tesla and Disney when we take you inside the market zone.
Oh well. My lesson today, I'm still in basic phase. No rush. That the trend is your friend. Yes. Can you see it, Marilyn? I mean, if I put it, especially if I put it on an hour, it depends on the time frame. But if you look at it on an hour, that's just so obvious, that all day long, it just was in a decline. And she finally is really under 268. So, yep. So it's easy to see when you look at it like that. And I think it's easy to see when you look at it on the 5 or the 3 minute, at least for me. Or maybe not. Let's see. Yeah, I mean, you can see those parts of the day. You can see where it consolidates or does a sideways kind of thing, because it's still going up, but you can clearly see those moves. So that's what made me think, okay, my goodness. This isn't math or geometry or anything. You see, Marilyn, I was like, oh my goodness. If I could do it, My kids can do this. If my kids can do this, anybody can get it. And look, I want to look at Ford for today too, because it was really apparent on Ford too. Marilyn, can you see that? I mean, come on. That's just, and that's 5, 10, 15, 20, 25, 30. Many minutes strung together, easy to spot, and you can get in safely and get out safely. If you really understand how to use think through swim. Like sometimes I get paralyzed and in that case I just stop. Like I'm so glad but look forward is pulling up at the end. I want to see what QQQ is doing. Yeah. Oh, she got down to 68.49. Still going down. Well, yep. I'm glad you could see it. What else could we look at? Microsoft. It was a tough day for Microsoft. And look at that.
All right, you know what that means. We are now in the closing bell market zone. We have CNBC senior markets commentator Mike Santoli here to break down these crucial moments of the trading day. Plus, Alex Sherman on the Disney and Avatar story. Also, Dan Suzuki from Richard Bernstein Advisors on the key catalyst for markets in the coming year. Let's start, Mike Santoli, with the way this market has set up. We were looking like we might find some stability post-Fed and that post-Fed sell-off, and we've kind of just been losing steam throughout. Nothing panicky,
I hope that makes
but
it
just
easier.
Downside motion.
Netflix,
What do you make of the price action?
Indeed.
Yeah, it's the continued drip. Dom, we were talking about this 3,800 area on the S&P 500. It also happens to be exactly 1,000 points off the all-time high set January 3rd of this year. So pretty unrelenting decline, although you do have that backstop of a pretty well developed sense that peak inflation is now the mode. Maybe that puts a floor under things above the October lows. At the same time, you have this recession anticipation, which no matter how high the conviction level is or low the conviction level is about a recession on the way in the next several months, you can't disprove it in advance. So that seems to be the capper on this market.
Wow.
The big mega cap growth stocks, though, continuing to lead the downside, also just says, look, their valuations continue to bleed lower from premium levels, and maybe there's some tax loss selling in there, and there's sort of a prolonged give-up phase in that trade.
Marilyn, when you look at it that way, doesn't it look
mega cap stocks right
like
now in the
so
markets?
doable?
We're also going to talk a little bit about what's happening with Disney at the bottom of the
Heck yeah, I can
Dow
do
today
this.
after Avatar's debut. Missed box office estimates.
I don't know
This
that
is the
every
big
day
sequel
will
to
be like this,
2009
but golly,
and that James
Netflix.
Cameron film that took in $134 million in domestic sales versus, by the way, an expected
292
$175 million this past weekend.
286.
China sales were no better.
Good.
It was expected to make $100 million there, but
291,
reported
they
only
did
making
it twice.
$57 million.
That's
a big part of the
amazing.
downside today in the
That's
Dow and the
amazing.
Disney side of things. CNBC.com's Alex Sherman joins us now. So,
That
Alex,
is
this is a big
amazing.
deal from a story standpoint. How important is it to Disney
Who else?
that Avatar 2
Had
succeed?
big losses today.
I mean, it's super
NVIDIA,
important when it comes to their film business. There's no question Avatar is right at the top of their list for high budget intellectual property that Disney owns. I mean, this Avatar 2 cost at least $350 million to make. That is a wildly high number in terms of cost of movie production. And remember, this goes beyond box office. Avatar, after it gets through its theatrical release,
it
then
has
goes
a
to
double
Disney
bottom.
Plus.
I'm
So
going back to look
it
at
has
it.
legs on that side of the business too. I will say, while the
Netflix,
early
let me go
numbers
back and
don't
look.
look very good, the question will be what type of lasting power does Avatar 2 have? If you look back to the first Avatar, it did quite well in weeks 2, 3, 4, 5. So we'll have to see if the same thing happens with Avatar 2.
So, Mike Santoli, we have a specific catalyst, right? Company-specific catalyst for the downside in Disney today. But there are a whole heck of a lot of macro headwinds that have been facing media for quite some time now. How much of this is bigger downdraft
Would this be
for
the
media
double
overall,
bottom?
and how much of this is specific to
and
just
this?
Disney and that story with Avatar and maybe other parts of its portfolio?
Yeah, I mean,
That is
Disney, in
amazing.
some ways, sort of exemplifies in the most
Did you
prominent
guys see
way
that?
all the other forces that are
I'm gonna
driving
take a
media, right? So
screenshot of
is the
that.
streaming economy going to actually reach profitable scale? That's a big one. What's the fate and the pace of decline of the overall cable bundle? They have exposure to linear networks. And then the reliability of these event franchise blockbuster releases that still do go to the movie theaters. I think that's a secondary concern.
can
Although,
look at
there's
that
another little wrinkle with
in
this one, which, of
class.
course, the Avatar
For anybody who
franchise
missed it,
came
we
to
can
Disney
have
by
a good
way of the Fox
example.
acquisition that was made a few years ago. So it was one of those
Yep.
pieces of IP that came
Okay.
along with it. I agree it's too early to
So
say
we got
that this
it.
is some kind of a bust. It's still going to make a lot of money, but it's far from the days, though, when you could look ahead to an annual slate of Disney releases
That was a
and say
moneymaker
you could just
today.
pencil in 500 million to $1 billion for
Did
any
anybody
of the
trade
various,
Netflix?
animated
Even
or Marvel
paper
type
trading? I need to go
releases.
back and check on my paper trade.
So, Alex, I'm going to give you the final word here. It's not lost on me, and I'm sure others out there in our viewership, that this is coming at a time of transition for Disney with the old CEO, now the new CEO again. We're talking Bob Iger. How much is Bob Iger's tenure going forward at Disney going to be complicated by what's happening with just the Avatar release and the movie studios in general going forward?
Well, the unique thing about Avatar is we already know an Avatar 3 and an Avatar 4 are in the can here or being worked on. So this is not your normal film. So that's concerning, right? If this doesn't pan out, you're already pot committed to 2 more movies at least. So there's I think there's real concern among the Disney crew that Avatar holds up. But you have to remember, Disney is a very diversified company. So the fate of Disney does not rise and fall on Avatar. It's theme parks, it's streaming business. These are the things that investors are looking at closely in terms of the future of Disney, trying to get that valuation up. Disney trading
So
at a
Marilyn, can you
52-week
see these
low
patterns?
today. So
They
look, I
really
guess
just
Bob
start to
Iger
jump
walks into a
out
situation where,
after a while.
he
After you
hopes
look
there's
at it
nowhere
for
to
so
go but up.
long.
All right.
They jump out
CNBC.com's
at
media
you.
reporter Alex Sherman, thank you very much. Mike Santoli sticking with us. Now, Tesla has been volatile in today's session as well. Now, that stock did pop at the opening bell after Twitter users voted in Elon Musk's poll yesterday, with a majority advising him to step down as CEO of the social media company. Tesla also getting a downgrade from Oppenheimer to a market performer neutral rating. So the reason, Musk's management at Twitter, Colin Rush, who wrote the note, says banning journalists without consistent standards puts the Tesla brand, Twitter to Tesla, at risk. Here's
Oh my
what
gosh,
he had to say
Tesla's down
earlier
to
today on
145.
Squawk on the Street.
The brand and the backlash from consumers is substantial at
Oh,
this point. And
unbelievable.
certainly the foray into Twitter is not helping that brand. And as we go into a period of time where we see more competition and folks have more choices because we've been supply constrained for so long on the EV side, we think there's some real risk around, what that means for Tesla.
Yeah.
So
it's
Mike
easy
Santoli, the concerns
to
of
spot a
Colin Rush is basically
downtrend, especially
echoing what
like
a
the
lot of
ones
people
we've
have
been
been concerned
having
with for
that
quite
are
some
so
time now.
long and so
Is there a
substantial.
resolution?
That's easy to
if
spot.
in a
So I feel like we're
hypothetical
lucky
world,
to be able to study
Elon
them.
Musk would step down as CEO of Twitter for Tesla
Because you
shareholders?
can't miss that, looking at Tesla,
potentially,
you
Dom. I
can't
think
miss that
part of
that
what Colin
is what
doing
it
is
is.
essentially articulating why Tesla has performed so poorly in the last couple of months since
And
the Twitter deal closed.
deciding
I
when
would
to get
assume
in.
that you
That's
have to
ample
not
time
only
to get
have
in,
somebody else
ample time
running
to
Twitter
get
day to
out.
day, but you have some kind of assurances that that company
Just
won't need a
nice
ton
slow
more capital,
swings like
won't
that.
drive
Oh
further
my
sales
gosh.
by Musk of Tesla shares, and all that kind of negative spiral
Okay,
that the
so
stock
as
has been
long as
caught under.
everybody can
What is
see
interesting
it.
too, though, is Colin Rush did not cut his earnings forecast for Tesla. So it's essentially
Even
like
this
the
at the end of
fundamentals
the
of
day,
Tesla, even if
let's
there
look
is
at it on
tarnishment
the
of brand, he's not saying it's visibly hitting volumes in the coming year. And so it's really still about Tesla shares coming down to meet where the fundamentals always were. They had been
bounce
puffed
off
up
of
by,
this
to some degree, a lot of
50.
excitement about the next thing Musk does
I
and
have to
about the
make
momentum
sure.
of the stock and the fact that it remains up 400% or 500% in the last 3 years, even with this drop.
All right. A volatile trade today. It started off up big, went negative, went positive. Now it's just about flat, maybe
The
down
trend
fractionally
line thing
for Tesla.
came
Now,
down.
Costco shares are lower in trading today. Now, CEO Craig Jelinek painting a mixed picture on the consumer during the holiday
We got
season
to
this
talk
morning
about
on
trend
Squawk on the
lines and
Street,
support
saying
and
that
resistance
there
for
are
real,
signs inflation
And I
is
need to
easing
just
and
bite
prices
the
are coming
bullet
down, but also saying the company is slowing down
and
purchases
learn it and do
on
it.
some big ticket items.
I think we're being very careful in terms of what we buy in jewelry, televisions, and probably furniture, and maybe relatively careful next year of what's going to happen in apparel. I think right now, unemployment is still in a relatively good place, but every time you turn around, particularly in some of the technology jobs, people seem to be getting laid off. And I think people are saying, wait and see, and let's see what happens going into next year.
All right, so it's a retailer, and some folks like to look at it kind of akin to Walmart, like a consumer
Let's
staples-ish type play because of the nature of the products it sells and the regularity with which people go to it, Mike. How much is Costco a barometer for the consumer economy and maybe more so for the broader markets, if at all?
I would say a bit more than Walmart is. There is a kind of a bigger ticket, small business, discretionary type aspect to Costco that's not quite as fully present in Walmart, which is much more grocery. But I also think what he's essentially saying is echoing a lot of the color we're getting from a bunch of retailers. People spent the 2 years coming into this year buying a whole lot of stuff. They don't need as much stuff, even though incomes remain higher, substantially higher on average, and gasoline prices are way down from the spring and summer. That would seem to enable people to continue to spend if they choose to, especially with inflation coming down. But being more careful makes sense. So all that stuff, I don't think it clears up the outlook for next year. But for Costco, it maybe plays to their strengths. They keep margins very thin on purpose to basically pass along value to the customers. They pay
I
their
have nothing to
workers
say
better than
except for
average.
look how
So they've always
low
had these structural reasons why they're not maximizing profit today. They're playing the long game. And if supply chain and all that stuff comes back into line, it's probably a help for Costco, even if the consumer in general remains, less aggressive.
And of course, there's that recurring revenue from the membership fees every single year. Mike Santoli, I pay those every year. Thanks for being with us. We'll let you go to get ready for overtime at the top of this hour coming up. Now, let's get back to the broader market. Stocks are on pace for their fourth straight session in the red.
Would that be
Let's bring in now
considered a
Dan
gap?
Suzuki. He's the Deputy Chief Investment
gap up?
Officer over at Richard
Or
Bernstein
is that not
Advisors.
big
Dan, thank
enough?
you very much for being here with us. Throughout the
And
course
I
of the
don't
hour,
really
we've
know what that
explored a lot of
means,
different
but-
big picture
Okay, but look
and
at it on the
company-specific
daily.
themes. Generally speaking, it is not panic, but it feels as though the market is heavy and it wants to go to the downside. What can get this market stable and back to the upside again?
Yeah, Dom, I think, well, first of all, thanks for having me. I'd say right now there's a tug of war going on between, the slowing growth dynamic
look at it
and
on
the
the
pace of that
hourly.
slowdown. And I think I think the general consensus is that growth is going to slow into next year, but people have gotten really confident about the idea that that's going to be a pretty dramatic first half slowdown. It's very, very possible that slowdown takes a lot longer than what people are positioned for, and that could actually result in a near-term sort of dynamic where things aren't as bad as they seem and things actually surprise the upside. I think there's way too much focus on the Fed. I think more or less the market's pretty priced for that. That's why you're seeing a very different dynamic in terms of the reaction to the Fed function, because I think that's not going to be the surprise going forward.
What will the surprise be, Dan, going forward? Because it begs the question.
Yeah, Don, absolutely. I think the big surprise factor is going to be growth and the trajectory of that growth. I think right now, you have basically people that think we're headed for a soft landing, that this is basically as bad as it gets and things are going to reaccelerate here. You have another camp that things are going to completely collapse in the next 3 months. I think, both ways you could see surprises, or you could see something in the middle, as I was alluding to, something that drags on for a lot longer than what people are positioned for, which could actually hurt both sides of that trade.
If you're looking at the growth side of things, then that means that you have to be scrutinizing what the earnings story is going to look like, especially for this all-important fourth quarter for many of the consumer companies out there, because we are a consumer of a nation in America with a lot of our GDP tied to that consumer picture. So what exactly then do we have to look for in this upcoming earnings season that would either validate that view on slowing growth or surprise you and say, hey, maybe things should get better from here?
Tom, I don't think it's going to be a rosy earnings season by any stretch. I mean, the reality is we're going into an earnings recession. I think that's what the fourth quarter will bring with it. And at the same time, you have companies that are seeing this slowing environment. They're seeing the profits recession, and they're going to have to set guidance for next year. You'll probably see a lot of companies actually pull guidance.
Marilyn, you see this play at the end of the day?
Too uncertain, and you'll have a lot of companies that actually have to set the bar a lot lower than where the analysts are. So I think from that perspective, that's something you got to be mindful of. And the reaction from markets may actually not be that bad to that. Depending on, you alluded to the idea that markets are already pretty pessimistic. But I think that, over the course of the next couple of quarters, that's going to be a continual drag, is that lowering of earnings expectations. And that's going to be a tough headwind for markets.
What's going to be, Dan, we've got just about a minute left here, maybe a little less, the key parts of the market that we have to talk about. We have to scrutinize. Is it going to be tech and comm services? Is it still energy and oil? Is it that resurgent healthcare trade that's kind of played out over the course of the last several months here?
Dom, I mean, obviously, I think you have to scrutinize every part of that trade that you just mentioned. I think tech, innovation, and growth, you want to continue to avoid that area of the market. I think we're in a bubble that continues to deflate. There's more air that has to deflate. And the fact that we've had the bear market tells you that that's not going to be the leadership of the next cycle. So we should be thinking about what that leadership is. But for the very here and now, given that we're going to a profits recession, given that liquidity is continuing to tighten, I think the number one thing we should be focused on is defense, high quality defense, and then looking in the next couple of years into where those value and long-term opportunity trades are.
All right. Dan Suzuki over at Richard Bernstein Advisors, thank you very much. Great to get your thoughts. We'll see you soon. All right, now, as we take a look at what's happening with the markets right now, we do have a situation where the Dow is down 150 points. Now, that's important
everybody.
Because that is well off the lows of the session. So we saw that
I got to check in with everybody.
As
soon as I figure out how
to now in just the last half hour or so,
give you guys the recording, I'll get that to you. But be looking in your emails for the invite for the Zoom meeting on Wednesday. See you guys. Thanks, everybody.
Which is a little bit
Bye-bye.
heavier on that side of things. We have seen a little bit of performance in terms of overall picture, with technology leading some of those declines.